up right now. IDFC first. I mean, they just got done with the problems in Haryana. Now Chandigarh has seen another fraud, 116 crores in FD. Statement from IDFC first coming in just before the opening tick, saying that they have received no other complaints since the last one, and this will be sorted out as well. So a bit of a tick up in the green. Minda Corp has an interesting joint venture for electric vehicles that they have tied up with for powertrains that will help electric vehicles. 3% up on that stock. And Idea Forge we talked about, they're going to be doing drone testing for NATO, about 0.5% down. Defense, I suppose, has sort of lost steam today as the world seems to hope for a calmer future.
That is the line, I think, that best describes the mood as things stand right now. I would like to pull up the automotive index and its components, if you can, because a few of the top gainers in the broader markets actually are from this pack. Pull up the components of the automotive index and you will see what I'm talking about. Ashok Leyland leading from the front, that commercial vehicle play, pure play commercial vehicle play, nearly 4% higher at this point. And then a few automotive ancillary companies which had taken a bit of a battering. Samvardhana, Motherson, it plays in a lot of pockets in the automotive space, will benefit from a normalization. The tire makers had also gotten battered because remember that a rise in crude oil prices has a bearing on their input costs on account of crude derivatives. MRF is up about 2.4% or thereabouts. Hero MotoCorp, Eicher Motors, M&M, TVS, the whole host of that automotive list doing well. But there's also Force Motors. Pull up Force Motors, for example, and it's up about 4%. Interestingly, we saw Tejas Networks cool off, and we've been talking about the fact that this stock has been on the up and up. Not necessarily any fundamentals driving this, so bear in mind that there have been cautionary signals that Kush on this table itself has provided for you with regard to Tejas Networks. It has moved up from close to 300 levels very, very quickly, up above 500 and now back up after having declined quite substantially. A couple of power-related names are doing well in trade today. Pull up Hitachi Energy. It's up and about 4% higher or thereabouts. You have GE Vernova T&D, now known as GVT&D, which is also up and about in trade today. So doing well, both of those stocks. So from the entire list that I've spoken about, Kush, what stands out to you? What can you potentially trade?
So the last ones that you mentioned, very interesting, setup on these Hitachi or GVT&D for that matter. Very interesting setup. They just went into a consolidation mode for the last week when the markets were taking that, big knock. But as long as, as soon as the first, inkling of any kind of, a short covering trade also came about, these are back to their winning ways. So this is something that I would have on my radar from, a buy on dips kind of setup. 24,300, 24,500, good levels for Hitachi Energy to start accumulation. For GVT&D, that level comes to 3750, 3800. Not suggesting a very big rara buy right now because of how the entire setup is for the market, not for these stocks individually, but definitely pockets of strength in a market like this. And just to point out that stock that you mentioned, Alex, Tejas Networks, indeed we saw a big spurt on that, but if you see the long term, the medium term view, it has corrected massively. So this is more of a hold for anyone who's been holding on to this for a while, rather than a very convincing buy. So maybe some accumulation here and there, but not a very sustainable move. Maybe once it crosses 550, 540, the 200-day moving average, do we see some kind of a reversal?
Guys, the first person that we spoke to today, David Roche, had a very interesting comment that he was making. Neeraj, you'll remember this because you asked him the question about fishing in troubled waters. And he said that if you catch the fish, run to shore and cook it as quickly as you can. So should you be taking profits off the table is the question. Kunal, in this kind of market, if you see a spurt today, do you very quickly book those profits and keep trailing stop losses, particularly because of the fact that uncertainty is not necessarily out of the window?
I think, yeah, definitely, Alex. If you look at this Nifty, my sense is that this is just a pullback, what we are seeing on the Nifty index. And this could extend towards, say, 24,400, 500 zone. Again, from those levels, I'm expecting correction. And probably in the next couple of trading sessions, you will get more clear idea how the rejection is playing out from that 24,400, 500 zone. Once we get that confirmation, we get a confirmation as well, the low what we had made of 23,697, 698 on the downside. That will be broken. And then we are heading towards 23,500, 400 on the downside. So still the view remains bearish for the markets. Pullback utilized as an opportunity to either book profits or exit. We still have one more leg which is left on the downside, and that could extend towards 23,500 or even maybe 23,200 on the downside.
Why do you think there's one more leg left on the downside, Kunal?
Yeah, so firstly on the technicals, the top what we had made on Nifty, as per the Elliott wave what we follow, we have completed the ABC structure. So it's more of on a technical terms. I think most of the audience won't understand it, but still from the Elliott wave perspective, we have completed the third leg. That is, the A was completed from the top, then we had a B, that was that the budget, the tariff news. We had a massive gap up, but we were not able to surpass the all-time high. We just missed that by 30 points. So that again confirmed our B structure, and now the C has played out. Now probably what we will see on the Elliott wave, that the next leg, that is the ABC, will be played out on the upside, which is generally a pullback, and then you will have the last leg coming on the downside. So this I'm seeing it as a pullback, since all the technical indicators are also in the oversold zone. So you will have a pullback on the upside. Utilize that as an exit opportunity. Probably there is one more leg which is left on the downside for Nifty.
I'm going to get actually Kush's view on this and on the process that Kunal is talking about, the Elliott wave that he's been tracking. Do you see that technical downside left to go?
So let me put it this way. My approach to the markets at these levels would be different from what Kunal is suggesting. But can there be another leg of down move? In all likelihood, with the kind of news flow, if another, Truth Social post or tweet or, an X post comes about, there could be that down move. Very likely. But I will go with whatever I've said, this morning in the recent past. I would actually be looking for buying opportunities, because I see this dip, that comes about, and wherever this bottom is made, as the medium to a long-term bottom for the markets. 24,300, that is my long-term support zone for the market. Yes, if that is broken, we could slip below that like we did yesterday, but we'd be quick to regain that. Also look at VIX. Typically, when VIX moves above 23, 25, even to 30 zones, the reversal on the VIX itself is very sharp, and hence the negative correlation with the markets, where once you go to those levels, the reversal on the markets is also equally sharp. So I'm not saying that, we'll go to all-time highs very soon on the Nifty, but the reversal from where this fall started could be sharp, and we could perhaps be consolidating to sideways. So I will actually take this dip as a buying opportunity for a medium to a long-term setup. I don't know where the market bottom will be made, but like I said, from a medium-term perspective, this looks like where you should be going out and buying from medium to a long-term perspective.
The only thing is that this is so difficult to predict, because it's not a trending market based on fundamentals alone. There is news flow of another magnitude out there.
On technicals alone, you mean?
Or even on fundamentals alone. You're right. On technicals alone. But even on fundamentals, Tamannav, simply because it is not an event about economic growth or otherwise per se. That's a second order derivative. The actual cause is a conflict and statements being made by both sides, which are driving sentiment so strongly. I mean, imagine crude, after rallying 35%, added 28% in a session, and then has fallen back to 90 in a matter of 48 hours.
Yeah.
It's just impossible to comprehend this in any financial model or a technical chart. So what Kush and Etesa is saying today, they could fall flat on their face tomorrow, so I won't blame them. I'm glad we are not in their shoes right now, because it's damn difficult.
So just if you remember, yesterday I told, luckily, Touchwood, that something in the world has to happen for crude to fall. And that has happened, right? Something has happened. Of course, I am not saying that we are at the bottom of the crude. There can be another shock. And I already am seeing Brent is up 5%. 93, I think. Yeah. So it might go up, but you cannot afford to have a very high energy prices staying there for a long time. It can stay there for 15, 20 days, 1 month.
But no, yeah, exactly. But normal parlance, completely agree. I'm just saying right now it's just so difficult to predict.
Absolutely. That's why I'm saying
this way for a long time.
That's why it's not a structural market. You have to buy on dips and sell also.
By the way, I read a note yesterday. So I just ending this conversation here, but I read a note yesterday. It was from one research house, global research house, which is saying that based on the fact that oil fields are now at the end of their life cycle, and removing or extracting crude is going to be so difficult. Their prediction, I don't know how true or false, their prediction is that by 2030, oil prices will be $500 per barrel.
Oh.
$500 per
Hopefully
barrel.
by that time we figured some other way.
Exactly.
Maybe Venezuelan oil will come into the market in a big way.
By 2030.
Yeah.
Of course, you wanted to make a point.
Yeah, one quick point on this one. See, Neeraj, you rightly pointed out that sometimes, fundamentals and technicals in the wake of news flow just go out of the window. Completely agree. And that is why the third element becomes very important, which is the trading strategy itself, something that we alluded to yesterday, which is, how you approach trading. You go out and speak to any investor or trader worth their salt right now and ask them कि ये level पे बेचोगे क्या? Correct? Everyone's going to say the same thing. 2 साल से पकड़ के रखा है, profit नहीं देखा, अब थोड़ा और loss देख लेंगे, but यहाँ नहीं बेचेंगे, right? So this is where your trading style, your appetite, your risk, profile, all of those come into picture. I wouldn't suggest selling at these levels. Even at higher levels, I wouldn't suggest selling. Yeah.
Okay, I think it's only fair we have a response from Kunal.
Absolutely.
Because on his comment, we had a lot of commentary coming in. Kunal, anything you want to say before we round off this conversation?
I think, as I said, Tamanna, overall the structure again for the markets, what we see at the Elliott wave, the structure still remains on the bearish side. I think in the last 1 to 2 years, we have already been seeing that buy on dips. But now again, this has become a sell on rise market in the last 1 to 2 months or so. So again, for me, 24,600 is what I'll be eyeing for. That has been the strong hurdle zone. Till the time we don't surpass that decisively, close above it, I don't see any trend reversal coming. Again, utilize pullback as an opportunity for either booking profits or exit. About 24,600, if we have a decisive close, then probably you can see some bulls coming back into the picture. So my sense still remains on the negative side. No clarity. We might consolidate in this broad range of 23,800 to 24,600 for next 5 to 10 trading sessions. But overall, if we have a rejection, that is what my point is. If we have a rejection around 24,400, 500 decisively, that will confirm the next leg is likely to continue on the downside towards 23,500. And the entire rally also, even when you look at the Nifty chart, which started the 61.8% Fibonacci retracement comes at 23,500. And we have not touched that. So probably will be heading there. And then probably you might see from the lower levels the reversal coming in. So right now the view remains negative.
So this is the beauty of it. We bring you all kinds of views. Finally, you, the viewer, the investor, has to make your own decisions. I want to thank you, Kunal. I want to thank you, Kosh, and of course, Parag Bhai, for joining in on this leg of the conversation on India Market Open. You decide what you want to do as the viewer. Now, in view of escalating tensions in the Middle East, the GCC hiring trend is in focus as well. We're going to be speaking with team leads on this. And remember, we put out a report yesterday on Iron Dome stocks. Team leads was one of them as a company that could relatively be well protected. Before we have that conversation, let me go across to Puneet for more.
Well, thank you for that. Definitely a couple of key points that you highlighted. One was that Team Lee is focusing on our Iron Dome portfolio. That is relatively 12 analysts covering the stock. All 12 have a buy call with a return potential of almost 85 to 90% on Team Lee's as of now. So the last few months, last 6 months, stocks down 40%, and that's one of the key reasons why the return potential seems so lucrative at this point of time. And rightly said that GCC as a key trend has been emerging over the last 12 to 24 months. Now at a time where there's been a lot of volatility, especially in and around Europe, does the trend of a lot...
Much for Ms. Dati, but thank you so much for taking the time out and being with us today.
Thank you. Yes.
Did I get the second name correct? Is it Ms. Dati?
Yeah, it's Dati.
Dati. Okay, fine.
Yes.
Thank you so much. Please tell us if you believe that amidst all of this wake of developments and geopolitical developments, etc., that's happening, is your business looking kind of Teflon coated in that there has not been too much of a disruption in the inquiries, hiring activities, so on and so forth, across various sectors that you are catering to?
Well, so let me position it this way. So whenever there is uncertainty or the trends are not very clear in terms of whether the market is going to positive or not so much, typically companies tend to keep their permanent hiring on hold, and whatever requirements that they have on their resources side, they tend to use more of contract staff. And those are the trends which we have already started seeing, especially GCCs. In fact, in the earlier comments, it's also mentioned. So over the last 6 months, the maximum amount of hiring that we have done for GCCs are coming from the European GCCs. And in fact, given the current situation, the number of inbounds and the inquiries also have gone up from the European GCCs. That's also because of the recent India-EU deal that got closed, and there is a much more interest in expanding or setting up their shops in India. And many of these GCCs, both US as well as Europe, are not restricting only to the IT talent, not just the niche IT talent. They're also looking for other specialized skills like financial analyst, actuaries, legal, HR, finance analyst. So they're looking for many of these non-IT specialized skills as well, which is a good trend. And also in terms of overall general hiring, I would say right now we are not seeing any kind of slowness in any particular segment as such. But at the same time, BFSI, what it used to be like 2 years back, right now the open positions are not at par with the same line. So compared to last year, it's slightly better in terms of the number of open positions and the hiring trend in BFSI. But 2 years back, compared to 2 years back where we were, it's still, I would say we are still at 70% of that kind of demand.
Got it. Can I just ask you to give us this information? I heard you say that European GCCs are actually making their presence felt in India. So would it be safe to say that last 3 or 6 months or the last 12 months, the larger portion of the GCC setup in India has been from European entities?
No, I didn't say that from overall perspective. The comment I made is specifically from TeamLease perspective. So overall, the hirings that are done by TeamLease in the last 6 months, the majority is with Europe-based GCC segments.
Ramani, hi, Alex here. I'm just trying to understand the underlying. And the nature of things is that what is nearest in your rearview mirror takes precedence. And once the dust settles on this conflict, there will once again be a focus on the artificial intelligence story, the implications that it has for hiring in the software space. I'm just wondering whether you were already seeing a change in the way hiring is done at the base level. Are the numbers already indicating that? Because we're hearing murmurs across the world, not necessarily here in India, of people being laid off, of there being a change in roles, and individual companies, smaller, have already stated that they've done this already.
No, AI definitely is going to disrupt certain jobs and certain roles. So there is no question about that. We have already started seeing many of the IT coding, development, testing, these kind of roles are already a disruption. Like if I take our own numbers, so we lost almost 60 to 70% of the headcount that we used to have under these coding and testing profiles are already laid off over the last 2 years. But since we are a temp staffing company, wherever there is demand, we have quickly shifted the focus there and now started focusing on those AI, data analysts, data annotations, those kind of profiles. But definitely there are certain roles that are getting disrupted. But for the non-IT roles, like the typical sales and marketing and manufacturing, so these kind of roles, at this stage, we are not seeing AI as a big disruptor. In fact, we believe that it can help increase the productivity of the entry-level job seekers, because one of the biggest challenge that India faces is the productivity of freshers, especially when we talk about manufacturing and sales and these kind of profiles. In fact, AI tools may help these freshers to be more productive, take less amount of time for their trainings and inductions, make them immediately job ready after onboarding. So this is what we have been seeing at this stage, where AI is being used as an enabler for employee productivity in a large segment of jobs, especially at fresher level. But definitely there are certain segments where we are already started seeing the disruption, the number of open positions, or even the attrition backfilling has significantly come down, especially in white collar jobs.
Ms. Dati, just want to understand from the IT space, I know GCC is what everyone wants to talk about right now, but from the bread and butter, IT space and IT hiring perspective, what is changing? Because net hiring numbers year on year are shrinking for all the majors, isn't it?
That's very true. In fact, for IT services, the large number of jobs are typically into these coding and testing, debugging, these kind of profiles. And that's where AI has kind of disrupted. So there is a consistent drop in net hiring. And in fact, on these specific roles, right now, we are not seeing any kind of incremental demand coming from the IT services segment. So they are also right now revisiting their entire resource planning. And in fact, they're also under a lot of pressure to implement these AI tools and further optimize their existing employee productivity than adding incremental new headcount.
From your perspective, from the balance sheet perspective, from revenue perspective, how much of a difference is it making if the quantum or the volume of headcount comes down for IT companies? Is that being substituted or filled up with GCC demand?
Yeah. No, in fact, over the last 2 years, we have lost almost 80% of the headcount that we used to have with the IT services. Because the first one where they started cutting jobs when they started seeing the headwinds is contract staff. So our IT services exposure is now down to very minimal level. And over the last 1.5 years, we have significantly increased our exposure to GCCs and diversified there also into IT and non-IT as well. So I'm not seeing any incremental impact for us on the IT services front. In case if there is any recovery, that could be positive to us.
Okay. Thank you so much, Ms. Ramani Dati, their CFO of TeamLease, talking about the impact of IT services and AI on jobs. 80% of jobs that they used to fill are gone. I think that really stands out for me, though there are now opportunities in GCC which will be seen. But let's focus also on real estate stocks. They didn't focus for a variety of reasons, but the Middle East unrest has also rattled the sector in the Gulf, and also raise the question on whether Indians in these countries, in Gulf countries, will come in and look at homes in India. Will they reduce those buys if they were already doing it? What is going to be the impact? Before we speak with Purvankara on this and more, let me go across to Mahima for more details.
Right, Tamana. So as you rightly mentioned, right, real estate brokers are now expecting a slowdown when it comes to real estate in Dubai, and unrest in Dubai is likely to boost residential sales in India, and that is something that analysts are expecting. About Dubai real estate, well, it gives a yield of around 5 to 7%, and that is why that is what makes it really attractive. It is compounded at a CAGR of 50% through 2020 to 2025. Now, Indians have powered sales in Dubai because they account for 10% sales in 2025, which is up from 6% in 2024. The unrest is likely to set back this kind of trend, and maybe those flows would come to India as a whole. Now, in terms of where NRIs can shift their investment in India, overall, NRIs could also benefit from the depreciating INR as well, and NRO balances have compounded at a CAGR of 13% since FY21. Now, major luxury markets in India that they could look at includes Gurugram and MMR regions with rental yield of around 3.5 to 4%. Bengaluru, Hyderabad have also displayed steady to robust pricing growth as well. Elara expects that high value projects will be preferred by NRIs in micro markets, and these will be launched in the next 12 to 18 months with a total GDV of around 70,500 crores is what they are expecting. Plus, for Purvankara especially, yesterday they announced a development project in Bengaluru with a GDV of over 1,300 odd crores. So all of this combined together is what puts this company into focus.
Okay, we're speaking with the CEO of South of Purvankara. Malana Sasalu is joining us. Sir, thank you so much for joining in, Mr. Sasalu. Let me just start by understanding the core question which is there right now. Is there any fallout you're seeing of what's happening in the Middle East right now?
Thank you, Tamana. Thank you for having me here. Global things that happen that are out of our control, and what we can do is how we respond to what happens. And as an Indian developer, I'm really looking at it positively in terms of the NRIs generally who used to invest in India invested big in Dubai and Middle East. So Now there is an opportunity, end of the day, people need a home, and home is here in India. And I believe that it's going to be quite positive for us. We generally have around 12% of our total sales through for NRIs accounts for 12% of our sales. And we have a large development that's coming up in Cochin. So I'm a bit excited about this, even though the situation is unfortunate, but it's positive for Indian real estate, I guess.
This is the first time I've heard anyone in the last week or so saying, I'm a bit excited about what's happening. You did qualify it, saying that even though the situation is
as I said, that it is unfortunate and it is something that not in our control. Yes, any human loss and anything that's called a war. And
no, of course. But I'm trying to understand, have inquiries gone up in the last week or so? On what basis are you seeing this as an opportunity?
Not yet. It's our prediction at this point of time, because people will be still under shock and dismay at what's happening at this point of time. So I expect them to recover and really understand that home is here.
Home is here. I'm sorry, I'm going to ask you a follow-up on this, because this has been the big debate and question. People who have lives they are very happy with in these countries, in Gulf countries, will they have a knee-jerk reaction and want to move back, or will they want to have a safe haven home in India? And will that actually be seen? Or if in a few days things settle down, it goes back to normal? That's a bet you're taking. And your thinking is that they will want to have now at least a home in India if they're not moving back.
A large number of people are living there, right? And people will be in different, at levels of in their entire life, their life cycle. So people who have already bought homes, people are well settled, and people have made either Dubai or any place in UAE as their life. That's where they want to live. Maybe they would not consider. People who are young and people who are still in their 30s and still thinking about where to live. And I think those are the people who are going to get attracted to this opportunity.
Mr. Sasalu, just a quick question on the impact on raw materials, because we've seen very sharp spikes and, of course, volatility in the underlyings as well. So crude, just as an example, having hit that 119 odd mark, and then now as we're speaking, it's back to about 94, 95. I'm talking about Brent here. So that's an impact that you will see in cement, in various raw materials that you're using. So will you allow for a little bit of time to go by to settle things before you bite the bullet and acquire at higher prices? Is there likely to be a slight slowdown in construction?
I don't think so. Basically, what it is that you're right. The crude went up to $110, and maybe today it's come down to $94 or $91 is what I saw. So these are all things that these shocks will definitely have some impact on the raw materials, because a lot of things that we use depends on petroleum products, and also the transportation and everything that we use has a lot of petroleum related prices. So it will go up a little bit, but I don't think that it has got so much of impact that we have to really think to reduce our operations. And also, it is not as a real estate company that we are not blessed with that kind of an opportunity where we can just make changes, twists and turns as quickly as the things change in the world. We have to be going with a long-term vision of what's happening in this country and where we are going. As you can see that everywhere else, there is so much of disturbance, and India continues to do well. And just now I heard Ms. Dati talking about it but we continue to chug along because of our ability to consume, and as a potential as a country to consume is so large at this point of time, and over the next 20 years in any which way that we will be doing. So these are all on the way. You will find some little bit of obstructions, and we should keep moving.
I'm glad you listened to that conversation. Just another question, and since you're talking about long-term implications, perhaps you're not going to be able to see that immediately. But the sense is, and the worry really is, that the south-based markets in the metropolitan cities will get impacted if there is an impact in the way, or if there is a change in the way that IT services are provided, in that you will move from a bench strength model to a delivery-based model. You won't have a requirement for as many people, and so the implication is that those people will no longer look to buy the properties that they have bought in such large numbers over the course of the last decade and a half. Is that something that worries you, Mr. Sasalu?
At this point of it is not. It is of course, there is that a huge talk about what AI can do to the world, and the readjustment of the jobs is what I call. As I was listening to Mr. Nandan Nilekani, and what he was saying is that just because the steam engines are not there, it does not mean that we are not using coal anymore. It's what an analogy. So it's what happens is that even though that this whole AI has to be implemented. If somebody has a big bank has to implement the AI, even to set that data up for usage of AI generates multiple levels of jobs that needs to happen. So yes, in the short term there may be a little of disturbance, and I see this as a great opportunity. And in my experience, that every time there's a technological change, we've only seen progress. Only more jobs are generated. So we've been seeing from printers to computers to internet, and whenever we had this kind of thing, that people in the short term will have the fear of losing jobs. But in my opinion, it's just a readjustment. So we are going strong as real estate developers.
Speaking of artificial intelligence, data centers, is that something that you're pivoting towards, or managed offices, specifically data centers? What's the plan?
We're not really there yet, and of course we are exploring the possibilities. We are big in commercial development with around 2.5 million square feet of portfolio in Bangalore. But as data center business itself, data center business has commercial real estate, and it has got energy, power, and it also has got technology. So it's quite a number of things come together. So we're not there yet, and in the future that we will be looking at it, because that's the way forward, with the country saying that the data sovereignty, the rule that we have made, that data that's made here must be used here, and I believe that it's a great opportunity we should look at.
I'm just wondering, in terms of demand and where it's heading, you just answered the question that you're not worried about IT, etc. But overall, AI is going to cause some loss to jobs. We're already seeing some impact of that. Are you seeing real estate prices maybe rationalize a bit going from here in your region?
I don't call it price rationalization, and yeah, maybe it's a price rationalization. Will always be better than what the inflation, and maybe the inflation is setting at around 6.2% or whatever. So we've always done better than the inflation, right? It's if you look at the job losses, what we are talking about, the last year alone, that for the year that is going by, we have leased the highest amount of office space. Who's going to lease the office space if people are not coming to office? It's definitely the human beings are getting into the office, and Google took some 3 or 3.4 megawatts and 1.8 million square feet, and I understand that there's another 1.8 million square feet. Requests for the proposals are going on, which means that Google is at the center of artificial intelligence, and if they are saying that we don't need more people, and why would they take more space? And so I'm quite bullish about it.
No, clearly you are. So, I mean, you're in the business, so you have to be bullish. But I'm just asking you about the trends that you're seeing. And in terms of pricing, are you seeing any difference in residential or commercial?
I didn't see any change. In fact, that we are where we are, and of course that whatever we saw over the 2022 to 2023, 24, that the price went up quite significantly, and I think we will not see that kind of price rise, but it will hold up and maybe doing a little better than the inflation. And as I said, that I'm bullish, and hopefully I explained the reasons for my being bullish.
Fair enough. You have every right to be bullish, and I think it would be frightening if a top CXO is, very bearish about their business. But I think it's uncertain times for large sectors, and maybe real estate as well. And you've seen that up and down in how the stocks have been behaving. That's the Purvankara view coming in. I just want to do a quick Brent check and a quick market check. And Brent is something that we need to track very, very closely at this point because that's really where the story lies, right? Back at 94.51. So you were as low as 88. You're now at 94.51. As far as the markets are concerned, you have you're staying put, about 0.5% up on the Nifty off its highs, but above the 24,100 mark. IT is the only one that's not really performing today. Banks are making some sort of a comeback. I wouldn't say it's an absolute sell rapidly on rise kind of a scene. So that has, that could give you some reprieve in this market. It's not as if the moment there's an uptick, all investors are coming in and selling in and taking every opportunity to exit. Consumer durables doing well, but that's largely Dixon that's pulling up that entire space, and Dixon is well off its highs of the day, still about $400 up. We'll take a very short break, but we're coming back with all our large conversations. We're making an attempt to get the best voices on geopolitics over the next few days because everyone wants to know what's going to happen next. And after the break, we're speaking with James M. Dorsey of S. Rajaratnam School of International Studies to understand and make sense of all the statements around the Iran war.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
where stories are shared, ideas are exchanged and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
Welcome back. All right, we are trying to get you the most astute geopolitical voices on the show, and at 10 a.m. every day, we'll speak with someone who can help us understand what's going on in the world, simply put. James M. Dorsey joining in today of the S. Rajaratnam School of International Studies. Mr. Dorsey, thank you so much for speaking with us. A lot of developments in the last 24 hours. I will start with them, and a lot of them emanating from what the US president is saying, claiming that the war will end sooner than he expected. They're pretty much done, and they will ensure that the Strait of Hormuz stays open. Is it likely that he can push through on these claims and we will see a quicker end to the war?
Trump will probably unilaterally declare victory. The problem with that victory statement is multifold. One, it takes three to tango in this case. With other words, the United States, Israel, and Iran. Israel may very well want to push ahead with the war, irrespective of what the United States does, even though it will be lobbying for the United States to stay in the war. Iran, for Iran's survival of the regime, survival of the Islamic Republic is victory. And that will make Trump's unilateral declaration ring hollow.
Mr. Dorsey, I just want to understand from your lens the moving parts geopolitically beyond the entities that are involved in the war. And you've spoken about it in terms of three to tango, but you have the countries in West Asia, you have various trading partners, you have Europe, and you have the political scenario in the US itself ahead of the midterm elections. All of these could have a bearing. So how do you see that playing out?
Well, one reason for Trump to unilaterally declare victory is the fact that this is having a backlash in the United States. A majority of Americans does not want to see this war. In addition, they're feeling the effects of the war at the gas pump. And that's not a very good situation for a president who is already running low in his performance ratings in an election year with the midterm elections coming up. As far as the Gulf states, but also the larger international community, they want to see this war end now. They never wanted to see this war begin. And so the Iranian strategy has been primarily directed at increasing the pressure on members of the international community, particularly the Gulf states, but also Europe, in the hope that that would generate pressure on Trump to end this war.
Mr. Dorsey, in some sense, there was some people argue it's an uncalled for attack by Iran on the GCC countries. Yes, they wanted to make a point because these countries have US bases or installations or what have you, but a lot of them were not direct participants in the war. What's the aftermath of something like this? Because at one hand, people are saying GCC countries would disassociate or associate themselves less with the US and the US investments as well, because US left them high and dry on defense. But two, parallelly, Iran was the one who attacked them in the first place.
I think, first of all, one has to understand that Iran faced a choice at the beginning of this war. And that choice was to be defensive or to be offensive. Keep in mind that there are no US or Israeli targets within the borders of Iran. There are no targets close to Iran as such that are purely US. So Iran had if it was going to retaliate rather than try and would have been unsuccessful in trying to fend off the attacks because its military infrastructure, its air defenses aren't such that they could have done so. Its only option was to attack targets in the Gulf states, potentially also in Turkey and in Azerbaijan. The problem with that is that it didn't restrict those attacks to US military facilities. They included hotels, residential towers, airports, energy facilities, oil production facilities, water desalination plants, and that's really become a problem. I think, though, at the end of the day, what you will have is the United States, the Gulf states moving closer to the United States because they have no defense alternative. There is no one that can replace the United States, nor are they capable in and of themselves to defend themselves against Iran. But at the same time, there is anger in the Gulf states. Anger not only against Iran for attacking them and drawing them into this war, but against the United States for dragging them into a war they did not choose for. Keep in mind that the Gulf states had lobbied frenziedly in the run-up to this war to prevent this war from erupting.
Yeah, that's a fair point. Mr. Dorsey, the other aspect is of crude. One of the one line of thought is that when facilities around LPG, crude, etc., are all shut off, they take a fair degree of time restarting. And while the world was in surplus oil supply scenario until this conflict started, that may not be the case going ahead. You may or may not be a crude expert. Forgive me for not knowing that. But if you have some thoughts on this, would love to know.
Sure. I think that Iran trying to hit the energy facilities in the Gulf was key to its strategy. At the bottom line, Iran's strategy is to increase the pain of the international community and the Gulf states when it comes to access to oil and gas, or the ability to export oil and gas, and that in turn would also have effects on the American public, and combined would increase the pressure on the United States. So this was a price that Iran was willing to extract no matter what.
Mr. Dorsey, just trying to understand what's happening on the Iranian side. And you have written extensively about the new supreme leader, Mojtaba Khamenei. That's the Ayatollah's son. He has lost his father, his mother, his wife, his daughter in the American and Israeli strikes. Is he going to be in any position to find a way to halt this war? What's happening on that end? Because we're hearing a lot of what the Americans are saying. What about the other side?
Your guess is as good as mine. Having said that, he has a government experience, or let me put it differently. His appointment was an act of defiance. It was a demonstration, as far as the Iranians are concerned, of resilience, of regime cohesion, of resistance. He is a man who's never held public office, but he has, for all practical matters, in many ways run his father's office when he was supreme leader. He was his gatekeeper. He was his political broker. He's a man who has very close ties within the clerical class of Iran, within the military and security establishment, including the Islamic Revolutionary Guard Corps, or IRGC. And he has, as such, he brings a lot of credibility to the office. His initial statements are going to be hardline. There's no question about it. And he's going to emphasize those issues of defiance, of resistance, of resilience. But if anybody, and it's a pure guess, if anybody is willing not to submit to Donald Trump's demands, but to seek some form of negotiated settlement, he is someone who will be able to carry that off, because he has the legitimacy also of his lineage. If you look at the pictures, he wears a black turban. That is a sign of being a descendant of the Prophet Muhammad. And of course, he's his father's son.
Mr. Dorsey, I'm wondering about the populace and some of the images that came through just hours back about the mass gathering that took place for the announcement of Mr. Mojtaba taking charge as the supreme leader. Seems to indicate that there is popular support as well. But having said that, in the run-up to this conflict as well, there was suggestions from outside in that there was an inside push for a change in the regime. How much will that local populace play a role in what ultimately comes to pass at the end of this conflict?
One of Mojtaba's drawbacks is that he's not a figure who's been in the public eye continuously. He's not a man who's been out there meeting people in society. He's not a man who's held speeches He's not a man who's given a large number of media interviews. So for many within Iran, he's an unknown figure. Now, having said that, there is no question that a majority of Iranians would like to see a change. Some of them, whatever percentage that may be, want to see regime change. Some of them want to see social and economic reform, and particularly improvement of their living conditions, which have deteriorated significantly as a result, on the one hand, of mismanagement of the economy, and on the other, because of US sanctions. But there is a significant portion, whatever that may be, many estimate that at 20 to 30 million people, 20 to 30% of the population, which is committed to this regime and to the Islamic Republic. 20 to 30% of the population is anywhere between 18 and 27 million people. That's a substantial block.
So, Mr. Dorsey, of course, it would be foolhardy to try and predict what's going to happen. But if the stated goals as of this moment of the US is a regime change, that Iranians come in and choose another leader, and of course, Mojtaba Khamenei doesn't seem to be acceptable, is that likely to happen at all for this war to cede? Or will new guardrails have to be drawn on what's acceptable to both sides?
Well, first of all, I'm not sure the United States would like to see regime change, but I don't think that is a sine qua non for the United States to end this war. It is a sine qua non for Israel. It wants regime change, and it's determined to achieve that. Trump needs to be able to declare a victory, and the longer this war lasts, the less likely he is going to be able to do so. And so I think what you will see is, as we talked about earlier, a unilateral declaration by Trump, which will be challenged at least by the Islamic Republic itself and potentially by Israel.
Off-ramps might be difficult in such a scenario. Let's see how it shapes up. But Mr. Dorsey, this was fabulous talking to you today. We hope to be able to talk to you soon, and hopefully that soon comes in after the conflict is over, because for peace sake, we need to see the end of this sooner.
Thank you very much for having me. I enjoyed the conversation.
Likewise, lovely talking to you. Well, that's James Dorsey, and he's written, as Tamanna said, extensive pieces on the figureheads in Iran as well, in some sense, and therefore, great to get his view. Okay, the markets have cooled off as well. So it's not that everything is in a rah-rah mood. The question only is how to approach a scenario like this, wherein there has been a bit of a correction, world markets by and large, because of the conflict. And could the first sounds of the ending of the conflict lead large investors to deploy capital into India, into other markets? Swanand Kelkar, managing partner of Breakout Capital Advisors. They advise over $1.5 billion of capital into India and other markets. Joins us right now in our studios. Swanand, great having you. It's been a year and a half that you've been here, but thank you for joining in.
Thank you, Neeraj. This is always a pleasure.
The pleasure is entirely ours. So Swanand, we were just talking to James Dorsey. He's a great thought leader on what's happening in the Middle East, and likely that there need to be off-ramps, but difficult to get them right now. If this conflict doesn't show signs of ending in the next 1 week, would you use the valuation argument to deploy capital, or would you be sitting on the sidelines waiting for the event to end?
So that's an interesting one, right? So thankfully, you have had an expert who's told you all about what's going on. So that sort of saves me the questions on Iran and oil and all those things.
No, we'll still ask you what you think.
For sure.
But let me tell you how we are thinking about it, right? So even within India, I think if you just look at the big picture, comparison versus emerging markets. So we have two funds in India. There is we have two funds. One is an emerging market fund and an India dedicated fund. So before this started, we had printed 2 years of single-digit earnings growth in FY25 and FY26, and we were being generally asked to pay 20, 22 PE for that type of an earnings profile. If you look at emerging markets, I think we'll probably have a 20% plus earnings growth here in 2026, and we were asked to pay 12 PE for that multiple, or for that earnings growth. So in that sense, the the priority was clear on where you are going to allocate incremental time. That was the starting point even before all this started. And I don't think that has changed in a material way just because in a week's time. We are not thinking about what happens to the conflict, what happens to oil prices, etc., because we are deploying money for at least 3 to 5 years. Over the past many years in India, I would say that we have looked at many stocks and businesses and said that, hey, listen, this is not the price that we want to engage in. If this price comes to X, we will definitely consider this as a stock. Now, the fallacy that everybody has as an investor or a fund manager is that a price doesn't come to that level that you want it to on its own. It's generally accompanied by something which makes you stop in your tracks and say, hey, no, I need to wait a bit more. So what we have done over the past 1 week, right? I mean, I think that's important for some of your readers to, or some of your viewers to also know, is that we have not paid too much attention to the screen. We have said that, okay, we have probably looked at hundreds of companies over the past 3 years in India and overseas. Are some of them coming at prices which are attractive? And we're deploying in trickles. We are not deploying money lump sum because this is an event, you don't know what the end to that is. So that is what we have done, not only in this bout of volatility, but generally in all bouts of volatility. There is this person in our office who does not understand stocks at all. We look at a stock, it's at 500. We say that we would be interested in buying this at 350. When it's at 350, he sends an email to the entire system saying that it is at 350. What do you want to do about it? I think that's a very good way of thinking about it because you tend to get lost in the screen if you keep staring at it, and then somebody has to respond to it. Because it kind of, now you are being publicly asked this question, that the stock price is 350, what are you going to do about it? So that's what we have done, really speaking, over the past couple of weeks.
I'm wondering who is this person in your office?
So he deliberately is a person who's not part of the investment team,
okay,
who just runs an Excel.
As long as AI doesn't have his job anytime soon. No. Just on that point, and I like the thought of having focus no matter what's happening. But that confidence doesn't seem to be coming in on fundamentals in India.
That's right.
If on one day we say, okay, this is going to be behind us, what's happening in the Middle East, in Iran, etc., then we come back with, oh, but India doesn't have an AI trade.
Yes.
Does that bother you?
So it's a good question, right? So let's take this again. This conflict seems to be occupying a lot of our mind space. Just let's go a couple of 2-3 weeks back. As I said, the big picture construct in India versus emerging markets was clearly skewed towards emerging markets, as I mentioned. Now, there are several reasons why people attribute this underperformance to, but I think the core reason is that the earnings growth versus what is available elsewhere is not as attractive. That is the simple answer, right? And once that is happening, then you have ancillary, you start to think about ancillary irritants like there is no AI play, we do not have commodities, foreigners need to pay taxes. All these things are not new, really speaking, right, from an Indian standpoint. These are all, I would say, kind of backfitted answers. The core issue is that you are being asked to pay 21, 22 times PE for a 10% earnings growth. And that is just hard to pay when other parts of the world are looking reasonably attractive. I think that's the core FII issue as well. So I'm sure at some point in time, why are FII selling? And I have had this discussion with N number of asset allocators. So I think the big hurdle is that, yeah, we understand the long-term story, great domestic market, there are enough and more themes. But for now, I need to cover my North Asia, which is Korea, Taiwan, China, not so much China, but Korea and Taiwan. And also India is not a beneficiary, unlike some other emerging markets, of the commodity event falls. So in emerging markets, sorry, just to digress a bit, there are two broad stories which are playing out. One is the AI beneficiaries. So the capex spending from the hyperscalers in the US, who benefits within emerging markets is the foundries, the memory, and all those things. And the other beneficiaries are countries which are net exporters of commodities, because commodity prices in general have done well, and that generally trickles down to the domestic economy over time. So if you look at South Africa, if you look at Brazil, large parts of Latin America, all that has done well. The AI beneficiaries in North Asia, which is Korea, Taiwan, they have done well. Unfortunately, India does not seem to be at the intersection or even partly in any of these places, which is why the FII interest could be at the moment lower. But the core reason which I mentioned, let's say we are here a year later and India has printed a 15, or we can see a 15, 17% earnings growth. I would be surprised if the FII flows would still be negative.
But so the ancillary reasons still don't change, because I don't think in 1 year we'll become an AI beneficiary or the commodity boom in that. So where does this possibility of this 15 to 17% earnings growth come? Do you believe that, or is that the argument you're making right now?
No. So if you look at, so again, going back 3 months, right? Valuations are cheaper than 3 months ago. At least the growth green shoots are better than they were 3 months ago in India. Right? I mean, one of the biggest numbers there is the credit growth number, right? We were languishing at 10-11%. That number is now up to 13-14%. Given the amount of financials in the index, that number will lift the index earnings growth. Autos in general are putting out decent numbers, especially after the GST cut. So these are two big parts of the index which seem to have a reasonable lift coming through, and that should eventually feed through into the overall earnings growth number. So that is one part. So every analyst starts the year with the next 15 or the next 12 months number of 15%. So I know that's an old joke, but at least on the ground, looking at the high frequency indicators, it's not all gloom and doom. I mean, there are enough places where there is growth which is improving from what it was over the last 2-3 months. And valuations have corrected a bit. Have they corrected enough? I think that is, your guess is as good as mine, but they definitely have corrected from what they were 3-4 months ago.
Where are these pockets where you're seeing positivity coming in? Which spaces in the Indian ecosystem right now are you watching? Because one part, we've spent some time talking about FIIs, but as far as domestic investors are coming, they seem pretty much locked in and committed.
Yes.
So for them, where are those opportunities?
I think that's the good part of it, right? One of the reasons why we are at a 2021 P is because Messrs. Vasan and Navneet Munot have been continuously deploying capital in this market, and thank God for them. I mean, I wrote this in my year-end piece that you should count your blessings sometimes. As I said, right, the two broad sectors where I'm seeing in general an inflection upwards is credit growth and autos in general. Those are just broad sectoral.
So banks and autos.
Banks and autos are generally looking okay. When credit growth used to pick up in the past, we used to generally get excited, but this time around there is a sort of a nuance there that even deposit growth needs to pick up in line with credit growth for you to be able to capitalize on that number as an investor. So that is something to watch, but both those places looking reasonably okay. Within autos, we've seen an uptick in commercial vehicles after, I think, I don't know how many years. And it's been the past 5, 6, maybe 3-4 months even, and we remain reasonably optimistic about that part. On IT services, I know again a contentious issue. We feel that the baby has been thrown out with the bathwater in certain cases. We are hopefully trying to look for those babies and get some of them.
Such a hard hunt? Because there are not so many.
No, so I'm not very clear that, so there are collateral damage candidates to, what's happening to IT services. I think we are first focusing there. Things like OTAs, things like maybe consulting companies listed overseas but have bulk of their workforces in India, etc., who seem to have been painted with the same brush as a normal software company. The issue with the Indian software companies is that if you look at similar business models overseas or in emerging markets, they're at 12 PE, they're at 10 PE, right? Which, as somebody who looks at the whole swath of markets, that's a question I ask myself, that you're essentially playing the same investment thesis. Do you still want to pay 20 PE for it, or do you want to pay 10 PE for it? So that's where I'm stuck on the plain IT services model. But there are some interesting models which have also gotten damaged because of, this whole vague worry that AI is going to eat up everything out there. So we are looking at that space. The one thing which you asked, the last thing I'll say, I know you have a few more questions, is does India benefit at all? I think we'll benefit from a bit of the tail end of that AI thing, which is the power and data center related investments and companies. But apart from that, we do not have some of the things that are leading the AI.
What about energy, Swanand? Because that sector in the last 12 months has gotten massively derated.
Yes.
Despite the fact that presentation after presentation from companies seems to point towards a fairly strong earnings growth, fairly strong cash flows as well. So why the derating, and are you using the derating?
So good questions again. So if you look at just the electricity consumption number, right, that is still broadly in line with the real GDP growth number. Right. So that hasn't picked up. We had an early monsoon last year, etc., etc. All these data centers that we are talking about will probably add a percentage or two over the next 3 to 5 years to the overall electricity demand growth. What is more exciting in that space, I think, is the capex plays around that. Because there is grid renewal, you need to hook up all the renewable energies now into the main grid, etc. So I think we are trying to look at those opportunities. Also, this grid renewal, which is a theme, is not just an India theme. Go to any place across emerging markets or even the US, I think every grid needs to be renewed. I mean, you have outages in places like Europe that, the Heathrow incident, etc., etc. So that is something that we are looking across emerging markets, including India, that can we find some good capex place there?
We've not spoken at all about the Middle East crisis. So as we wrap up, I'm going to ask you from the point of view of the might of NRIs in these countries. So a few days ago, the whole conversation was, are Dubai family offices selling? And are they managing to shake up what's happening in Indian equities? The reverse also may be true. Are we sort of underestimating the contribution of non-resident Indians to equity markets? And when these regions shake up, so do their confidence.
Sure. I have no data to say yes or no, but it's a valid question. I think there are a couple of transmission mechanisms for this to happen, right? At a big picture level, the remittances, which is a big bulwark of what India gets from the Middle East and cushions our BOP, I think that can come under pressure if this sustains for a fairly long time. A lot of people have been evacuated, people are leaving the country, going back to their homeland. Can that impact remittances and hence the currency and hence the BOP situation? That's a question. We are just 8-10 days into this. Are the family offices are people who are in Dubai, are they selling the Indian equity markets? I really don't have an answer to that. But a statistic which I find interesting is that across the globe, the retail ownership or non-institutional ownership of stock markets has gone up, be it in the US, be it in India, be it in most other large liquid markets, even in a place like Korea. So that has a different dynamic than how an institutional investor behaves sometimes, when a retail investor behaves differently a bit than how an institutional investor behaves.
Yeah, so we might see that play out. Interesting aspect. And I think the remittances aspect is one which we haven't fully understood.
We haven't. No, just to clarify, I mean direct retail ownership or retail ownership through mutual funds?
I mean direct retail ownership.
Direct retail ownership across worldwide has gone up.
So if you take the world market cap and if you split it the way we do in India, that how much is promoters, how much is foreign institutional, domestic and retail. So that last segment, the world over has gone up.
Interesting statistic. Okay. Well,
totally
not just
cool.
India.
Thank you so much, Swanand, for coming in. This has been a fantastic chat. Hope we don't have to wait another year to have you back in our studio.
Thank you so much.
Too much happens in a few weeks to wait that long.
We don't have a lot to say, unfortunately.
Right. So that was Swanand Kelkar for you. That's pretty much a wrap on India Market Open. We're seeing an uptick in Brent, but markets holding on for now off their highs, of course. But stay tuned. All the action up next on Ask Profit.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the more.
Hello and welcome. You're watching us Profit here at NDTV Profit. I'm Mahima Vachajani and with me is Puneet Zaveri. I think Puneet's smile is telling us that some recovery in markets is at least, that is what we're seeing. The Nifty 50 right now is up by about 0.6 odd percent. But you know what? The India VIX is also up by about 12 odd percent. Not as much as what we've seen in the past couple of days. But volatility still, remains as a question mark. So that's something that, you need to keep your eye out for. But the bank, Nifty Bank is also doing fairly well after the kind of free fall that we've seen yesterday in both private as well as PSU banks. PSU banks more, of course, but today is seeing an uptick of around 1.4 odd percent. With regards to where, the counters on the Nifty go, let's try to pull up the heat map. It's a good day. If we take a look at the entire heat map, there's lots of green at least. And the red, the counters in red are also not falling as much as what we've seen in the past couple of days. There's Shriram Finance, which is gaining up 5%. Crude prices now correcting is positive for something like an Interglobe Aviation, which is up 3%. Today, in fact, Parag Thakur was talking about how it is now available at an attractive levels of just 15 times forward P. So that's something with regards to where Interglobe Aviation goes. Ultratech, M&M, Asian Paints, all of them doing fairly well in that range of 2 to 3 odd percent. On the flip side, Infosys, Tech Mahindra, some IT names seeing some correction. ITC, Bharti Airtel, some other counters in the red. But with regards to where some sectors go, let's try to pull the heat map up for sectors and see as to what sectors are doing in trade today. Almost all in the green except for the Nifty IT, which is seeing some correction down by about 0.6 odd percent. Defense also seeing slight bit of correction down by about 0.4 odd percent. But the Nifty Auto leading the pack 1.6%, and Puneet would be happy to see that. Your bank, PSU bank, pharma, rural, etc. are also doing fairly well. But advanced decline ratio will indicate as to how the broader markets are doing. Let's try to pull that up. There you go. Finally, at least a 4-digit number.
The number is reversed now.
One more zero added to that number. And that gap is widening, which is a good thing to at least look at. So that's how the broader markets are doing.
Yes, most certainly. I think yesterday we were at the advances side, the 378, 360 advances, and now that has finally reversed. So that's a key positive. While of course there is a bias from my side on the Nifty Auto, the key aspect is that it's a space that has done well, and buying has come back into that, at least for today. And you had a lot of individual movers. Brokerage firm initiated coverage on Uno Minda today, and you see all those constituents, right? Ashok Leyland has done very well for its investors, so has Mahindra and Mahindra. both are the top gainers for today. Tata Motors continuing their momentum, so is Eicher Motors as well. So after just a one-day streak, and here is where the divergence comes in for the Nifty Auto versus the PSU Banking Index. Both have done very well. And today there's a clear divergence there. Let's also look at the Nifty Metal very quickly because that has also been a space which has done very well. Started to see sell-off because of the broader market. So that is yet again come back into the buying as well, up 1%. But the individual movers, BSE 500 very quickly. I spoke about the auto pack with Uno Minda had a new initiating coverage note. Minda Corp had a new joint venture. Apart from that also some similar names like Tejas Networks, Reddington as well as RCF. The value players come back into the market now in terms of at least some favor back in that sense, and over in the declines not too many, so that's a key positive as well. But let me welcome in at this point of the show Swati Hodkar. She's the EVP Technical Research Analyst at Nirmal Bang, as well as Astha Jain, a Senior Research Analyst at Hem Securities on the fundamental side. Ladies, thanks so much for joining in. Very good morning to you, and a belated happy Women's Day to both of you as well. Let me start off, with the first question on today's show, and that's coming in from, Sunil from Pune. He's asking a question on Shilpa Medicare. He holds 142 shares at 139 rupees per share. Swati, he's sitting on a profit of almost 28,000 rupees and asking what he should do now with this particular counter. What would you recommend?
Good afternoon, all of you. Definitely the view is positive. He bought it at very attractive levels and earning a handsome of money at the current levels. The setup is positive. As of now, we believe that the stock manages to take a support of the 300-day moving average, and again it's heading on the northward directions. This rally is likely to be extended towards the immediate target will be 380 and beyond at 420 levels can be seen. So I will suggest to hold on your long positions as long as Shilpa Medicare holds the 300 rupees on the downside. So maintain that as a profit stop loss and carry your long positions for a target of 380, then 420 levels can be seen very soon.
So that's the view on Shilpa Medicare. The next question that we have is on IDFC First Bank. This is from Mansi, who's writing in and wants to know a view on this particular counter. She's purchased at the levels of 83.8. Should I buy more or average at the current levels or sell is the question. Astha, very good morning to you. I'll come to you on this one. What's the view like? There's one more fraud that was reported yesterday of around 116 odd crores. Overall, fundamentally, what is your view?
Hi, good morning to all of you. So talking about IDFC First Bank, the kind of news flow which we are getting in are not up to the mark, and that is why we are seeing this stock is continuously showing downward momentum. Now, what I believe that apart from the negative news flow which is happening around the stock, I think even the financial performance was not very, very strong, which we have seen in their numbers as well. So I think if I take the combination of both these, I'm still not very much, optimistic about this counter, and has recommend to just hold for a long term, or either if anyone want to book partial losses, then also I'm recommending to book certain sort of losses, but enter into some good kind of a bank where we will not get these kind of news. So I prefer I'd say bank over IDFC First Bank at this point of a time, and recommend even booking out partial losses, or just stay here for a longer duration, because in the shorter duration we can see some more pain in the counter.
That view, Astha, and welcome to the show. The first caller for today, it's dialing in from New Delhi, and Sanjay has a stock query for us. Sanjay, good morning, welcome to the show. What's your query?
Very good morning to you, and thank you for taking my call. Last month I missed out this Indian bank at the level of 900, and this time I got an opportunity yesterday, and I bought 500 shares of this Indian bank at the rate of 905.
Okay.
And I was little delighted today morning when I saw it is somewhere around 910 or so. And my view is very shorter period. Would I be able to get 950 levels in this, or what would be my stop loss in such purchases? Please do guide me.
Got that view, Sanjay, and glad you are in the gains for now. But Swati, on Indian Bank, at start of the month of February, stock was trading very close to the 980,000 mark. What would you recommend as a short-term view on the stock?
Short-term view is positive also because the counter has managed to take the support of a 50 days moving average, and we are seeing some bounce back rally. Yesterday we have touched those levels and today we are getting a bounce back rally. Since the view is very short-term period of time, I will suggest to hold on at the current market price. 900 is the immediate support levels. As long as it holds that levels, I believe that the stock has a potential to reach up to 940 levels. So I just hold your long positions by keeping a tight stop loss of 900 rupees for immediate target of 940 rupees on high side.
Okay, all right. So that's the view on Indian Bank. One more banking query coming in, and this is on IDBI Bank. Komal from Jaipur is asking that she's bought 1,000 odd shares at the levels of 107 from a long-term perspective. Is this a good hold? As such, she's sitting on a loss of around 7,000 rupees right now, but what's the view?
So regarding IDBI Bank, my idea here is to stay invested in this counter at least for some months, and then make any sort of decision regarding the exiting, because I believe the upcoming days will be good for the counter, and hence we are positive on this counter for a shorter to medium term perspective, recommending a hold with a price target of 105 to 110.
Okay. All right. We've got a caller coming in from Bengaluru. Mohan is calling us. Mohan, a very good morning to you. I believe you have a question on Vartech Vabag.
Yeah, I just bought 14 shares at the rate of 1,400.
Okay.
So, and I just wanted to know, in the Middle East, there were huge orders have been received for Vartech Vabag. So it is, for long-term perspective, can I add these shares for this, for long, to buy more?
Okay, got your question. Mohan, I'm not very sure of the Middle East exposure for this counter, but I'm sure Astha would have a view on this one. Astha, what is the view on Vartech Vabag, and is his analysis correct with regards to its exposure in the Middle East?
See, yes, the order book is strong, first of all, because they have got the order book of around 15,000 crore. And the importance here is this order book is around 4.1 times of TTM revenues of this company. So definitely a good and a very strong order book they have. Apart from that, what we believe that this company is well poised to move at a CAGR of more than 10% from FY26 to FY28. So we believe that the growth rate will going to be very strong, along with the strong order book which this company is having. And I believe that one can stay invested in this counter for a longer term perspective, and even buy on dip strategy can also be applied to this counter. Today being the markets, we are seeing the markets being very strong. So we are seeing a good momentum in the counter. But if any dips come in the down market, then definitely it's a buy on dip as well. Price target which we are setting for this counter is around 1,250 to 1,280.
Got that view, Astha, but definitely, the international markets are almost, 70% of its, order intake also in 9 months of FY26. So continue to monitor this stock as well. The next, query that we are taking in, and this one's an interesting one from Ramya. Now she has invested, Astha, almost 9 lakh rupees, and in terms of a portfolio allocation across 16 stocks, and she is down almost 25% in her portfolio right now. Now, we had asked her for a few stock names, so I'm just going to throw that to you. In terms of Suryodaya, Happiest Minds, Signed, the IT company, as well as India Mart. Now, all 4 of these counters actually haven't done well, right, Astha? So would you suggest her to exit either of these counters? She also holds stocks like Apollo Tyres as well as SBI, ITC. But in terms of just a very quick analysis, what would you recommend her to do, given that she is down 25% of an overall portfolio value?
So the kind of IT stock which the investor is holding is looking decent. See, if I talk about the IT stocks which she has talked about, I think one IT stock which she is having is Coforge, right? Can you just tell me the IT stocks?
Signed was the IT stock, Astha.
Signed and Happiest Mind. I'm sorry.
That's right.
So Happiest Mind and Signed, both these counters are looking good right now. So there is no need to get out from these counter as of now. In fact, she's holding India Mart as well, if I'm right with my memory. So in fact, India Mart is also looking good. Looking after the kind of market condition, I believe the fall is inevitable. But if horizon is longer term, then definitely one should stay invested in this counter and continue to hold the counters. I don't believe that there is any such counter which one need to exit. So right now, just stay invested in this counter is what I can recommend for the investor.
Okay, all right. We've got our next caller. Arvind Mohan is calling us from Bareilly. Arvind, very good morning to you. What's your query about?
गुड मॉर्निंग मैम। मैम मेरा क्वेरी है LIC के लिए। LIC एक्चुअली LIC के शेयर है मेरे पास 50।
ठीक है।
CSN 893 के रेट पे। अब LIC में मतलब LIC मार्केट को बचाने आ जाती है, पर मार्केट में LIC के शेयर को कोई लेने ही नहीं आता है। फंडामेंटली तो स्ट्रांग है, पर टेक्निकल बेसिस पे जानना चाह रहा था इसके बारे में।
ठीक है, मैं समझ गई आपकी क्वेरी अरविंद, एंड आपने आपका एनालिसिस बहुत अच्छे से किया है। मैं ये सवाल स्वाति से लूँगी। स्वाति, LIC के लिए चार्ट्स कैसे लग रहे हैं अभी? व्हाट इज द व्यू लाइक?
शॉर्ट टर्म ऑन द टेक्निकल फ्रंट लिटिल बिट कॉशियस है, क्योंकि लास्ट अगर अपन 6 महीने का भी डेटा देखोगे तो लो टॉप लो बॉटम फॉर्मेशंस में चल रहा है, विच इज ऑल्सो नोन एज अ डाउनवर्ड स्लोपिंग रेंज में चल रहा है। बट क्लस्टर जोन्स बना चुका है 780 785 के रेंज में। कल भी हमने देखा कि 793 से एक पुल बैक रैली हमें देखने आई है। ये बाउंस बैक रैली कंटिन्यू हो सकती है 840 860 के लेवल्स तक, जो कि एक 20 डेज मूविंग एवरेज के लेवल से वहां तक एक अपसाइड रैली हमें देखने मिलेगी। तो मैं कहूंगी कि थोड़ा वेट कीजिएगा, डेफिनेटली इसमें एक अपमूव रैली 840 860 तक आ सकती है। देन यू विल गेट अ चांस टू बुक योर प्रॉफिट्स एट द करंट लेवल। मैं कहूंगी कि होल्ड कीजिएगा, नीचे में हो सके तो 790 का स्टॉप लॉस रखिएगा एंड कैरी योर लॉन्ग पोजीशंस।
Got the view, Swati, and thanks so much for that. But the next question is on the defense pack. Paras Defense is what Anil Singh has on his focus right now. He's asking if it's the right time to enter at these prices. He's not mentioned the time frame, but Astha, would you recommend that?
So Paras Defense is looking good to us, and in fact we have already given recommendation on this counter to our clients as well. Now here the point is whether it is the right time to enter. I believe the kind of upsurge we have already witnessed in the counter, from there we have started witnessing some sort of a downfall. So it's better to wait for more downfall to come in and then make entry into this counter. Maybe 650 or 660 are some good levels where one can make fresh entry in. So right now I would recommend to make fresh entry at the lower level, because the kind of valuation the stock is enjoying right now is looking on the higher side as compared to its peer, and hence we recommend buy on dip strategy. So enter at the lower level.
Buy on dips on Paras Defense is the call coming in from Astha. But another caller dialing in from Bengaluru, and Swati has a stock query for us. Swati, good morning. Welcome to the show. What's your query?
My query is on ONGC.
Okay.
I'm holding 770 shares of ONGC at the rate of 275.
Okay.
So I'm at loss. Since oil prices are coming down, whether I should sell this stock or I can hold. Similarly, MRPL also I'm holding.
And Swati, is this a short-term buy, or did you buy it for the long-term on this news flow?
Actually, I bought it for short-term,
Okay.
but I can even hold it for medium-term if can stock go up.
And medium-term would be roughly 6 to 12 months?
Yes.
Got it. But let me just go across to Swati only for this. Swati, on the technical side, ONGC as well as because it will take time to transmission these gains, and my colleague Somit has put out that there won't be any windfall tax if the price of oil keeps on rising. So that was a key positive on the fundamentals, but she's making a very valid point, right? With the oil prices coming down, anything on the charts that suggests that it can come back to 275 or higher?
See, the longer term view is definitely positive. ONGC, we are witnessing that even though the market has shown a lot of correction, this particular stock manages to stay above the important moving averages, say 50, 100 and 200 DMA, well placed. No wonder from the last 4-5 trading session, we have witnessed some sort of a profit bookings, which cannot be denied since we have seen a very good rally from 230 to almost 290 levels. So downside, it has a very good support around 255 levels. So I will suggest hold for some more time, at least for a 6 months period. You will definitely get an opportunity to book the profits at least 300 to 320 levels. So it's a hold from my end from the ONGC part.
Okay, the next one is from Biswajit, who's writing us from Kolkata. He's holding 200 shares of JSW Energy at the levels of 518 from a long-term perspective. He says, is it advisable to average at the current price, or maybe if it goes lower at lower prices? Asa, I'll come to you on this one. What's the view?
So talking about JSW Energy, I mean, this is a part of a JSW group, and it is one of the leading private power generation company in India. And they have got a very, very strong installed capacity. If I talk about their numbers, Q3 numbers were a strong number. And that was mainly what we have seen in the number was mainly driven by, the capacity additions which this company has done. And in fact, the growth was also very, very robust. What we are thinking about their, quality of the company is that their management is also speaking very positively, and they are talking about, diversified growth in the the pipeline which the company is having. So I believe that this company is well poised to move till the level of 550 or so. So idea here is to stay invested in this counter and target price can be set at around 530 to 550 odd levels. So stay invested in this counter.
Invested is the view coming on JSW Energy, but we've got our next caller. Sharad Sinha is calling us from Patna. Sharad, a very good morning to you. What's your query about?
Yeah, I'd like to invest in Indian Hotel or Indian ICICI AMC. Which one would be better at this point of time?
Okay. You are looking at this from a slightly short-term perspective. What is the time horizon?
No, for long term.
For long term. Okay. So, two very different stocks, Astha. He's asking about either Indian Hotels or ICICI AMC. Which one would your pick be between the two?
So talking about Indian Hotel, first of all, I mean, both these counters are looking good to us. And both these counters have their own set of relevance. Now, talking about Indian Hotels, Indian Hotel is looking very strong to us because what we have seen is the good set of number which this company has posted in the Q3 FY26. In fact, the numbers are looking very, very strong and kind of cycle which the company is into. In fact, the industry is into. Management is quite optimistic if you just go through their con call as well. So my idea here is that Indian Hotel is looking very strong to us in the long-term perspective, and one should remain invested in this if someone has this portfolio. Now, here the question is whether he has a choice to keep only one between these two. So definitely, I would like to go with the Indian Hotel. Although ICICI AMC is also looking very good to us, and we all know that this IPO has came just few months before. But the kind of valuation right now this company is going on, I think Indian Hotel is a better choice. So if anyone has to go between these two, then Indian Hotel is recommended. But as of now, I am bullish on both these counters.
Got that view, Astha. But time now to dive into the BSE F&O setup for now. And Sharad, as always, is joining us to give us exactly that. Sharad, over to you.
Well, thanks a lot for that. A relief rally is coming in today. After yesterday, we saw massive oversold positions coming across BankX and Sensex. A sea of green coming in. And of course, the crude also reversal. We saw the biggest one in the history. M&M, Asian Paints, Ultratech, domestic-facing companies and even banks everywhere, there is a good buying happening. But what's not working is definitely the support of Reliance is not there, which was expected to be there today. And Tech Mahindra and Infosys, slight sell-off. Again, it comes back net-net, but the position is definitely there. Technical bounce is something which I would like to call this. BankX also, the story remains the same. And interestingly, let's just pull out the constituents of BankX to see what has happened. Yes, so BankX is also trading in the premium and the stocks are also doing well. The VIX overall, which we are tracking, that has also dipped. Because of that, the macro factors are also improving. Let's see the long build-up stocks, which would be there in focus today. And of course, the list is on the higher side. Shriram Finance makes it to the list. It was around 3% in the opening and now it's jumped to 6%. Dixon Tech also showing a good up move and a good buying and fresh positions are coming in. Talking about short covering, we have KFin Tech. Interesting name from the capital market theme, and Petronet LNG, that's also up almost 4% odd. Long unwinding, let's see where the volumes are moving. That's Nalco and InfoEdge, nothing so convincing, but let's see what's there in the overall short build-up, and that's where KA Industries and Bharat Forge comes in. But net, the entire sentiment of the market is towards the positive, and very fresh positions are being built, especially in the longs right now. But this is just the first day. We might see a little bit of volatility towards the end of the session today.
Got the view, and thanks so much for that, Sharad. But the next question now, it's on Mahindra & Mahindra. Now, a viewer holds roughly 250 shares of Mahindra & Mahindra 3050, and that's Naveen. Now, he's asking whether he should continue to hold or sell out of this counter. He's not mentioned his time frame, Astha, but the February update did look positive both for its existing models of Bolero, Scorpio, as well as the 7XO now. How do you view the stock now in terms of the run-up that it has seen? Because the base effect is quite high, right, for FY27, because the growth has been so strong in this year. What would you recommend?
So there are 2 points about it. First of all, their blended volume growth was very, very strong. Secondly, the kind of price realization which this company is earning is also very, very strong. Because if I talk about their, first of all, their blended volume, it was a growth of around 22%, and that is what I believe is much higher than some of its counterparts. Talking about the price realization, the realizations have also been up by 3%. So I believe that this counter is well poised to move upside from here, and this is one of the very strong counters which we are betting on in the automobile space. So stay invested in this counter for the price target of 3350 to 3400 in the short to medium term.
So that's the view on M&M, but it's time for our rapid fire round. Swati and Astha, you both know the drill. I'll take up the first question, which is coming on IRFC. The viewer has bought 78 shares at the levels of 100, wants to know if you can hold or buy more. Swati, your view on this one?
At the current level, I will suggest to hold this position with a stop loss of 97 rupees on the downside.
A short-term perspective, Swati, on Solar Industries, our viewer has bought for the next 3 to 6 months. Can he buy 10 shares now?
Not at the current market price. Any momentum or dips towards to 14,000 levels can take a long positions.
Okay, the next one is on Tata Elxsi. The buying price is 23. The quantity, the buying price is 6,200. The quantity is around 23. Should I hold or book losses? The stock is trading at 4,300. Astha, your view?
I would recommend a hold on this counter and just wait and watch till the buy price comes.
Reliance bought at 1465. What should we do with it, Swati?
1465, definitely it's hold from my end. Upside, I believe that 1500, 1550 levels can be seen.
Okay, the next one is on Punjab National Bank. Ramesh from Vizag wants to know if we can hold from a long-term perspective. Astha, your view?
Yes, PNB is a hold from long-term perspective. Price target can be set at around 125 to 130.
Kirloskar Royal Astha bought at 1457. Is it a good time to buy more right now?
Maybe buy on dips can be applied to this counter at a price level of around 1420 to 1410 with a price target of 1500 to 1520.
Okay, Eternal is the next one. Dheeraj Reddy has bought an average price of 260. He wants to know if the stock will reach 400 in the next 12 months. Astha?
Eternal is a long-term story to bet upon, but reaching 400 level, I cannot comment so early about it. But yes, this counter is looking well poised to move till the level of 250 to 260.
Cupid, a view, Swati, if you have one right now at 91, is it a good time to buy? Is what our viewer Arvind is asking.
Not at the current market price. If you're getting any dips towards to 84 to 83 rupees, that will be a good level to take a long position.
Lemon Tree Hotels, is this a good time to enter? Is the question that Arvind Reddy has. Swati, your view?
I will not suggest to take a long position in Lemon Tree. Apart from this, the Leela Hotel looks good, so you can switch on to the Leela Hotel.
210 rupees per share on Castrol is bought by Satyan. Swati, would you recommend buying more right now?
Castrol Industry, as of now, I will not suggest to take a long positions. Wait for some more time. A profit booking is likely to be seen towards which will take a counter to 180 rupees. That can be a good level to take a long position.
Utkarsh Small Finance Bank, bought at the levels of 18.5, wants to know if this is a good hold from long-term perspective. Astha?
Not a very good hold, but one should remain invested in this counter for the price level of around 15 rupees as of now.
Right time to buy Wipro, Astha?
Just for the dividend perspective, if someone is interested, then one can go for it. Otherwise, buy on dips can be applied.
Got it. Well, that's the end of the first round of the rapid fire in this edition of Fast Profit, but a very short break. Lot more stock related queries on the other side. Stay tuned.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं.
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock related queries. So if you haven't already, do start sending in on the WhatsApp number that will start flashing on your screen very shortly on the top. You can also call us, talk to us directly, and the landline number for the same is also flashing on your screen up there. But the next query that we are taking in, and we still have Astha as well as Swati with us, it's on Vishal Megamart. Now, Bhuvana has actually bought shares at 125, roughly 200 shares, and asking for a 2-year view on the stock. Astha, a very disputed counter in that sense, because if you bought it at the IPO, you're very happy. If you bought it at 150, you're not. Promoter selling also a key news flow and something that Mahima has been covering. What would you recommend on Vishal Megamart? Is it a good time now to look at it? Because it might be the lowest that it has been since listing.
So, in fact, what we have seen that the same store sales growth in the Q3 was impacted. And if I am not wrong with my memory, it was around by 2% or 210 basis points. And there was a reason behind it due to some shift in the festivals, we should say, all the dates of festival. But what management was saying that they are really very much optimistic about the kind of growth trend which this company is witnessing. And in fact, I believe their quarter performance of Q3 of FY26 was also very strong. It was resilient, not very strong, but resilient is the right word for it. It was resilient despite what we have seen, in the shift in the festive period. So I believe, yes, those who have taken it in the IPO will really be happy if they are continuing holding it. But yes, buying at this point of a time is somewhat, which I believe that one should just look out for some more fall to come in and then make entry into this counter. So even I would recommend to buy at the lower level if anyone wants to buy it. And if anyone has already bought it at a higher price, then remain invested in this counter. We are optimistic in this counter from medium to long term perspective with a price target of around 120 to 125 in the medium term.
Okay, all right. So that's the view on Vishal Megamart. In fact, all of these tier 2 retail companies are also sitting on a very high base of growth last year. But moving on to the next question, this is also for you, Astha. Harsha from Vijayawada is asking, can I enter CleanMax or Fractal? Any of these, recently listed companies that you're liking?
I believe that Fractal is having its own issues because this is one of the AI company which is, I think it is one of its own kind in the India. But the problem is that when the IPO came, we were already very much surrounded by the negative news flow due to Anthropic, and that is why what we have seen that Fractal was not able to perform so strongly. In fact, if I talk about CleanMax also, both these counters are looking good to us, but if I want to go with any one counter, then Fractal is my choice, but at the lower levels.
CleanMax definitely bore the brunt of the market levels, right? Down almost 28% on that listing day. And definitely a few that are still coming in terms of the IPO markets as well. So continue to monitor all of those counters. But Murli from Hyderabad is actually asking a question on Skipper. And he's asking if it's a good time to enter the stock right now. Astha, let me come back to you because the transmission distribution space, these smaller infra companies saw a lot of run up in the last year, and then since September have seen a lot of correction. Would you recommend getting into Skipper right now?
So getting into Skipper at this point of a time, I think one should wait for some more downfall to come in. But there are certain positives about this counter which I should mention. First of all, this is a company which has got a long history because it was established in 1981. Now the positives about this company is this strong order book which this company is enjoying, along with the capacity expansion. And they have got a very, very strong export opportunities as well. But my idea here is the company is not able to perform so strongly due to the valuation thing, and hence we are recommending it to buy at the lower level, maybe at around 310 to 315 odd level, not at this present moment of time.
Okay, all right. So that's the view coming in on Skipper. But Seemant is calling us from Bhopal. Seemant, hi, a very good morning to you. What's your query about?
Morning. My query is on Mrs. Vector Foods. I hold about 100 shares of Mrs. Vector Foods at the price of 266.
Okay.
What I see, the results have been quite steady for the company, and the FMCG market is quite stable. Even then, the stock is not getting steam for almost a year. What should I do? I can hold it for next 6 months or so if I can get some answers on this from Astha ma'am.
Sure. Okay. Since 6 months is a slightly short-term perspective, but I'll try to get a fundamental view from Astha. Astha, he's not wrong, right? This company has seen a steady growth, but overall things are not picking up in terms of where volumes go, and that is what the entire industry wants to see, a volume uptick coming in for the FMCG space. Last 6 months, it's seen a downfall around 33%. Do you think a recovery from here on can be expected?
So now, yes, what we have seen that their export was not very strong. So that was the major reason we have seen that the volume growth was not very, very strong. Now, if I talk about the other fundamental seems to be in place because what we expect from this company is to grow at a CAGR of more than 10% over next 2 to 3 years, maybe by, if we say from FY 25 to 28. And that is mainly because what we are seeing, although export volumes are not very strong, but the domestic growth in the bakery business is really very good. And in fact, the premiumization is also one of the strong thing because this company is always looking for the innovation, and their products are always, health focused product. So innovations, premiumization, I think is well set for this company. These are some of the parameters which this company is strongly focusing on, and that is why they are witnessing a good growth in their domestic business. Yes, export business are not performing so strong. So I think Mrs. Vector is such a counter which one should not make an entry at this point of a time, but at the lower level, it is always recommended to enter into this counter. So make an entry, but at the price level of around 155 to 160. This is what I believe are the right levels to make entry into this counter.
But the view Astha, definitely another one of those casualties from September 2024. Stock was at 420 at that point of time, and then the 55% sell-off since then. But a very pertinent question this time coming in from Sunita from Hyderabad. It's on Dixon Tech. Stocks up 5%, and very interestingly, just in the last 5 to 7 minutes has started to inch up again as well. Now she's asking a short-term view on this stock. Let's pull up the intraday chart as well, and there you go. That slight increase yet again. Hopefully Sunita has just not bought in immediately, and before we answer the question, but what would you recommend on this, Swati? Definitely that on the fundamentals, approval for HKC joint venture is leading the momentum, but after the sharp downfall, is it a good time to buy?
time to buy, because already we have seen a lot of correction from almost 1800 levels to 9600 levels. Now the interesting fact on the daily chart, it is just forming the positive divergence, which is a very strong indications on the technical front, and the stock manages to take a support of 9600 rupees on a downside. I believe the immediate rally is likely to be seen towards to 10,800 levels. Beyond that, 11,000, 11,500 levels can be seen very soon. So it's a whole from my end. Or if you want to create a long positions, definitely one can go for a long positions by keeping a stop loss of 9600 rupees. An immediate target for a short period of time will be at 12,000 levels.
Okay, all right. So that's the view on Dixon Tech. The next question that we have is from Richie, who's asking if this is a good time to invest either in BHEL or FACT, that is Fertilizers and Chemicals Travancore, and he's got 2 lakhs to invest in. Kindly advise on this one. Astha, I'll come to you on this one. FACT today, by the way, is up 13%, as Puneet was just trying to point out. Any view on both of these? Maybe 2 lakhs divided in both of these, or any one of these?
So I'm more optimistic about BHEL at this point of a time, and I recommend to make entry into this counter, but in the tranches. Now talking about FACT is also one of the strong counter in the fertilizer space, but today what we are seeing is a strong upside momentum. So FACT is such a counter which is always being volatile. So making a investment call into this counter is little bit early, or maybe a little bit risky. So idea here is that BHEL is looking very good in the long-term perspective. So just look after that counter, but make entry into this counter in the tranches and not invest the lump sum amount into this counter. Now talking about the BHEL's fundamental, first of all, the strong order book which this company is enjoying, the kind of execution ramp up which this company is doing, and the kind of environment or macro conditions which we are into, definitely are pointing towards the strong upside which this counter can show in the long term. So BHEL is my choice between these two, and one should make entry into this counter, but not the lump sum amount should be invested. It's into the tranches.
Got that view, Astha, and thanks so much for that detailed answer on both these counters. The next one's on Bharat Electronics. So it's a counter that's done well for investors, and our viewer is asking, here, hold 27 shares at 455. Swati, would you recommend a good time to add more to this current position?
I will not suggest to add on at the current market price, because already the counter has bought it at 450 levels, so no need to average it out and take your buying position at the higher levels. If you're getting any tips towards to 440 to 430, that will be a good levels to take the average of positions, but at the current level you can definitely hold on. The immediate target will be a 480, and beyond that 500 levels can be tested. So it's a hold from my end.
Okay, it's time to step into a very short break, but we'll be right back answering all your queries on the other side, so do stay tuned.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, single. single, single. Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Welcome back. You're watching Ask Profit. Viewers who are tuning in, you can give us a call or send us a WhatsApp query about all your stocks that you're holding. Now, we've got Dr. Bharat who's done the same, who's writing us from Andhra Pradesh and asking about Quality Power. He's got 500 shares, the price of 916. What should I do? Hold or sell? Swati, your view on the charts on this one?
Current level, I will suggest hold on these long positions because I believe there's some sort of a pullback rally can be witnessed into this particular stock. It will take a counter towards to 840 to 850 level. So it's a hold from my end.
Got that view, Swati. The next question, that's coming in. It's on Pace Digitech. It's a recent listing it as well. Bought at 164 for 150 shares by a viewer Lokesh. He's asking a 1-year view on the stock. Asta, what would you suggest?
So Pace Digitech, I think one should remain invested in this counter for the longer term. This was a recently listed company, but what we have seen that the listing was not up to the mark. Going ahead, we believe that this counter is well poised to move till the level of 170 to 180. Remain invested in this counter.
Okay, all right. The next question that we have is from Nihal Mohandas, who's writing us from Mumbai, asking about SBI cards, whether he should go ahead and invest in this particular counter for the next 2 years. Asta, your view?
No, I don't believe that SBI card is such a counter where one should make any sort of fresh investment at this point of time at least. So idea here is just to go for SBI card because what we are saying, the kind of financial environment which we are into, we are not very much optimistic on this company. Why? Because although we know that this is making us steady acquisitions and there is a improved credit cost outlook is also there. But my idea here is that this kind of a counter can remain volatile if we see any sort of uncertain event happening around us, and hence this is not a very safe investment for a longer term perspective. So SBI card is looking good, but not for an investment point of view.
Got that view. Asa, stocks down almost 30% even since listing, so not given a single year of positive returns in that sense. But let's go across and take our next caller from Andhra Pradesh. Bharat has a stock query for us. Bharat, good morning. Welcome to the show. What's your query?
Good morning, sir. I am holding a D-Development shares for 460 at the price of 305.
Okay. And do you want a long-term view?
Yes, sir. Long-term view.
Okay. Asta, a quick one on D-Development as well.
So D-Development, I think this IPO came way back in 2024 and 19 June 2024 at a price of around 203. And this is basically an engineering company. And what we believe that this IPO was not able to perform so strongly on the bourses as well. And since listing, although it has generated good return, but since I think the kind of listing, the results which are coming in is not looking very strong to us. So my idea here is that it is a good long-term story to bet upon, but in the short term, we are not very much optimistic on the basis of the number.
Okay, all right. The next one is an interesting one. Hitesh is writing in and he's saying that he's got 200 shares of LIC Housing Finance, which he just got dematerialized just weeks ago. And he says that his grandfather bought it years ago, and he happened to find them now. Probably in 2006 or 2007 is when it was trading at 28 or 30 odd rupees is when he's holding it. The stock is currently trading at 510. He's not given us the quantity, but he wants to know from a long-term perspective, should he continue to hold?
200 shares.
Okay, he's given. Okay,
Yeah,
200 shares. Oh yeah, 200 shares. So I mean, if you can just multiply the kind of profits he's made, Puneet is trying to do that on his calculator. But till then, Asa, there you go. What should he do right now?
He should remain invested, but we are not very much optimistic about this counter, because what we have seen is, first of all, the kind of results which this company has posted. It was majorly impacted by, first of all, the kind of interest rate environment which we are into, and secondly, what I believe that they have got a very, very strong competition. So both these factors have impacted the results of this company, and we have not seen a very positive side of a number. My idea here is that this counter is a slow mover counter, not very much competitive as compared to its peers. So just remain invested in this counter for the longer term. But if anyone want to make a fresh entry, I won't believe that this is a good counter to make a fresh entry into.
So a 6,000 investment has now ballooned to almost 96,000 in terms of profit. So Hitesh Jotwani's grandfather, a big one up to you in that. My fellow Sindhi Bhaiya has made a good investment in that sense. But the next one's on Protean. Our viewer Rajiv is holding 118 shares at 925. What would you recommend, Swati, with this counter?
The longer term view is definitely positive because the counter has already witnessed a very sharp correction on the price perspective. I believe the stock is trading in the oversold zone. Not to book your losses at the current market price, you can hold on. If possible, try to average it out the positions whenever the counter comes at between the 520 to 500 levels. A bounce back rally can be expected, which will take the stock towards to 700 to 800 levels. So, but it's a overall 1 year view, so you can definitely hold on this particular stock.
Okay, all right. The next one is on Radhiko Khaitan. Veer from Bengaluru is asking this question. He's bought 27 shares at the levels of 2,800 and wants to know as to what should be the next course of action for him. Asa, I'll come to you on this one. One of the beneficiaries of the recent move by Karnataka government, plus this particular counter has been playing the premiumization game very well. What do you think? Should he continue to hold? He's sitting on a minor loss.
I think one should remain invested in this counter, because what we are thinking about this counter or analyzing is that this financial performance of this counter is here to sustain, and we will continue to see the double-digit volume growth in this counter. Apart from that, we are believing that this is one of the main candidate of the premiumization, and the kind of margin expansion which this counter has witnessed is a sustainable one. We are expecting this counter to grow at a CAGR of more than 15% over next 2 to 3 years. Hence, one should, and this is, I'm talking in terms of revenue. So I'm giving CAGR growth in terms of top line of more than 10 to 15% for coming 2 to 3 years. So remain invested in this counter for the longer term perspective with a price target of 2850 to 2900.
Got that view, Astha. But the next question coming in, it's on LT Foods. Our viewer has bought 100 shares at 75. Let's pull up the counter. And a question largely, he is sitting on material profits as Sardesai and asking what he should do with this particular counter. Should he hold on or book profits? What would you recommend, Astha?
So for LT Food, I would recommend to hold this counter, because kind of upsurge which we are witnessing in the stock price is here to stay. Although today we are seeing some sort of a profit booking, but in the longer term, I expect this counter to cross the level of 400. Remain invested in this counter.
Got the view, Astha. But time now for the rapid fire round in this edition of Ask Profit. Swati as well as Astha request you to keep your answers on buy, sell or hold so that we can take as many queries in the next 3 minutes. The first one's coming in on Keynes Technologies, bought at 3675. What would you recommend, Astha, is a good time to buy?
Maybe at a lower level. Buying at a lower level, but if someone is in this portfolio, then remain invested for the price target of 4,000.
Okay, LTI Mindtree is the next one. Ravi from Bengaluru wants to know if we can continue to hold this from a medium-term perspective. Swati on the charts?
Definitely, you can hold on for an immediate target of 4,500 rupees.
Apollo Microsystem bought at 234. What should we do with this counter, Astha?
Polo Microsystem is a hold from our side with a price target of 225 to 230.
Right. Chennai Petrochem, Anand from Bengaluru has bought 96 shares at the levels of 1050. Good hold from a short-term perspective. Swati?
Hold, the target will be at around 1050 to 1070 levels.
Good time to buy BPCL or IOCL, Swati?
BPCL will be the good position to take a long call, but not at the current market price. 300 rupees are the attractive levels.
ITC Hotel, 600 shares at the levels of 200. Harish wants to know if this is a good hold from a long-term perspective. Astha, your view?
Yes, definitely a good hold with a price target of 180 to 190.
Good time to buy Ashok Leyland for the next 1 year, Astha?
Maybe at a lower level. So Ashok Leyland is a buy, but at a lower level of 185 to 180 zone.
Excite Industries, Arun wants to know if you can continue to hold or sell. Swati, your view on the charts?
Hold for a target of 350 rupees.
Kaplan Labs bought at 1670 by Benny. Should he continue to hold, Astha?
Kaplan Lab is a continue. One should remain invested in this count with a price target of 1750.
Okay, Canada Robeco AMC 30 shares bought at the levels of 258. Hold average. What should he do? What should she do, Swati?
I will suggest to hold on for a target of 240 rupees.
A good time to buy into Teneco Clean Air Solutions, Astha?
Maybe at a lower level, not presently.
United Spirits 80 shares bought at the levels of 1460. Hold or sell? Swati, your view?
Definitely, it's a hold for an immediate target of 1450 to 1500.
Ratan India Enterprise, Swati bought at 72 by Niva and she wants to exit this counter. Any levels that you can recommend?
Exit if you're getting, keep a stop loss of 25 rupees on the downside. Any positive move up to 28 to 29 levels, you should exit those levels.
Sagility India, can I hold for a year? Kabul from Delhi is asking this. Astha, your view?
Yes, definitely a hold with the price target of 45.
Tata Chemicals, is there a good time to buy? Is what Guru is asking, Swati.
Yes, 20-30% can be accumulated at the current market price.
Birla Soft bought at the rate of 692. Hold or sell? Swati?
It's a definitely hold from my end for a target of 440 rupees.
A 10-year view for KPIT Tech is what Basu is asking. Would you recommend that, Astha?
10-year perspective is definitely a hold for KPIT Tech with the price target crossing 800 and above levels.
Okay, Ola Electric bought at an average price of 44. What should I do? Astha, your view?
Try to exit from this counter at every rise.
Alright, okay. Sell on the rise for Ola is the view coming in from Astha. But with that, completely out of time, Astha and Swati, as always, thank you so much for taking out the time and helping us answer all those 60 stock-related queries. We aim for 40 more in the afternoon edition, so do stay tuned and do, of course, tune in at 2 o'clock to ask all your stock-related queries again. But completely out of time, KYC comes up next.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
बिटिया की शादी है हमारी।
बधाइयों बधाइयों।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. girl, then girl, then girl. चल करें थोड़े then girl, then girl, then girl, then girl, then girl, then girl. क्योंकि तू है single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. An interesting company today, but I'll give you some hints. Try to smell the coffee. Maybe there might be a hint over there. The first one is, of course, the company is a global manufacturer and exporter of instant coffee. Okay, now the universe is becoming a bit smaller and smaller. Let me give you another hint. The second one is that it recently increased its revenue guidance for FY26 and also the margin front. That is where the street is very bullish on this counter. And the third hint is, of course, it has been a multi-bagger. Last 5 years, if you're holding the stock, it has given you 313% of big returns coming in. The company in focus, keep guessing. But if you're having a coffee, maybe you have understood and guessed the company by now. And yes, the company in focus is CCL Products. This is the company which we are talking about the industry, the coffee pricing, the demand, and of course the growth outlook going ahead. But the question remains is, why are we calling this coffee company? What is something unique about it? The global tensions, they are impacting the global coffee prices also. Minor jump, but nevertheless, it is, rattling some feathers if you are tracking this industry or trade. The second reason why we are calling this company is, has the coffee demand been affected because of that? Remember, everybody loves their coffee, but is the demand hampering that? The third question definitely is going to be the debt reduction plans, because they are ramping up capacities abroad. So the debt levels are on the higher side. When company starts reducing debt, that becomes very strong for the financials going ahead. The volume versus value growth targets, what the company is setting in FY27, we will be watching out for that. And also, apart from this, the update on the Vietnam operations, how much ramp up has happened, what's the progress looking like. Are they going to be a bit wait and watch because of the geopolitical tensions, or is it business as usual? And of course, the branded business, Apne products. Remember, they are exporters for a lot of clients, but they have their in-house brand also. They are going very much heavy on that. So we'll be asking the important target plans for that. And to decode all our queries regarding the industry and the company, we'll be joined in by Srishant Challa. He's the MD at CCL Products, where he'll give us the entire view of the company going ahead. But this is on the show. We'll get in Srishant in a while. But let's come back and understand about the company. What is CCL Products all about? CCL full form, of course, is Continental Coffee Limited as well. It's world's largest private label manufacturer. That's the first and the most important point to look at. Let's talk about more about the company. It's a global manufacturer and exporter for instant coffee. And there are a lot of variants to it also, and I'll explain you that. I'm sure you must be wondering, where is my cup of coffee? Do take that cup of coffee and listen into the entire KYC show. This is operating over more than 110 countries. That is the expansion they have already done, and they are expanding. It was founded in 1994. It's a 30-year-old company. And also, if you look at CCL Products, let's find another key detail is they do spray-dried, freeze-dried, agglomerated, roast and ground coffee. I'm sure you just know a couple of the varieties, but if you're in the B2B business, these important varieties also come in, to each person to their coffee preference, as I say. But apart from the product range, the company has 4 factories. 2 of them are in Andhra Pradesh. One is in Switzerland, and we are talking about Vietnam. That's the newest addition to it, and the way they are ramping up their capacities is something which the street is eyeing on. Also, talking about the company is serving more than 400 plus clients, and also if you are a D2C consumer, their own brands are also there where the consumption numbers are high as well. They have expanded the direct distribution reach to almost 140,000 touch points, and that is a strength or the moat. It's the distribution. Above that, they are adding their own brand as well. So it's pretty much interesting for CCL Products, the way the company is at its inflection point. Now talking about the B2C business, जब भी consumer का business आता है तो खर्चा ज़्यादा करना पड़ता है. That is what's happening here. The margins over here, they are trailing the company level margins. Remember, company was a B2B company and now it's going to the B2C segment also. And because of that, initial expenses are high on the B2C segment, and the higher reinvestment and brand building spends also comes in. So definitely there will be a little bit of pressure going ahead, at least in the margins and maybe on the return ratios as well, क्योंकि इन्होंने capex में भी खर्चा किया है. But coffee market impact, what's happening here, and it's a very beautiful coffee graphics made by my team here. The May Arabica coffee prices, they have risen, but not so much, but yes, definitely on the positive side, that's up almost 1%. Other key detail also, let's talk about the demand supply. The New York Arabica coffee prices, that's at its 3-week high levels on Monday. Means that's the recent price which you are talking about. So yes, the global coffee prices are on the up, and the inventories, that's at a 5-month high levels which we had seen on Monday. Also, apart from this, let's look at the Robusta coffee inventories. That is sitting at almost 3.5-month high at the start of month of March. Remember, all Brazil and other nations also are producing coffee, and fresh harvests are coming, and when the fresh harvest comes, the pricing generally comes down because there's a more supply in the market. But CCL Products has been a winner in the Q3 numbers, very strong numbers, and they've stated that the coffee prices, they have also corrected between 25 to 30%. One thing which led to a margin upgrade also for FY26 was the margin beat. That was almost 120 basis points of up move coming in. But it's just not the story of the margins. The operational strength which was there, that gave PAT beat estimates also, and of course on the revenue front also we saw a good move happening. But let's get into a little bit more details on the Q3 performance. The volume growth was at 20% and the value growth was at 18%. So of course the volume side, remember the company does a lot of bulk work, and that is what we are seeing there happening. Gross debt, remember company has taken a higher debt. There's a little bit of pressure on the return ratios and the balance sheet coming because of the expansion plans. But net there is a gross debt reduction also coming from 2,000 crore a year ago to almost 1448 crore rupees. In the last Q3 con call, management did say they're targeting a 12 to 300 crore gross debt by the end of FY26, and right now that number is around 1248 crores. This is something which is very much important. If you're a long-term investor, this is an important management criteria. The management has reiterated the gross debt of 1250 crores by 31st March 2026. So in some days, we might see this number coming down as well. We'll understand the status and the progress from Shashank, and the current blended utilization, that is around 65 to 70%. This is the utilization levels of the company when it comes to the manufacturing of coffee. But going ahead, of course, the management is expecting this can click in the 80 to 90%, and whenever in this industry you have something at an 80%, your new fresh capex plans start. That's what is being mirrored, at least in their international expansion setup. And overall, this is what we are looking at. 85 to 90% utilization would be coming in the next 2 years as well. So there is a scope of growth, and that's what the management has also stated. But the FY26 EBITDA growth guidance, that has revised upwards. Earlier it was between 15 to 20%. Now you can expect that to go much more higher than the 20% part, and can be ranging, between you could say almost 25%. Now earlier I had spoken about this number, it was just 15 to 20%. So the guidance is going up, expansion is happening, little bit of pressure on the debt and the return ratios, which is obvious it will happen. So this is where CCL Products is actually standing right now. But to give you more perspective and to add more flavor to our coffee, which is a special show called KYC, I'm going to give you some rating parameters. These are the basic non-negotiable parameters which we track: income statement, balance sheet, cash flow. This is the heart and soul of a company. After that, we look at the return ratios also, how things are going to pan out for the company, the shareholding, how much it has moved, are the promoters buying stake, FIs, DIs, what's the action looking like, street cred, कम समय, ज़्यादा समय और बहुत ज़्यादा समय. All these criteria, पैसा कितना बना, that's the most important thing in stock markets. And also the valuations and the outlook is something which we'll be talking about. So 8 rating parameters are there. The first rating parameter let's talk about is the income statement. And yes, the revenue has been a steady compounder. This is very much important. There is always a volatility in this kind of industry, but remember the company has a very fast pass-through mechanism as well, and that's why we see it's a very decent margin setup looking like. The bottom line numbers also increasing step by step, and company is now focusing much more in their consumer business also. So there might be a little bit of marketing expenses, but nevertheless company is moving towards that FMCG portion as well, and because of that maybe the company can demand a valuation of an FMCG company in the next 4 to 7 years, but it's just for the long-term investors. Q3 numbers were superb, and you see the jump happening in the margins. Whether it will continue or not, that's a question. But net all the numbers beat street estimates, and that is something which caught my eye. A very strong income statement move coming in from the CCL Products, so it's a thumbs up when it comes to the income statement. Let's talk about balance sheet. Balance sheet is something which a little bit of concern definitely comes for me. Why? I'll talk to you about that. The borrowings, that has gone up. It's around 1815 crore rupees. The gross debt, company has stated it will be roughly 1300 odd crore rupees. But my concern is definitely there, because if debt is high, finance cost will be high, and because of that the PAT will be impacted. But net the cash reserves are decent. It's around 98 crore rupees. So इसमें working capital इस industry में तो चल जाएगा. But yes, when that expenses are capitalized from their Vietnam plant expansion, we will see a little bit of pressure on the balance sheet, and that is basic mathematics for you. So I've kept it neutral rating for CCL Products. So we spoke about income statement, we spoke about balance sheet, but cash flows, that's also very much important, and that completes the holy trinity of financials. As a student, as an investor, as a stakeholder, you should know. And net operating cash flows has been very decent in FY25 and net PNL. However, this net cash flow, we can see this is an outflow which is happening. This is of course on investing and financing activities as well. That is why the reason I have given is a neutral rating, because operating cash flows is good, but investing and financing flows are putting a little bit of pressure, and that's why a neutral rating comes in. But apart from the cash flows, let's talk about the return ratios. And generally, whenever a company is doing a capex or an expansion plan, largely a little bit of pressure comes on the return ratio. See, over the FY22 and 23, around 15% plus, and that is what, if you get that in terms of ROC, it is very decent and it's actually good. So the company was ticking the right boxes, but then the expansion started coming in, and now it's trying to come at that 12 to 13% part. But after this expansion, the benefit starts coming in 1-2 years. So you can expect that to come back to 15-16, say by FY28 or FY27 end. So makes sense. And return ratios, I would be giving this a neutral rating. But let's talk about the shareholding portion, how things are moving, and promoters have been largely very stable, no movement, and that's a very good point, to be honest. But interestingly, FIs and DIs, it has been largely flattish around 21 to 22 odd %. But FIs is something which I looked at around 8%. This is the mark I'm talking about. That has increased to 10% and 11%. So each quarter FIs are adding stake into the company. That means there is a big conviction in the future going ahead as well. And public, it's largely neutral, 21%. This is too important to you should actually track. So it's a very strong thumbs up when it comes to the overall shareholding for CCL Products. But apart from shareholding, another question is how things are panning out for street cred. क्या पैसा बना इस stock में कि नहीं बना? 1 month flattish. We understand there have been so much changes happening in the industry. There might be positive, there might be negative. But 6 months, it's 18%. Very decent returns coming in. Year to date, 11%. But if you're a long-term investor, congratulations. The stock has given in 1 year 76% of returns, and आपको ये stock multi-bagger बना के दे दिया है. 313% of returns in the last 5 years. So congratulations to the long-term shareholders. The company has rewarded them very handsomely. And because of that, and even in the medium-term, short-term, the company has shown the technical strength despite the volatility in the market. I will be giving this a very strong thumbs up when it comes to the street cred. Now let's talk about valuations, and of course we have taken the company itself and understood at which level the company is currently trading at. The valuation is of course price to earnings ratio forward basis. The peak valuations that went in at almost 42 times when there was a lot of interest and buying happening. Just looking at the 10-year median, it's at 28.5 times. That's pretty much decent, but currently also the stock has shown a good up move and it's holding the premiums in the market. It's around 37 times. So you could say roughly 30 to 40% premium to the average, the long-term average which I'm talking about. It's largely 10 years. So right now, will it be a good time to enter? Maybe, maybe not, because valuations have run up. But remember, the company does command premium valuations globally also last time I checked. And if the company moves towards the B2C segment, the FMCG valuations start coming in, and I wouldn't be surprised that these valuations could start to touch back to 40 and 45 as more and more contribution comes from the earnings from the B2C segment. And of course, globally, they are the leaders in the B2B segment. So largely, it's a neutral rating when it comes to the valuations front. But let's talk about the outlook. That is where the overall momentum lies. The coffee demand, that is still remaining strong, and this is despite the geopolitical tensions. That means if you're having a coffee, you're not changing your daily routine, and neither am I. The global prices, they have all moved actually towards the upper side going ahead, and the new exports from the countries, from the new harvest I'm talking about, that is where initially there was an up move in the geopolitical tension. That might actually come down क्योंकि बाजार में supply ज़्यादा आ जाएगा, वो भी fresh वाला. And that is what the management has also stated in the Q3 con call. But we'll get in more details in the show as well. Let's talk about another outlook. The company is targeting roughly 1,000 crore branded business revenue. ये अपने brand की बात कर रहे हैं. Their own brands which are there, not the ones which they are exporting on the bulk basis. Those brands itself are also gaining a lot of traction. Around 400-500 crores is something business they made in FY26. So it's almost double. So that'll be something to watch out for when it comes to CCL Products. Now the margin guidance has been already upgraded for FY26. Remember, the margins offshot in Q3 numbers, and the Q4 numbers are also likely to be strong. But will this continue? The margin growth momentum in FY27, that's the big question to be asked with the management, and Mr. Challa will be answering these queries to us. Also, the green coffee pricing, are they stable? Last year there was a little bit of instability, and because of that, some business pricing was impacted on the value front. But let's see whether the green coffee prices, are they remaining stable or not. Apart from this, important outlooks, I have given this a very strong thumbs up because in current situation also the demand is showing strength. The price is still stable, nothing to be major concerned about. Why? I'll tell you. Geopolitical side, the price might be rising, but on the other hand, the harvest which is coming, the new harvest from the companies, that might put a bigger pressure in the prices of the coffee in the coming days as well. So two school of thought, and neither or nor, or either or, whichever the way it is, the company will be benefiting. But it's a strong thumbs up when it comes to the overall outlook. But let's revise. एक revise करते हैं KYC ratings की company का value क्या है? KYC show में what numbers have we given, and this is something which I have pointed is income statement is really strong. The Q3 numbers is something which the company proved again. Balance sheet, cash flow, return ratio, there are some bigger investments happening. There is a debt reduction at play. So we couldn't say that, it's really very wonderful. Shareholding I really like because the FIs have been, increasing their stake. Promoters are also holding up. So there is a good, absorption happening in the technical charts. If people who are students of supply and demand, they can relate with me. Street cred, it has been a multi-bagger if you're a long-term investor, and even if you have holding stock for 6 months or a year, you have made money in this counter. Valuations, not very cheap, still at a 30 to 40% premium, I would say, for the 10-year average, but nevertheless, you can still have a look. But outlook, that is where the strength lies. Despite the volatility, the demand is still there for the coffee. On the higher side of my ratings in KYC show, I have given this company 6 out of 8 for this KYC. But to get in more perspective, we will be joined by Srishant Challa. He's the MD and CCL at Products, and he's a second generation entrepreneur and a lawyer by education. That's very much interesting. You run a coffee company and you're a lawyer. More than 2 decades of leadership is there in this global instant coffee industry. And another interesting snippet about Srishant I would like to share with you. He's a gold medalist in corporate law at Nalsar. It's a very hard school to get into if you're a law student in Hyderabad, and also gold medalist in mathematics. So man wearing a lot of hats, but the most important hat is the MD of CCL Products. Now, of course, the first question I would like to ask Srishant is definitely going to be on the global coffee prices. They have risen up. The New York prices went up almost 3-week high as well. And Srishant, I'd like to get you on this as well. And the first query, Srishant, would be, the first question is the global pricing, how those things are changing, and is it actually impacting the industry and the demand? Your views on that, Srishant?
One, because of the coffee prices have been quite stable, to be frank. We were expecting a correction which has taken place, and today the prices are hovering around $3,800 to $4,000 a ton level. They've come down from $6,000, what we've seen about a year ago. We are expecting a further reduction as the crop increases in Brazil, Vietnam, and Indonesia as well.
All right. So, what kind of a pricing we can expect? That you're expecting a downtick in the prices. So, what kind of downtick you can expect in terms of percentage, if you had to estimate?
So percentage-wise, we're looking at maybe a further maybe 20% reduction at least over the next 1 year. So we've been guiding our customers also accordingly to cover cautiously and not to be too aggressive in their coverage, because we're not expecting a huge increase anytime soon.
That's interesting take on the pricing. But anything on the volume front for the industry? Globally, the amount of sourcing which is happening, and the exports are also going across. Any kind of changes in the volumes which you have seen?
So coffee consumption as such is still constantly increasing. So we don't see any reduction in that area. Across the world, the demand is there. It's still growing at a healthy pace. So we're not very concerned about any dips or reduction in any manner.
All right. So be it demand, be it supply, the request for coffee is always there throughout the world. But let's look at the debt position also, Mr. Srishant. The gross debt actually was around 2,000 crore last year. Now it's down to almost 1448 crore rupees. Further debt reduction plans we can expect going ahead, and if yes, what could be the ballpark numbers?
So right now for this year, we are still looking at maybe around 1,300 levels or so. In the next quarter or two, we are hoping it will come down to less than 1,000 crores of gross debt.
Right. And moving on, the capacity utilization, that seems to be around, the current blended utilization is 65 to 70%. Correct me if I'm wrong. This number, is this correct? And what kind of growth you can expect in the next 2 odd years, Mr. Srishant?
So yes, this number is correct. So we've just recently doubled our capacities about a year ago, and that's one of the reasons for the debt as well. And our intent also is to gradually fill this capacity over the next 4 to 5 years.
All right, so 4 to 5 years is something which you spoke about. Last time we spoke about the guidance also. The FY26 EBITDA growth guidance was revised upward. Guidance is now approximately 25%. Earlier it was 15 to 20%. And seeing the current global scenario, will you be sticking to these guidances, or is there any going to be a change in the guidance? Because you mentioned about the demand that is still remaining strong.
Yeah. So, for this financial year, the guidance of 25% is intact. In fact, we might do a little better than that as well. For next year onwards, we are still targeting. Typically, we look at a 15 to 20% growth year on year. So, for the next couple of years at least, we are quite confident that we should be able to achieve that.
And what will be the targets for FY27 if you talk about the value or the volume? Any ballpark figure for that?
So we are value-wise, there could be a slight reduction because of the green coffee prices coming down. But volume-wise, we are still looking at that 15 to 20% volume growth. So the better way to track our company is to look at the EBITDA growth more than the top line growth.
All right, so top line growth is something which we'll be looking out for. But green coffee price environment, is it materially more stable versus last year? What's an update on this green pricing, green coffee pricing right now?
Yeah, so the pricing, like last year, we've seen around $6,000 a ton, and there was a lot of fluctuation last year. But now with Brazil throughput increasing, Vietnam crop being quite good, Uganda crop also was quite good. So keeping all these factors, there has been a correction downward. Now we're at around 3,800 to 4,000 levels. Over the next couple of months, we are expecting the further correction to be there as well.
That's pretty much interesting on that. But another question I have, Mr. Srishant, is the Vietnam operations. The new assets ramping, that's also being planned. Any kind of yearly, year utilization, it's still a bit low. What's the outlook for the Vietnam business right now? Is this picking up, or you're going to wait it out as the geopolitical tensions are still there?
So actually, we've doubled our capacities both in India and Vietnam for strategic reasons. And even when we saw the tariffs from the US coming in, initially when India was at 50% duty, we were supplying from a Vietnam facility which was at 20% duty. So strategically, because we had that extra capacity, we were able to adapt to the changing circumstances. The Vietnam plant was also set up mainly to target the Asian regions. So that is what we are doing. So the capacity ramp up is taking place in both units, and it's growing at the pace that we've expected.
Right. And for your, of course, the private level and the D2C segment, that is where there was a lot of bullishness. Last time I spoke with you around a year ago. And so how much things have changed and outlook ahead for these segments, for Continental Coffee and your private label?
So the response of the brand has been quite good on a pan-India basis. We are right now in the number 3 position. In a couple of states, we've already reached a number 2 position. And we are looking at further doubling down on our branded business. This year, we had projected around 450 crores as a branded business, and we are on track for that. Overall, India business was supposed to be around 650 crores, so we are on track for that as well. And next year, we are targeting hopefully closer to 1,000 crore.
Okay, that's a very big statement. 1,000 crore you're tracking in terms of revenue for your branded business. That's an important update coming. Thanks a lot, Srishant, for joining in and giving us entire views on the industry and the company's growth plan ahead, and best of luck for the future.
Thank you.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
एनडीटीवी का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो तभी।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
इट्स ओके यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a
Asian markets and Dalal Street cheered. True signals. US President Donald Trump signals that the war in Iran may be pretty much over. Meanwhile, Iran's deputy foreign minister hints at a truce if it is assured it won't be attacked again. Markets cheer the possibility of a de-escalation in the Middle East war. Nifty jumps more than 200 points. Sensex soars over 600 points. Most major sectors in the green, with autos in top gear. IT bucks the trend. A shortage of commercial LPG cylinders has triggered alarm across the hospitality sector, with restaurant associations in Maharashtra, Tamil Nadu and Bengaluru warning that eateries could shut down if supplies are not restored. And in Middle East conflict hits LNG flows in India, government sharpens focus on priority gas allocation to sectors like fertilizer, PNG, LPG. The Petroleum Ministry constitutes a committee to review the representations for LPG supply. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar, and let's take stock of the markets today. And of course, the de-escalation signals have really cheered the Indian markets, and Nifty 50 has been hovering comfortably above the 24,000 level, a level that it had long forgotten in the last few days of trade. So at the moment, comfortable, but it has also lost the top position of crossing and breaching the 24,300 level. In the last few minutes of trade, there has been some bit of shave off from the top in terms of Nifty 50's numbers there, and it's hovering around 24,200. Let's also take a look at the internals. Well, autos are performing very well. It's bank index which is outperforming the key index Nifty by a huge margin, and also the broader markets like mid caps and small caps are the ones which are outperforming the key indices by a huge margin. When we look at the IT sector, it was really bucking the trend and contra call in terms of yesterday's performance, when it was the only sector which was in the green, and today it's exact opposite. While all other sectors are in the green, it's the IT sector which is showing some bit of weakness there. So it's a role reversal of sorts that is being seen. When we take a look at the Nifty 50 contribution, well, it's the top banking names. Remember, banking is also the quasi-investment for the economy, and therefore HDFC Bank, ICICI Bank, Axis Bank, and some of the financials like Shriram Finance are really doing extremely well. But one word on crude oil, as crude oil prices ease because of the tensions now looking de-escalating, and also more reserves being promised by the global G7, as well as the words coming in from US. Reliance Industries is one of the top losers, along with Infosys today in trade. All right, Rohit Agarwal, who's a senior executive and vice president and equity fund manager at Kotak Life Insurance, joins in now with his expertise on the markets. Rohit, markets have been quite volatile. Today, there is a huge amount of recovery that is being seen. But how do you read into a very, very dynamic situation?
Yeah, hi. Well, as you rightly said, it is a very dynamic situation. Yesterday morning, when the world woke up, we saw crude hitting 180 to 120 Brent, and we saw a sharp reaction in the Indian markets. Today, as we woke up, we saw the sub $100 kind of handle, and right now it is somewhere between the mid 90s. I think this volatility is here to stay, and it is going to be extremely difficult to take a very clear view. It is not just about the crude. We have to keep in mind that because of what's happened to some of the strikes that have actually happened, gas will become a bigger concern than crude, and not just the crude price, because we've already seen some curtailment, some pullback to gas allocation in some of the very critical sectors. Obviously, the government will need to prioritize gas consumption and gas availability to the priority sectors like agriculture, like auto. But the consumption sectors like hotel, like restaurants, like AC making, all of that can start to suffer if we do not see supplies easing off or supply coming back to stream in the next 10 to 15 days. So I think it is not just about the geopolitics. It is not just about the war. We may come to hear that Iran is now not able to create or cause more damage, and that US is causing quite a lot of damage. We may hear that they are coming on the negotiating table, but what we actually need in the next 10 to 15 days is for gas supplies to start resuming. Otherwise, we will have to start looking at some kind of lower growth for India as a whole.
All right, so that's a big statement, Rohit. The economy getting impacted because of the resources-led supply chain constraints that we are dealing with. But how do you play the market in this scenario? And given the oil price volatility that we have seen, the gas shortage that we have seen, and the two sectors cutting across various sectors, impacting either transportation or raw material for several other sectors, how would you assess which sectors are a no-go or a definite buy opportunity at this particular time?
Well, historically, if you look at wars and look at a view from a lens which is after 12 months or so, you always tend to make money. However, when you are in the midst of a war, it is very difficult to say which segment will get impacted a lot. But if you look at what's happening in this kind of situation, obviously because oil has gone up, because gas has gone up, because there's a constraint in supply, we can clearly see that the consumers of feedstock, which have oil and gas as their feedstock, will get impacted. However, some of the other sectors which are more top down or macro, which is to do with a higher inflation, higher fiscal deficit, and hence those sectors which is BFSI, which get impacted, I think that gets reversed pretty quickly. As soon as the war gets over, or we get a whiff of lower oil prices, or we get a sense that war is coming to an end, or we get a sense that it may linger on, but the impact will not create any damage anymore. Hence, I think BFSI, which has got hit a lot because as soon as the war news came, oil went up, the banks, PSU plus private and NBFCs started to correct. I think there the pullback will be pretty fast and swift. The areas where pullback may take longer is what I again explained is the users of feedstock which use gas or some derivative of crude as feedstock where they will get impacted for longer. However, if supplies do come back on stream in the next 15 to 20 days or max a month, then these sectors will come back. Otherwise, BFSI is an easy sector to go and buy. Some of the users, especially consumer facing, will have an issue because they do not have feedstock, clearly. Yeah, and that will become a challenge even if the war stops because those taps cannot be opened overnight. A war is very different than a tariff. A tariff can be reversed overnight and things can change.
Yes.
But the damage that has been caused to the facilities, the gas storage facilities or the gas facilities, that does not come on stream just because the war gets over. That will take its own time to come back on stream. So we'll have to assess the damage on that side. If that doesn't come back, we'll have to shave off 25 to 50 bips from our GDP growth estimates. Otherwise, I think banking, and then obviously as the war news trickles in that it is likely to get resolved, the beneficiaries of lower oil prices is the one that you should be looking at. Maybe some stocks, maybe some other FMCG where they have got hit by higher crude, derivatives of crude, wherever it is, but not industries which use direct feedstock as crude. So that not crude,
all right,
but
so
gas.
that's a great differentiation and gives a sector-wide view on how to play the market with respect to the gas as well as oil price uncertainty. Now, my final question to you, Rohit, at this point would be how to play the market and how much of cash conservation would you really suggest at this particular time? Because looking at the earlier flip-flop scenario when it comes to the US global, discourse, do you think that volatility is going to really continue on various fronts?
Well, volatility is likely to continue. However, the markets are no longer very expensive. Okay? If you look at the last 18 months or so, due to various reasons, India has corrected and underperformed the global and especially emerging markets. Countries like Korea, Taiwan, China have massively outperformed India already in the last 18 months or so. So the Indian markets, which were trading at 2 standard deviations above its average, are now down to 1 standard deviation or little lesser. So the markets at 20x odd, give or take 1 year forward, is not in a real expensive zone. Having said that, one can argue that the earnings expectations from the market, especially from the say Nifty, is also early double digits. In that case, should it trade at 20x? But I think historically, given that India has grown its earnings at 12 to 14%, 18 to 22x multiple is a fair multiple because growth is there. Hence, markets now are not very expensive. However, given what's happening on the war front, if oil were to go above 100, stay there at 100, 120, then there will be an impact. Otherwise, it is time to buy the markets.
Yes.
Indian market has now shifted from a sell on rise to a buy on dips market.
Right.
Even mid and small caps have seen quite a lot of correction, especially quite a few stocks which are doing all right. And now I think it is time to start gradually getting into the market and not be afraid of what's happening around, because what we believe is even if the war were to linger on,
Right. We got right. No. So the voice is clear that the market is not looking very expensive at the current moment. So there can be gradual buying, is what you're saying. But of course, cautious approach when it comes to the overall volatility as well as uncertainty. That point very well taken. Thank you so much, Rohit Agarwal, for joining us, and more talk for probably another day. Thank you so much. All right, let's also focus from the equities onto the rupee side. And yes, huge amount of volatility when it comes to rupee. Remember that yesterday rupee has touched its record lows, and today a huge amount of recovery is getting done, about 92 rupees and 6 paise against the dollar currently. Let us also talk to one of the forex experts to get more sense on the rupee movement from here on. Abhishek Goenka, who's the founder of India Forex and Asset Management, now joins in. Abhishek, good to have you on NDTV Profit. How are you seeing the recovery path for rupee? Is it stabilizing around 92 rupees per dollar? Is that the level that we are looking at now?
Hi, Nisha. Thanks for having me. Well, India is having a tough spot, in the last 2 months. Earlier, it was the earnings slowdown, then FII outflows, then the tariff, and now the war, and with that, the oil prices. All these factors are relevant for India, and somehow these things have not worked in the last few months, and we are getting one after another hit. Having said that, when we say that the pendulum moves both sides, and this time around we are on the wrong side, where a lot of negativity is there in the market. Equity is falling, FPIs is selling, and the oil is above 100, which has always been a nightmare for India. Having said that, historically we have never seen oil staying above 100. The global forces start acting. G7 would start having a coordinated, work towards bringing the oil prices down. So personally, even though the momentum is about rupee weakness and US dollar strength, because globally also US dollar has got very strong. But I've always been an optimist, thinking that things would improve as valuations are getting more lucrative in Indian markets and war will fade out sooner or later. And I think I do not expect the rupee weakness to keep continuing like this. The margin of safety towards rupee strength is improving. And one matrix that we clearly track is the real effective exchange rate. In my career, I've never seen the real effective exchange rate going all the way to 94, 95. It used to be around 105. What it means is the dollar is broadly weakening against all the major currencies. The Asian currencies are not getting as weak as the US, as the Indian rupee.
Yes.
So sooner or later, it is going to course correct.
Right.
So in short term, Disha, there could be some pressure on the dollar rupee, but I feel that in the medium term, it's very much possible that we could see levels of 90 and below.
All right. So by when are you expecting those kind of levels, Abhishek? And what factors will drive it?
I think the most important factor for rupee is oil. Time and again, if we see the oil stabilizing below 80, then obviously there is no reason. The tariff thing is not a big problem now for India. So first is oil. And second is, I think if Indian valuations also get very lucrative, like your guest was saying, 20p is the valuation if it comes to say 18, another 10% down. I don't see any reason why the FPIs will not come back. And then again, we could see the flows coming in and the rupee might get stronger. So 1 rupee on the upside, $2 on the downside. From a range bound perspective, if things get really well, then we should see levels below 90.
Right. And 92.35, the lowest levels that it touched, Abhishek, just your final word on that. Do you thought of Forex, that is a worrying level even for the RBI?
So Nisha, Well, no one is an expert in these markets. Markets are giving us shocks every single day. But, RBI is definitely having a tough time right now. They are selling dollars, reserves are getting used, and they are running short positions. They have to manage liquidity, growth. At the same time, the US 10-year is not inching down. So we have a interest rate difference between US. If the US rates don't come down, obviously there's a pressure on the flows, debt flows. So RBI is definitely having a tough time. Is 90 to 30 a worry? No. We still have a lot of reserves, and they are intervening slowly and steadily. What they have to possibly do is that whenever rupees down, they're building the reserves again. So short term, definitely there is a lot of struggle for the central bank.
Yes.
But I always believe, and I've always seen that if central bank wants it 2 rupees down, rupee comes 2 rupees down. And time and again, whenever they have intervened at thin liquidity, they have brought the rupee down with a jerk.
No. So Abhishek, clearly worrying levels for us is when RBI has to intervene and also, arrest the fall of rupee. But lots of takeaways on rupee movement from you. And as you rightly pointed out, with crude price, going down, rupee also is moving a little bit in that tandem because crude oil price is a big worry for rupee as well. Thank you so much for joining us on NDTV Profit. Let's move on to another important development that we are tracking today. LNG prices sending shockwaves across many sectors, from power and fertilizers to even steel, chemicals, as well as even city gas distribution. Now, the exposure varies widely, but the impact could be meaningful for several companies. Remember, in fact, Mahima, my colleague, is standing by with all the sectors and companies which are most vulnerable because of this factor. Mahima, take it away.
Right. So, overall, shortage of LNG will have a widespread impact on a lot of sectors because a lot of sector consume LNG for the production that they do. For power to start with, the Torrent Power, around 56% of the current generation is gas-based, and that could impact their overall production. For NTPC, that is around 7% in terms of the current generation is gas-based, and for Tata Power, it's 1%. In terms of where fertilizers go, natural gas, often imported as LNG, is generally serves as a critical feedstock. 70 to 80% of the production cost is from that LNG. So counters like RCF, Chambal Fertilizer, Coromandel, etc. Could get impacted because of this. Petrochemical and refining oil marketing companies are pivoting towards PNG, that is petroleum natural gas, to diversify from traditional liquids. All of these companies will be in focus on the back of that. IOCL, HPCL, BPCL, RIL, GAIL, for that matter, controls 70% of India's natural gas transmission market and 50% of gas trading as well. For steel, JSW Steel uses natural gas at the Dolvi plant, but has actively kind of worked to reduce the dependence by reducing the usage of LNG over coke oven gas. Tiles and ceramics companies like Kajaria, Somani, Sera Sanitary will be in focus. There was a note today also saying out that any 5% increase in cost could impact the EPS by around 5 to 7%. Some other names that could get impacted include chemical names like Aarti Industries, Tata Chemical, Gujarat Fluorochem. You have textile companies like Arvind, Welspun, Vardhaman Textiles, etc. EMS players like PG Electroplast, glass companies like Borosil, pharma companies like Zydus, Alembic, Torrent Pharma, etc. could also get impacted. So this is the overall view of how widespread impact and ripple impact that LNG shortage can have on the Indian manufacturers as well as different segments.
All right, Mahima, thanks so much for getting us the entire list which is getting impacted because of LNG shortage. And with India's LNG flow hit due to the Middle East conflict, remember, government is working on to optimize the gas flow to the industries, including, remember, the priority segments such as fertilizers, PNG, LPG, etc. In fact, my colleague Sharad is here to share more on how the government really plans to allocate these resources to allay any fears. Tell us, Sharad.
Thanks a lot for that, Nisha. But largely we see there's a big dependence coming in, especially in the domestic PNG industries. The 6-month average numbers, if you look at it, 100% of that is having gas consumption. CNG, LPG production, pipeline compressor. These names sound very technical, but this is a part of everyday life for most of us. But tea industries, that's a bit on the lower side. The 6-month average gas consumption is roughly 80%, and manufacturing industries also comes in. That also remains at 80%. But when we start coming down, fertilizers comes in. Of course, fertilizers have other energy sources also which dictate the price. But if you just take the gas component, that's roughly 70%. Some of them are, of course, imports also. And oil refiners, they also have roughly 65% of this gas consumption coming in. So it's just not the crude oil, but the gas also which is very much important for the industries, domestic and commercial usage as a whole.
All right, Sharad, thanks so much for getting us all those important details. Now let's focus on one important word really coming in, an important commentary of sorts. FII growth is likely to really come with a 15 to 17% earnings growth in the upcoming quarters. That's the word coming in from Swanand Kelkar, who, remember, is the managing partner of Breakout Capital Advisors. While speaking to NDTV Profit, he shared his comments, and also adding to this, he even highlighted the key challenges in emerging markets like India. Let's listen in.
Big picture construct in India versus emerging markets was clearly skewed towards emerging markets, as I mentioned. Now, there are several reasons why people attribute this underperformance to, but I think the core reason is that the earnings growth versus what is available elsewhere is not as attractive. That is the simple answer, right? And once that is happening, then you have ancillary, you start to think about ancillary irritants like there is no AI play, we do not have commodities, foreigners need to pay taxes. All these things are not new, really speaking, right, from an Indian standpoint. These are all, I would say, kind of backfitted answers. The core issue is that you are being asked to pay 21, 22 times PE for a 10% earnings growth. And that is just hard to pay when other parts of the world are looking reasonably attractive. I think that's the core FII issue as well. So I'm sure at some point in time, why are FII selling? And I have had this discussion with n number of asset allocators. So I think the big hurdle is that, yeah, we understand the long-term story, great domestic market, there are enough and more themes. But for now, I need to cover my North Asia, which is Korea, Taiwan, China, not so much China, but Korea and Taiwan. And also India is not a beneficiary, unlike some other emerging markets, of the commodity event falls. So in emerging markets, sorry, just to digress a bit, there are two broad stories which are playing out. One is the AI beneficiaries. So the capex spending from the hyperscalers in the US, who benefits within emerging markets is the foundries, the memory, and all those things. And the other beneficiaries are countries which are net exporters of commodities, because commodity prices in general have done well, and that generally trickles down to the domestic economy over time. So if you look at South Africa, if you look at Brazil, large parts of Latin America, all that has done well. The AI beneficiaries in North Asia, which is Korea, Taiwan, they have done well. Unfortunately, India does not seem to be at the intersection or even partly in any of these places, which is why the FII interest could be at the moment lower. But the core reason which I mentioned, let's say we are here a year later and India has printed a 15, or we can see a 15, 17% earnings growth. I would be surprised if the FII flows would still be negative.
All right, take a look at Nifty 50 very quickly. 24,150 odd levels has shaved off about 50 odd points in the last 15-20 minutes of trade. So keep an eye out on that sell-off that is taking place a little bit on the higher side. So sell-on gains probably seems to be the momentum. With that, it's a wrap on markets at 12. The other shows will take the market action forward. Keep it with NDTV Profit. Thanks so much.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to.
Hello and welcome back to NDTV Profit. You're watching, trending stocks right here at 12:30. It's me, Puneet Zaveri. With me is, of course, Sharad Dubey. And over the next half an hour or so, we'll try and continue putting focus on some trending stocks that should be on your radar today. But Sharad, before we do all of that, what's the current status of the markets? Because it's been a very volatile day yet again today, but a much positive one compared to yesterday.
Exactly. Good afternoon, Puneet. And largely we see a good up move coming in, especially the gap up opening was there. But it seems like the Nifty expiry is at play again. A little bit of correction from the day's high. But nevertheless, we'll take the up move coming in. Nifty Bank also, let's see how the overall setup is looking like. And largely, it's much better than Nifty going ahead. It's up almost 1% and an up move of more than 650 points are coming in. But as of now in the market pit, what are the key triggers you should be watching out for? The first one is definitely going to be on the Nifty. It's a relief rally at play. Remember Trump commentary and the crude reversal. That is bringing cheers to the market. These are the two most important points. But the question is, Will this rally last? Because there's a volatility on the expiry day today as well, and we are already seeing that. I pointed out earlier with Puneet. Nifty did see a good bounce back from yesterday's congestion level of 23,700 to 23,800. That becomes a long-term level to look at. Key support levels at the 200 DMA comes in for Nifty Bank. The resistance level at the top can be at around 57,000 odd levels. We had mentioned about the buy the dip strategy as well, but interestingly, India VIX has dropped 15%. Now it's below the 20 mark, or near that mark we can see. So of course the volatility has come down, and this is a surprising element. An expiry day, but volatility dipping. Broader indices are seeing good buying, value buying, and the technical reversal is coming. And for the folks who are tracking the macro indicators, rupee has strengthened and the bond yields have also dropped as well. So that signifies stability coming back to the markets, and risk off sentiment which is there. There is a reduction happening slowly, but yes, nevertheless, geopolitical tensions are still there. A lot of questions need to be asked. But moving ahead, the focus is of course going to be on European market opening today at around 130, 140, and the US futures, how they react, and that might shape up the last hour of trade. But this is where right now we are standing at the market's junction right now. Over to you, Puneet.
Well, thanks so much for that, Sharad. But definitely there are some key aspects that we have on our watch list today. And, let's start with the OMC counters. Now, the oil marketing companies are all in focus. We've essentially seen an intraday reversal for a lot of those counters as well. Let's pull up the watch list now and give you that perspective. And for crude, aviation, tires, as well as fertilizer stocks are all in focus as well. We've seen the war sentiment improve with what's happening in the global factors, with some comments from President Donald Trump, and you're seeing that on your screen as well. In terms of the pipe stocks, Astral, Supreme Industries, all are in focus today on the back of what we've seen, an increase in the PVC prices. The stability of it will be something to watch, but for today, all of them are up and about in the trade. Idea Forge is the other one. NATO drone training in the US is something that we're tracking the counter on as well. When you also look at the other stocks like Dixon Tech, a big approval for the joint venture with HKC. It will now obviously have started off construction there, but the expectation of Q2 FY27 and some volumes coming in from HKC will be a key big approval coming from. Mind you, the Vivo JV is still pending, so you have to keep this counter on your radar as well. Arvind Smart Spaces is the other one where we've seen Pirocha, the Godrej, the name should tell you enough, has bought stake in the company. Escorts Kubota has been upgraded by Kotak Securities to a buy now, although the target price hasn't inched up materially. It's gone up from 3,300 rupees per share to 3,375 now, but gives you a confidence of Escorts that FY26, while being a strong year, FY27 could be another multi-year for the tractors, albeit a lower growth. Redington continues to be buzzing on the back of volume, so is Shriram Finance at this point of time. The Hinduja Global Finance is also the other counter that we're tracking. Let's move on and show you the other key stocks in focus. It has signed an MOU with STC and continues to be in focus. And finally, the Auto Pack is doing well in trade today, was the biggest gainer at around 10:30 in the morning. And Uno Minda is the counter that we're putting our focus on. Jefferies has actually initiated coverage on this particular counter, and with a buy recommendation, target price over 1,300 rupees per share. But that's largely what we have trending stocks in terms of the watch list. But Sharad, what are you picking up in terms of the stocks we have on a rapid fire round now?
Well, thanks a lot for that, Puneet. Joining us is Raja Venkatraman. Good afternoon, Raja. First question is, of course, the reversal which has happened, be it aviation, paint, tire, or even fertilizer stocks. Out of these picks, any of these companies which are looking good in this reversal for a much more medium-term play? If yes, what would these stocks be?
Yeah, when you take a look at the markets overall, we are able to see that the reversal or the rally is only for a short-term play. So considering the kind of scenarios that are emerging right now on the global geopolitical news flow, I would say that all these rallies should be considered only as a opportunity just for an intraday purpose. If you're going to consider this as a dip buying opportunity, I would say that we are still a couple of days away till we achieve some clarity. So I would say that at the current juncture, you could treat it as an intraday play, and out of that, I find that the tire stocks looks to be interesting. So from that, I would like to go with Apollo Tire, because I find some kind of bullish sentiment emerging here at lower levels. So I would say that that would be my pick from all the set of stocks that are firing right now.
All right, there's a good reversal happening and a very interesting theme coming in. But PVC price rise reports have also come in, and Astral is there, your Phenolics Industries is there, Supreme Industries is there. Out of these three stocks, which is looking good on the charts, Raja?
Yeah, like you rightly said, the PVC pipes are showing some bit of momentum here. And yes, Astral did move well a week ago. And the current decline which we saw based on the geopolitical news flow has actually given us an opportunity to enter Astral. So I would say that Astral is a good mover, it's a fast mover, and this kind of dips is seen in Astral. So Astral can be considered as a short-term bet. And out of the names which you mentioned, I would place my bet on Astral.
And a positive corporate development coming in for Dixon Tech. The stock, of course, had some overhangs, but today itself, stock is doing well in the trade. Some volume pickup also. What are the key levels to look out for, Raja?
Yeah, see, Dixon Tech, I have always believed that it has lost its charm over the last, I would say, 6 months. And every time it is, going in a state of recovery, actually, there are exits that are happening at the current juncture. So I would not advocate venturing into Dixon Tech. At the levels of around 11,000, there is also some strong value area resistance there. So I would say that it's best to avoid the stock at the moment because there are other opportunities available.
Okay, so avoid is coming in for Dixon Tech. Your views on Escorts Kubota? There was a brokerage upgrade also, and it seems like Auto Pack also value buying is coming across the counter. Your views on Escorts Kubota?
Yeah, Escorts is definitely a good bet, and over the last few days, they have definitely witnessed some decline. But I would say that the declines are now settling down, and this would be a good point to enter Escorts. Because I feel that over the next 6 months, a target of around 4,000 is possible. So I would say that this is a good time to enter because the supports are getting defined.
Is a target of 4,000 coming in for Escorts Kubota. But last one, Uno Minda, there is a brokering upgrade as well as a JV tie-up announcement. Your views on that?
See, Uno Minda is always a hit and miss story, and there is always a selling pressure in this stock. So now, considering if you are a futures trader, then all that is fine. But then, if you are going to look at it from an investment perspective, then again I would like to remain on the avoid side for Uno Minda. Even though there is a brokerage upgrade and even though there are positive news flow, the stock has not shown that kind of momentum here.
Okay, so very selective approach in our rapid fire segment coming in from Raja. Thank you very much, Raja. Always a pleasure to have you on our show. You giving us important technical views. But moving on, Puneet, Dixon Tech has been buzzing in trade. Of course, important news flows are coming in. What are you picking up from this counter?
Well, definitely one that's finally seen an up move after a long time, and this is on the back of approval for the joint venture with HKC. Now, this is a PN3 approval received by MeitY. And it is something that the company had already guided for as expected in Q4. And now that it finally has come, and mind you, we are still awaiting the approval for the joint venture with Vivo. It's an important part of, its plan to have margin accretion over the next couple of years. But to talk more, if this is the right time to look at this particular counter after the volatility that we've seen, we've been now being joined by Ms. Renubet Pugaria. She's a Senior Vice President Research at IIFL Capital. Ms. Pugaria, very good afternoon to you, and thanks so much for joining in today. Let me put across and pose, the first question then on this particular approval that has come in now. We've largely seen that it is something that the management had already guided us, but the key question then, a lot of numbers being thrown around of a joint venture of 74% stake that the company has in this. What is if the revenue accretion as well as the margin accretion that you are penciling in, just not in the near term, but also maybe in FY28, maybe in FY29, with this approval now coming in for the joint venture?
So point number one, for the mobile smartphone phase 26 was a sunset year with respect to the PLI scheme. So increasingly investors and company also has been working towards what could provide the next leg of cost competitiveness. And Dixon for the last 1.5 2 years has been closely working with various supply chain partners to get a little more deeper into the value chain. And this JV announcement was on the same lines in terms of deepening their presence on the display module side. So the PN3 approval was awaited for a long time, and fortunately it's come around just the same time the plant was expected to commission. So company was expecting to complete the capex and plant commissioning in early part of fiscal 27 itself, so that it goes up and running through the year. And by the time the facility is fully scaled up, it will help to provide cost competitiveness and improve the costing structure and look at smartphone segment. Not just for smartphone, the JV is also for notebooks and tablets as well. So to that extent, on the component PLI, they tend to benefit in terms of the incentive structures, and also the absolute margin on the component side. For example, display module is a double-digit margin profile for them. So while one would say, yes, almost 2/3 of the business volumes, nearly 70-75% would be for captive consumption, this will help to bridge the gap between the absence of the PLI incentives on the mobile phone and to some extent the cost savings coming in from the component level. So the stickiness with customer and the value accretion which Dixon provides will remain sticky with the kind of value addition that they're doing on the component ecosystem for the electronic products.
Ms. Pugalia, is the expectation that this business, while Dixon operates at roughly around 3.9 to 4% margins, with the display business specifically, the asset turns are much, much higher, roughly around 7 to 8 times. You see also margins traditionally for players who operate in this business as around 15 to 16%. But do you expect that this business will also have similar for Dixon as well? And do you expect that FY28 could be a year where we see meaningful margin accretion coming in rather than FY27 at this point of time?
So, well, yes, on the component level side, the profitability is double digit, and I think management also has been guiding for the same. But one also has to look at the perspective that these components, almost 75% plus, will be going in for captive purposes for their own products, which they are assembling on the smartphones as well as notebook side. So as I mentioned, that higher margin contribution that they're coming, not entirely will come to the P&L, but it will also help to bridge the gap and pass on some of these savings to customers and improve the cost competitiveness and ensure stickiness on the business volume. And the remaining a quarter of the business volumes which they will be selling up in the third party open domain, that will directly add up in terms of incremental EBITDA. So while I think the company is definitely optimistic that beyond the cost savings, they'll be able to retain the profitability on the component JV structure, which in their view should help margin improvement. But even if we assume that the PLI extension doesn't come through for mobile phones, this in my view is technically a very strong reason to ensure the cost competitiveness is maintained. So yes, for FY27, there would be some likely impact of maybe up to 50 basis point on the margin side for mobile smartphone PLI, mobile smartphones for them. And that should broadly recover back in 28 with savings coming in from the HKC JV for them.
Right, and Ms. Pugalia, the management has of course highlighted that the longer term target of going from 4 to 5.5% margin continues to be through, and a target that they look to achieve. But could you give us some perspective that at this present juncture, what is Dixon's current bill of materials essentially, and where do you expect? Because the estimate is that it's roughly around 17 to 20% right now. And with the display module coming in, there'll be the first phase of that, and then the camera modules will additionally add that as well. I don't know if all these numbers are already in because the HKC approval has just come in this morning. Could you give us some perspective of where do you see that value addition to go? And is the expectation of 5.5% margins maybe by FY29, is that something that you're penciling in?
No, I am not penciling in my numbers to become 5.5% in fiscal 28 to 29 for the moment. Relatively, we have been more conservative on the profitability side, especially in the current environment where most of the OEMs on mobile phones, especially in the economy segment themselves, are struggling. So to that extent, we have left that cushion open. We need to see how the overall bargaining moves between brands, OEMs, and here with Dixon in terms of give and take on the profitability side. But definitely from the margin dip that we're expecting in fiscal 27, 28, we're expecting margins to improve back to 4. Now, whether that 4 becomes 4.5 will also depend on the kind of volume scale up, which would happen in their main EMS that they're doing for mobiles as well as for laptops. If you look in terms of revenue contribution, the HKC numbers initial years expected to be in 20-25 billion rupees, and thereafter able to scale up to close to 50-55 billion on full scale. So to that extent, the revenue contribution in absolute terms from the component PLI is lower than the kind of revenues that they're expecting from the main OEMs, where typically the margin mix tends to be in 2.5 or up to 3 percentage point level. So a combination of the mix will also vary. At the onset, we would rather look at how the cost competitiveness is improving,
right?
How the company is able to hold back on their customers and deepen in the value chain, rather than looking at optimistic margin numbers at the onset.
Got it. Just as we wrap up, if I can just squeeze in one question on, and if possible, a quick answer as well. The Vivo JV is something that has not come in yet, but do you think that this favorably puts it into a position? I know it's a difficult ask right now, and your current, your target price and your rating on the stock as well.
Well, Vivo and HTC JV both are two different JVs for different purposes. The Vivo JV has been under process. There is no clear yes or no yet. In the analyst and management guidance, it's partially already baked in. So the timely approval of the JV or the under PN3 will help ensure that there are no gaps on the numbers and delivery as we progress through fiscal 27-28. If there are material delays, there could be earnings risk. Or we need to see how does the company maneuver with respect to an alternate route. Instead of manufacturing in a JV format, it could be done on an outsourced EMS business model. Few of those routes need to be worked out, and we need to wait and watch how the company and the management works on those levels.
Right.
We like the name. We have an ad recommendation on the stock with a 15% upside from current levels.
Well, thanks so much for that, Ms. Pogalia, and look forward to our next conversation as always. That's the view coming in on Dixon from IIFL. It's a key counter that's buzzing in trade today as well. But let's also look at what are some of the other trending stocks on Google currently, and let's pull up that list for you now. We have seen a bunch of counters, especially in the auto space, that are buzzing, especially in the EMS space also as well. But Cupid makes it to the list. Dixon, of course, the volume search is looking very strong at this point of time. Mazagon Dock back in favor, and post that 99,000 crore order win that they could get as well. HPCL as well as Asian Paints and some of the other stocks that are buzzing in trade today as well. But Sharad, so is Escorts Kubota, right, at this point of time. What are you picking up on the counter?
Well, thanks a lot for that, Puneet. Initially, there was a bump up. We had actually taken this stock as our brokerage call of the day also at around 905. Interestingly, it's an upgrade coming in from Kotak Securities from sell to add rating. And look at the target price also jumping from 3,300 to 3,375 rupees per share. Now, they have stated that the core drivers are remaining intact for this stock, and the domestic tractor sales, however, are showing mixed trends in the El Nino years. In the construction equipment segment, that business is expected to recover this calendar year as well. Lastly, there is a diversification also at play into spares, engines and agri solutions, which will increase the revenue base, and also the cyclicality which is there in the business that might be on the reduction front as well. So a lot of important developments coming in when it comes to Escorts Kubota, and the stock itself also sustaining that 3% mark in the day's trade.
Thanks so much for that, Sharad. But let me also welcome in Raghvendra Kedia, founder of Prosperity Advisors at this point of time of the show. Raghvendra, thanks for patiently waiting by. A very good afternoon to you. A quick one first on Escorts Kubota. Do you feel that, and do you have a similar view to what Kotak Security does? Is it a good buy at this point, given that FY26 has been very strong? Do you expect that FY27 could be similar as well?
Good afternoon, Puneet. We are bullish overall on the auto space, and specifically with the expectations of a good monsoon reports, the overall two-wheeler space, specifically on the tractor space, sales would do well. And we are bullish on Escort Kubota at current levels, and believe that even at current levels, the stock can give a 15 to 18% upside for a time horizon of 12 months to 15 months. So we are bullish on Escorts at current levels. Broadly, the P multiples are still at moderate levels, and any correction further would also be a better entry level. But even at current levels, one can look at enter for a 15% annualized return from current levels. So the bullish undercurrent would continue in Escort Kubota. It's a buy from current levels.
Devendra, good afternoon. Sharad here. Uno Minda, what's your view on that? Jeffries come out with an upgrade here, and also JV announcement is there. Your views on the fundamental perspectives of this company, especially on the medium to long term basis?
So, good afternoon, Sharad. For Uno Minda, we continue that their export revenue would continue to do better, and the overall pie of the exports versus the domestic sales through two OEMs would go well. Positive catalyst, what we always look in stocks is also the strength in the US dollar, which is currently at 92, 93. So that would be a straightaway bottom line in terms of a margin expansion to the entire export vertical. So Minda, with its very well diversified revenue pie coming from OEMs of India, export, and the upbeat space in terms of the two-wheeler numbers, we believe that its valuation, though might look premium, but with this recent market correction, it's a good buy, and expect a 20% upside in Minda for a 1 year to 15 months investment horizon. So the bullish undercurrent would continue considering the strength in dollar and a very healthy export pie increasing, as also mentioned in the earnings commentary of the stock in the previous quarter's result reportings.
Raghavendra, we leave it at that. A quick chat today, but thanks so much for joining in and giving us your views on a couple of stocks. But the AMFI numbers for the month of February are out. Let me welcome in Alex to give us perspective of what the numbers look like. Alex, over to you.
Well, thanks so much for that. It's a steady state, if you think about it, for the month of February from the mutual fund industry as a whole. And let me take you through some of the key categories. First, and I tend to do this on an ongoing basis, I look at active equity as a category because most people invest into actively managed equity mutual funds. And that category has gotten an overall net inflow of about 25,978 crore rupees. That compares with an inflow of about 24,000 crore rupees in the previous month. So it's a slight improvement, but then you have to also take into account the fact that new fund offers, that is new schemes that have been launched in the month gone by, accounted for about 4,000 crore rupees of those inflows into actively managed equity mutual fund schemes. So yes, there has been a bit of a deceleration in net inflows in the month of February, but the context is important to understand. Remember that Indian equity markets had lost in the month of January and February more in certain cases than they had lost in 2025 as a whole. And so it was a tough operating environment. Of course, the SIP figure is something that you should pay attention to as well. It has fallen from that peak level of above 31,000 crore rupees to about 28,800 odd crore rupees. And so therefore there is a deceleration that is evident there as well. Now, last month, the big talking point, and I said that it was 24-carat magic in the air, and that was because you saw inflows of 24,000 crore rupees into gold ETFs. That hasn't taken place this time around. They've dried up just a tad bit. They're still substantial, but they stand at about 5,000 crore rupees, 5,255 crore rupees to be specific. And the inflows into the multi-asset category, which, as you know probably by now, also includes commodities and gold and silver, has gotten inflows of about 8,476 crore rupees. So those have also slowed down just a tad bit. All told, it's a decent set of numbers for the mutual fund industry as a whole in a tough operating environment, particularly because diversified equity mutual fund schemes have continued to get more money. And here I'm specifically talking about flexi cap funds, which have gotten inflows of about 6,900 crore rupees on a net basis. And that's because people are selling less in this category. In fact, in the sectoral and thematic category, there is still quite a lot of churn. There's gross inflows of over 13,000 crore rupees, but is also outflows of over 10,000 crore rupees, which is why the net inflow is just about 2,987 crore rupees. Decent numbers for the mutual fund industry.
Well, thanks so much for that, Alex, getting us perspective on the AMFI numbers for the month of February. But viewers, that's all the time we have on this show. From myself, Sharad, everybody who put the show together, thanks so much for watching. Keep tuned in to NDTV Profit.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
Where stories are shared, ideas are exchanged, and culture takes center stage.
जब देखते हम लोग तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
इट्स ओके यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi. New Year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad.
Asian markets and Dalal Street cheer true signals. US President Trump signals that the war in Iran may be pretty much over. Meanwhile, Iran's deputy foreign minister hints at a truce if it is assured it won't be attacked again. Markets cheer possibility of a de-escalation in the Middle East war. Nifty jumps nearly 200 points. Sensex as well soars over 500 points. Most major sectors in the green, with autos in top gear. IT bucks the trend. And AMFI data is out. February MF flows in fact show equity resilience, but overall net inflows have normalized as ETFs and gold cools off. Broader market and thematic funds drew stronger money and NFOs are back. A shortage of commercial LPG cylinders has triggered alarm across the hospitality sector, with restaurant associations in Maharashtra, Tamil Nadu and Bengaluru warning that eateries could shut down if supplies are not restored. And as Middle East conflict hits LNG flows in India, government sharpens focus on priority gas allocation to sectors like fertilizer, PNG, LPG. The Petroleum Ministry constitutes committee to review representations for LPG supply. Good afternoon. Thank you so much for tuning in to Lunchtime Trades with me, Shreyansi Singh. And this is the show that's going to get you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a very quick look at the markets. When you talk about Dalal Street, you're seeing a similar picture as to what you saw when it comes to Asian markets. So a 200-point uptick as far as the Nifty is concerned. When you talk about the Sensex as well, about a 500-point uptick is what you're seeing right now. When you talk about the entire list of losers as well as gainers, it's actually IT that is largely on the back foot. So that's one sector that's holding on to a tinge of red as we speak. And oil and gas also on the back foot. What's doing well right now is PSU banks, auto, pharma, bank, realty, and metals, exactly in that order. With that in mind, let's quickly take a look at the list of losers and gainers as well. When you talk about some of the stocks that are under pressure, there's something like a KEI Industries, something like Polycab as well, Coforge, Infosys. Those are some of the counters that are under pressure, and within the Nifty 50 pack as well. Like I mentioned, some of your IT names, heavyweight Reliance also just a little bit on the back front right now. Tech Mahindra, Bharti Airtel, HUL, ONGC, HCL Tech, some of your other counters that are trading with cuts in the red right now, but something like a Shriram Finance is doing well, 6.5% thereabout uptick coming in. On that one, Quality Walls, 3.5% uptick. Interglobe Aviations as well, slight bit of recovery, 3.2% uptick. And it's seeing green after a lot of days after that entire tension on the back of the Middle East war. Concern seems to be de-escalating right now, and there's that entire bit of commentary coming in from Trump in terms of the timeline as well, helping Indigo with that 3.2% uptick. SBI Life, Eicher Motors, Ultratech Cement, and Tata Motors PV. Also, some of these counters that are gaining with gains of about 2.5% to 3% thereabout. But with that in mind, let's also get your quick check going as far as the world of commodities is concerned. So on one side, there's the entire tumble that you have when it comes to oil prices. On the other side, gold prices are advancing and sort of gaining after that commentary coming in from Donald Trump on the war timeline really weighed on oil. Let's also try and get you a better sense of what the week is going to look like from here on. Vandana Bharti, Head of Commodity Research, SMC Group, joins us right now. Thank you so much, Vandana, for taking time out and joining us this afternoon. And a very good afternoon.
Very good afternoon, Shreyansi, and it is really a very good afternoon because everything it is going on normal path, and the crude oil prices it is moving down, which was the concern for the Asian economies, too much now. MCX prices it is moving down, and WTI NYMEX it is moving up. So there is a huge gap between the prices. But yes, it was a very much required step or statement by the Trump.
No, absolutely. And it is a good afternoon, like I said, for gold prices as well, Vandana. Let's start with that and we'll come to crude in a bit because there's a lot to cover when it comes to crude. Slightly less in terms of triggers that you're looking at immediately right now when it comes to gold prices. Let's talk about that advance that we're seeing coming in. This looks like a little bit of mixed haven signals that you're looking at when it comes to bullion. Because on one side, you do have safe haven demand. On the other side, that's that entire picture with oil prices also tumbling. That really seems to be helping gold prices as well.
Yeah, it is money which is switching from one counter to another counter. So the story was a little different because gold is known for safe haven buying. But this time it was crude which behaved like a safe haven buying in the entire world. And because the influence petrodollar is over, but yes, the influence of petrodollar was there. Because of that, we have seen crash everywhere. But yes, dollar index it was in the winning situation, and the money it was going into a dollar index. So because of this de-escalation news, we have seen a slight fall in the dollar index, treasury, and the S&P VIX. And now the market is getting normalized, and now money is switching into gold and silver, and this was the trigger. And this time, gold and silver, it was on the back foot because of the oil margin calls, other market margin calls and all, and because of the liquidation, high liquidation in the market. So now it is already known for the safe haven buying, and the fundamentals were so good that again money is again into this counter, and we are expecting that now the rally should continue up to around 5 to 6% of rise in gold and more into silver, because silver was something which was in high demand, and the manufacturing, it was stuck, especially in China because of the crude oil availability and all. So yes, now silver will get the higher momentum as compared to the gold prices. So 95,
Vandana, absolutely, and that is something that we were sort of penciling in also for the tides to really be turning when you talk about both of these metals. But are you looking at range-bound trades, especially when it comes to gold? I wanted to get a quick sense of that, and then we'll move on to oil.
Sure. 5250, 5260 in dollar terms we are expecting in gold. If we talk about Indian prices, 1,72,000 is the near resistance for this commodity. If we talk about silver, silver is stronger looking at the current scenario. So we are expecting 3 lakh kind of level in silver. And if we talk about COMEX prices, it can touch $97, $98 because the rally was really suppressed.
No, absolutely, and that's something that you're looking at when you talk about gold and silver prices in terms of the price levels also, Vandana. But like I said, we've been waiting to talk about oil because there's a lot to look at. In terms of the top 3 triggers, you have Donald Trump's commentary coming in terms of the entire timeline where he does expect the Middle East war to be nearing an end. Other than that, he's also said that the Strait of Hormuz, traders need to be a little rest assured, because he's going to be sending the US Navy with them if the situation demands it. Other than that, also there's a waiver coming in for certain oil sanctions. So 3 triggers that you're looking at when it comes to the oil markets. Anything else that makes to your radar right now? Or do you think that that is what is dominating price movement?
Yeah, very well explained by you, Shyanshi. And we are expecting now focusing on some economic data, which is coming this week. Apart from that, yes, the concern is that we don't know the real figure, because while crossing the Strait of Hormuz, the shipments, they stop their transponder. So we don't know the real move. And we are expecting that the more flows of tankers between the Strait of Hormuz. But yes, one thing I can say that damages has been done, and it will take a week or month time to get over of this. So yes, the crude oil prices, it has made a higher base for right now. So yes, the prices should get support near 6,500, 7,000, and upside is still near 9,000, because we don't know the mood sense of from any time he can give a strong statement, and it will create a chaos in crude oil prices. So yes, this time crude has made a higher base, and some other triggers can give impact, and this is economic releases. And after March month, the real impact of this war will come, and it will be shown by the data of US and other countries, especially Asian economies.
No, absolutely. And, going forward, I also wanted to try and get a sense of what you think about investors who are already invested should be doing when it comes to gold and silver specifically, whether you're invested through the physical metal itself or through ETFs. You do have volumes in ETFs, by the way, that have really declined when you talk about investors investing in gold as well. So it seems to be that investors are possibly waiting on the sidelines. Is that something that they should be doing at this point in time?
They can accumulate, but for the smaller profit, because I'm expecting 5 to 6% of rise. After that, it should move in a consolidation zone. And yes, people, they book profit in ETF, and other reason was the mismatch between the ETF return and the gold prices return. So it discourages ETF investors as well. But this time, I have checked the movement of yesterday ETF price range and COMEX price range, MCX price range, and it was totally decoupled. I have seen a very little decline in the prices of gold and silver ETF because the market was ready for another upside kind of move. So you should wait for 140, 140, 145 kind of level for gold ETF. If you talk about silver, I'm expecting 272 in silver ETF. So this time they should hold for more because they have already waited for long, and they should wait for this 272 levels, and there they can book partially.
Well, absolutely, and thank you so much, Vandana, for taking time out and helping our viewers out when it comes to that entire outlook, not just when it comes to gold and silver, but also with oil. Thank you so much with that there. But let's also move on, shift focus onto FII growth that in fact is likely to come with a 15 to 17% earning growth in the upcoming quarters. And that in fact is the word coming in from Swanand Kelkar, Managing Partner, Breakout Capital Advisors. And he's also talking about highlighting some of the key challenges that face emerging markets, the likes of India. Let's go across and listen in.
Big picture construct in India versus emerging markets was clearly skewed towards emerging markets, as I mentioned. Now, there are several reasons why people attribute this underperformance to, but I think the core reason is that the earnings growth versus what is available elsewhere is not as attractive. That is the simple answer, right? And once that is happening, then you have ancillary, you start to think about ancillary irritants like there is no AI play, we do not have commodities, foreigners need to pay taxes. All these things are not new, really speaking, right, from an Indian standpoint. These are all, I would say, kind of backfitted answers. The core issue is that you are being asked to pay 21, 22 times PE for a 10% earnings growth. And that is just hard to pay when other parts of the world are looking reasonably attractive. I think that's the core FII issue as well. So I'm sure at some point in time, why are FII selling? And I have had this discussion with n number of asset allocators. So I think the big hurdle is that, yeah, we understand the long-term story, great domestic market, there are enough and more themes. But for now, I need to cover my North Asia, which is Korea, Taiwan, China, not so much China, but Korea and Taiwan. And also India is not a beneficiary, unlike some other emerging markets, of the commodity event falls. So in emerging markets, sorry, just to digress a bit, there are two broad stories which are playing out. One is the AI beneficiaries. So the capex spending from the hyperscalers in the US, who benefits within emerging markets is the foundries, the memory, and all those things. And the other beneficiaries are countries which are net exporters of commodities, because commodity prices in general have done well, and that generally trickles down to the domestic economy over time. So if you look at South Africa, if you look at Brazil, large parts of Latin America, all that has done well. The AI beneficiaries in North Asia, which is Korea, Taiwan, they have done well. Unfortunately, India does not seem to be at the intersection or even partly in any of these places, which is why the FII interest could be at the moment lower. But the core reason which I mentioned, let's say we are here a year later and India has printed a 15, or we can see a 15, 17% earnings growth. I would be surprised if the FII flows would still be negative.
All right, and there you go. That's the word coming in from Swanand Kelkar as well. But moving on, amid current disruptions faced by the export industry, Commerce Minister Piyush Goyal has provided a major update saying that the government is currently working on insurance-related schemes. Let's go across and listen in.
हमारी रोज सुबह स्टेक होल्डर के साथ भी चर्चा होती है, इंटर मिनिस्टेरियल कंसल्टेशन होती है, और लगातार हर एक विषय जो हमारे संज्ञान में आता है उसमें लगभग रोज कोई ना कोई नए कदम उठाकर, जैसे शिपिंग मिनिस्ट्री ने शिपिंग लाइंस के साथ बातचीत करके शिपिंग कॉस्ट को ठीक रखना, जैसे सीबीआईसी ने तुरंत सर्कुलर निकाल दिया कि अगर कोई सामान वापस आता है तो कैसे उस सामान को जल्द से जल्द कस्टम क्लियर करके एक्सपोर्टर को वापस मिल जाए, जिससे ऑल्टरनेट मार्केट या भारत के बाजार में वो उसको बेच सके। इसी प्रकार से हम और नई स्कीमें जिसमें इंश्योरेंस भी शामिल होगा कि अगर कोई वेसल, कोई शिप जिसमें भारत का सामान जो निर्यातक ने बाहर भेजा है उस पे अगर कोई आहत पहुंचती है तो उसको कैसे हम पूरी तरीके से इंश्योर करके एक्सपोर्टर्स को एक प्रकार से चैन से एक्सपोर्ट करने में सहूलियत दें, वो भी हमारा विभाग बनाने में लगा हुआ है, कंसल्ट कर रहे हैं एक्सपोर्ट क्रेडिट गारंटी कॉर्पोरेशन और अन्य विभागों के साथ। तो एक प्रकार से सरकार 24 घंटे तट पर है। हमारी हेल्पलाइन पूरी तरीके से चालू है, चल रही है और हमारी हेल्पलाइन के माध्यम से हर निर्यातक के लिए हमारे द्वार खुले हैं।
All right, and the government is working round the clock to ensure that there are no disruptions, especially when it comes to exporters. That's the word coming in from Piyush Goyal as well. But on that note, it's time for a very quick break. More news and updates on the other side.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money fan.
Welcome back. Thank you so much for staying tuned into Lunchtime Trades. It's time now to get you some more news and updates. In fact, the government is likely to take up key amendments to the Insolvency and Bankruptcy Code, incorporating recommendations of the Parliamentary Select Committee. In fact, Shrimi is joining in with some more details here. Shrimi.
Yeah, as you rightly said, if cleared by the cabinet today, because this is being taken up by the Union Cabinet in the ongoing meeting, and incorporating all the recommendations made by the Parliamentary Select Committee, this will definitely pave the way for the government to introduce the IBC Amendment Bill in the ongoing budget session. Now, the proposed amendments are, of course, based on the Select Committee by BJP MP Baijan Pandaji, and the committee submitted its report in December during the winter session. Now, among the key recommendations, one being important from the perspective of industry is the stricter timelines for disposal of insolvency cases. Beyond that, they're also going to propose a framework for cross-border insolvency and also a kind of, boost to the formal group insolvency framework. So this entire overhaul of the IBC framework is going to be approved by Cabinet, is what sources hinting at. And this, do remember the fact that the suggestion given by the Parliamentary Committee also proposing greater power for Committee of Creditor to facilitate faster and efficient resolution of stressed assets. I just want to, tell our viewers that this may not make public if there is a cabinet briefing, as government refrain announcing any bill-related decisions, especially when Parliament session is on.
No, absolutely, and thanks, Shrimi, for getting us that entire roundup. So there you go. That's the entire update coming in as far as the government being likely to take up key amendments to the Insolvency and Bankruptcy Code is then concerned. But moving on then, concerns over geopolitical disruptions have prompted the government to push refineries to ramp up LPG production. We bring you a walkthrough from an LPG cylinder go down in Jammu as well, where a monitoring committee is now in place for the non-household segment, and distributors in fact have begun implementing austerity measures. Here's a look at the ground report.
In view of geopolitical disruptions in West Asia affecting fuel availability,
Government of India has taken certain measures. They have already asked oil refineries to boost up production of liquid petroleum gas cylinders so that people do not face any kind of shortage at domestic level. If we talk about India, India is the largest consumer of LPG. 33.51 metric tons annually is being consumed by India. And 80 to 90% of oil and the natural gas is coming from Gulf countries. That's one of the reasons that ever since Strait of Hormuz has been closed, there are so many problems that many countries are facing, including India. That's one of the reasons that government of India doesn't want that any kind of problem to be faced by people here in country. So that's why they have taken certain measures. Right now, I have a person with me. Let me ask him, किस किस्म के ये जो measures दिए जा रहे हैं?
गैस तो ठीक है, कोई गैस की प्रॉब्लम नहीं है,
अभी नहीं है,
अभी नहीं,
गैस की प्रॉब्लम नहीं है। लेकिन क्या कहा गया है, आपको ऑर्डर्स क्या है वो है?
अब पहले महीने के 2 मिलते थे, बुकिंग 2 होती थी, अब तो 1 ही होगी।
अब 1 सिलेंडर दिया जाएगा, यानी कि
25 दिन फिक्स हो गया ना, जो
25 दिन से पहले किसी को नहीं
OTP आएगा, बुक ही नहीं होगा,
बुक ही नहीं होगा,
वैसे तो दे नहीं पाएंगे फिर।
और इसके साथ साथ प्रोडक्शन भी बढ़ाने के लिए कहा गया है?
नहीं, इसको तो कहा गया है कि कम से कम इस्तेमाल होनी चाहिए,
कम इस्तेमाल होना चाहिए। See, there are 2 important measures that have been taken. One is that they want that the protection of LPG to increase, and second thing is that they say that before 25 days they can't give cylinder to any family. That means earlier they used to give 2 cylinders per family. Now only 1 cylinder per family will be given, so that people do not face any kind of problem. Right now, the people here are saying there's nothing to panic. There is enough stock available. Nobody will be facing any kind of shortage. And already they are going to set up a committee so far as the commercial cylinders are concerned. And commercial cylinder right now is available, but they want that at least at the domestic level, and also for many other places like essential services, there should be no shortage. Commercial gas available रहेगा?
कमर्शियल तो अवेलेबल है,
अवेलेबल है,
स्टॉक है, लेकिन अब आ नहीं रही है, नहीं
अभी नहीं आ रही है,
जो है तो अभी स्टॉक पड़ा है हमारे पास।
Alright, then there you go. That's a look at the LPG measures that are being taken when it comes to Jammu. But let's also get you another special report. NDTV reports from Dubai's dry fruit market, where traders are saying that business has slumped sharply amid the ongoing Middle East tensions. Shopkeepers, in fact, dealing in dry fruits and spices, are seeing lower footfall, slower shipments and disruptions linked to the situation around the Strait of Hormuz. Take a look at this ground report.
Well, Dubai is one of the largest exporter when it comes to dry fruits and spices as well. Or if I say that it is also the largest contributor in the global trade, I'll not be wrong. But as of now, the marketers over here, the shop owners over here say that they are not witnessing a heavy footfall over here, and they say that the market right now is facing a very tough situation. I'm being joined by one of the trader over here. You can see there are, a number of dry fruits and spices over here. But let us get a sense from him so as to what he has to say and what is the current situation about the market. सबसे पहले ये बताइए कि फिलहाल मार्केट की जो है वो स्थिति क्या है अभी?
अभी तो हालात बहुत डाउन हो गए, जिस हिसाब से अभी तो वार चल रहा है, जैसे कि ईरान का है, इसराइल और अमेरिका से जो है चल रहा है, और इंडिया का जो है पाकिस्तान से चल रहा है, उस हिसाब से तो बहुत ही मार्केटिंग बहुत डाउन चल रही है।
फिलहाल ईरान और इजराइल के बीच में जो वॉर चल रहा है उसके कारण आयात निर्यात पर भी काफ़ी फ़र्क पड़ा है।
जी, बहुत ज़्यादा फ़र्क पड़ रहा है, जैसे कि ईरान ने अटैक किया हुआ है, अपना दुबई पे भी किया हुआ है, ऐसे कुछ बहरीन ने मुल्क पे, दूसरों मुल्कों पे भी अटैक किया हुआ है। तो अभी ये पता नहीं चल रहा है कि किसकी गलती है, किसी की नहीं।
हमेशा यहाँ पर हम देखें तो कितने लोग आते थे हमेशा यहाँ पर, और अभी कितना फ़र्क पड़ा है, कितने लोग कम हो गए हैं? अभी तो 100 में से 99% जो है कम हो गया, लेकिन 1% जो है इधर के लोकल पर्सन जो इधर काम करते हैं, सेल्समैन वगैरह, वही मौजूद है। अदरवाइज कितने लोग आते हैं? अभी मैं आपको बता नहीं सकता हूँ, मिलियन तक आते हैं, मिलियन तक। रोज़ कितने आते हैं ग्राहक? रोज़ी अगर तो एक ही में अंदाज़ा लगाया जाए तो 20,000 ऐसे क्या 20,000 एक दिन में आते हैं। लेकिन अभी तो फ़िलहाल दुकान जो है वो खाली दिख रही है, कोई यहाँ पर नज़र नहीं आ रहा है। जी हाँ, अभी तो सूरत-ए-हाल आपको पता है कि वॉर की वजह से तो बिल्कुल ही 99% बिल्कुल ही रश चल रहा है। दामों में उछाल आएगा या गिरावट आएगी अब? ये तो दुबई की गवर्नमेंट डिसाइड करेगी, हम नहीं कर सकते। उसके हिसाब से पूरा ट्रेड मार्केट डिपेंड करता है। जी हाँ। फ़िलहाल यदि हम बात करें मौजूदा स्थितियों की, तो इस वक्त यदि ये स्थितियाँ इसी तरह से कंटिन्यू रही, अटैक लगातार होते रहे, तो कितनी बड़ी समस्या हो सकती है?
ये तो कुछ कंफर्म नहीं कहा जा सकता है, लेकिन अभी तो जो है बदलाव इंशाल्लाह आएगा कि दुबई की गवर्नमेंट ने अपील किया हुआ है कि आपस में है ना बात करनी पड़ेगी, तो फिर तो गवर्नमेंट जो है रेट में भी थोड़ा दबाव डालेगा कि ये दुकानदार जो है रेट थोड़ा नॉर्मली में बेचेंगे और विजिटर्स के लिए जो है थोड़ा नॉर्मली जो है पैकेज वगैरह लगा देंगे, तो वापसी ये रनिंग आ जाएगी।
तो नुकसान आपको कुल मिलाकर अभी फिलहाल हो रहा है?
अभी तो बहुत ज़्यादा ही हो रहा है।
आपकी यहाँ पे जितनी सारी दुकान है उनका भी यही कहना होगा?
बिल्कुल यही होगा।
आप कहाँ से हैं?
मैं पाकिस्तान से हूँ। ओरिजिनली ग्रैंडफादर एंड मदर जो है अफगानिस्तान से है। 40 इयर्स बिफोर जो है हम बोर्न हुए हैं पाकिस्तान में। अभी जो है 4 इयर्स मुझे भी इधर दुबई में हो गए।
अब दुबई में आप अपना यहाँ पर सेटअप है आपका?
जी हाँ, सेल्समैन हूँ, वैसे फिर भी बेहतर है।
ऑलराइट, तो देखा आपने कि किस तरह से यहाँ पर स्थितियाँ जो हैं सड़कों पर तो सामान्य नज़र आ रही हैं, लेकिन यदि हम आयात निर्यात की बात करें, मार्केट्स की बात करें, दुबई जिसमें सबसे बड़ा प्लेयर माना जाता है ट्रेडिंग में, यदि हम बात करें ड्राई फ्रूट्स की, स्पाइसेस की, तो यहाँ पर खासा असर देखने को मिल रहा है, ऐसा यहाँ के बिजनेसमैन, ट्रेडर्स और दुकानदारों का कहना है।
Alright, and that's all that we could pack for you on this edition of Lunchtime Trades. Thank you so much for tuning in.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
इट्स ओके यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज करता हूँ।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade, either on the back of price or volume action. But before that, let's see what's on the show today. Firstly, we'll be speaking with the management of Antelope Celan Energy. Now, the stock is one of the major beneficiaries of higher crude prices. Now, crude prices have been quite volatile, but what's the outlook that the company has is something that we will discuss with the management on the show today. When it comes to Hinduja Global Solution, that company has signed an MOU with the UP state, and the stock has touched an intraday high of nearly 14% in trade. Third stock on the list will be VWork. Now, despite the host of positive announcement that is coming in, firstly, they have signed a lease for capacity addition in Chennai a few days back. JM Financial initiated a buy report. The stock continues to remain down 30%. What could be the potential reason behind this is something that we'll discuss on the show today. And Borosil Limited, that stock had touched a 52-week low yesterday because of the LNG news. But given the fact that this new announcement has come in, the stock has bounced back strongly. What could be the way forward is something that we'll discuss on the show today. And lastly, when it comes to Arvind Smart Space, here Adi Firozshah Godrej has bought stake in Buldil. The stock touched an intraday high of 15%. Arvind Smart Space is also in our segment that we'll be discussing with our guest, and we'll also give a setup on what does the company do. Now, if you look at the market, the Nifty, it did open on a strong note, but for the last 1 hour, we have been quite range bound. 24,250 to 24,150, a tight 100-point range is what Nifty has been oscillating. Not much of an action that we are seeing. When it comes to sectoral indices, Nifty IT is one of the top losers. In fact, the only sectoral index to be in red today. As you can see, Nifty Oil and Gas marginally in red, 0.3%. But on the gaining side, we have Nifty PSU Bank Index and Nifty Auto. Nifty PSU Bank is largely led by SBI. The stock is up nearly 1.5 to 1.6% in trade. But when it comes to the small cap segment, Mahima, what's been buzzing there?
So, Somit, overall, if we take a look at the broader end of spectrum, right, both the mid cap 150 and the small cap 250 are doing fairly well. The mid cap 150 is up 1.3%. The small cap 250 now up almost 1.8%, almost at its day's high point as we speak. So good gains coming in the broader end of spectrum, and that's reflective in the advanced decline ratio as well. For specific names, counters, I'll start with counters which are not doing very well because there are not many, right? There's HOEC which is down around 9%, Silver Touch which is down by about 5%. Apart from that, there's Concord Enviro Systems which has been under pressure. Today also down by about 3%, and Hariom Pipes is something which is seeing a downtick of about 2%. But on the flip side, you have a lot of counters which are doing fairly well. Names like, Fabtech is up 16%. You have TVS Electric, which is up 15% as well. Moltech Packaging doing very well, up 13% as well. Premier Polyol is also doing fairly well. Canada Robeco also up 11%. Our system seeing a gain of around 11%. Borosil Limited up 11% as well. We talked about Arvind Smart Spaces as well. There's a lot of fertilizer names, also small fertilizer name also doing fairly well. Nagarjuna Fertilizer up 9%. Some other counters that are also doing fairly well is 63 Moons, Supermills, etc., which are up in that range of 7 to 9%. So that's with regards to where the markets go. But Sumit, Antelope Celan, we've discussed this counter before as well. It's remained in focus on the back of crude oil prices. I mean, before we go on to the management, your quick, if you would like to say as to how the company operates and how crude oil prices impact the company.
Well, definitely, given the fact that the company is into the business of oil and gas exploration, a higher crude oil prices means higher realization, which could lead to higher earnings coming in for the company. But given the fact that crude oil prices have been quite volatile, let's get in the management. Suniti Kumar Bhatt, Managing Director of Antelope Celan. So firstly, to start off with, yes, crude oil prices have remained quite volatile in trade. But given your experience, where are you expecting crude to now settle in, given the fact that there have been some positive news coming in from the geopolitical side?
I think it's a very tricky question from that perspective, because whatever answer you give, you're going to be off on that one. Because it's a commodity that is driven by geopolitics to such a large detail that for us to plan our business, we do not fundamentally use either very high prices or very low prices to decide how we will run our business and make investments. Typically, what we tend to do is we tend to make sure that at a price range we're comfortable. For example, in our case, traditionally we have said at $50 per barrel oil price, we should make investments and get reasonable returns from them. If the price goes above that, So it definitely adds to our bottom line, but we're not making investment decisions on prices that are to the north of $50. What happens for us is we want to make sure that at $50 I get my capital back, and I hopefully get and if price goes up to $60 or so, then I tend to get most of my capital back within the first year and a half to 2 years. Once the capital is back with us, our break-even costs of production, because mostly it is currently onshore, are around $35 per barrel, including all the statutory levies that we pay. So as long as my existing product, as long as the crude prices do not go below $35 per barrel, we will still be making healthy margins, and you will see us being in an investment cycle if the crude prices are to the north of $50 per barrel. Anything else beyond that, we take that as a bonus that comes through, but don't typically plan our business on that being there, because we really have no control on that. We tend to focus on things that we have control on. Because you have seen yourself in the last 3-4 days, it has gone to 120, it is back at 90s. In December, it was at 58 also.
Right, great. You have already set a benchmark for the crude price. That means we now know at least what is your break-even cost and what benefits the company. But on the production side, at least that is in your hands. You have guided for an 1800 plus BOPD of production by March 2026. That is barrels oil equivalent per day. And for first half of FY27, I believe the guidance number stands at close to 1800 to 2200. Is the company on track to achieve this?
So we are pretty much on track to achieve this. I think what had happened is, if you look at the fiscal year 2026, we were there was a little decline that we saw in our fields, primarily because oil and gas fields declined, and we were seeing the benefits of the investments that we had made till that. Somewhere in the middle of the current fiscal year, we started another phase of development campaign, and we started seeing the benefits of that development campaign as we went through Q3 of this year. And then we guided the market that, look, this is going to get us to around 1,800 barrels of exit by the end of this fiscal year. I think last quarter we showed that we were at around 1,500 barrels or so over the last month's run rate. So I'm pleased to say that we are very confident that we will be to the north of 1,800 barrels oil equivalent exit as we'll exit this year. So that seems to have gone well for us, and hopefully the EBITDA margins will be healthier than they were. We typically have been delivering EBITDA margins to the north of 50%, and because we tend to keep our cost control, given we are a small company. So all that is working well for us. Just for a background perspective, while we have oil and gas operations spread across the breadth of India, while Gujarat is our core operating area, core operating zone. Out of the 9 key production and revenue sharing contracts that we have as Antelope Celan, we are producing from 5 of them. And out of those 5, 4 of them are in Gujarat.
Got it, Mr. Bhatt. Mr. Bhatt, Mahima was joining. I just want to understand, your Kyrgyzstan is currently the largest contributor in terms of, where it stands. Just want to understand, how are you viewing this growth, how sustainable it is, and what is the, forward-looking outlook as to how much, growth can you expect from this particular site?
So Kyrgyzstan 2 years back was one of the smallest fields. It is today one of our biggest fields. But what I would encourage you is that you look at us as a portfolio of assets, because it's not a single asset-driven company. We will have fields that will do well, and because we start development drilling in them, and fields tend to decline, we'll get other fields into production. So as long as a group, we are managing the risk within our portfolio well and continue to deliver the growth, that's what we would like to be judged by. Speaking specifically of Kyrgyzstan, as far as Kyrgyzstan is concerned, we just finished drilling 3 new wells, and they are into production. That's what's made it the largest contributor to our bottom line production in terms of production now. The second field where we are in the middle of drilling, which used to be largest field, Brokerage, it's a 10-well drilling campaign that's started there. We have 3 wells already drilled and fracked, and they've just started showing early production. So you should see us ramping up production from pretty much most of our fields as we go through the end of this year and into middle of next fiscal year.
Questions here. Firstly, you did mention you have drilled 3 more wells in Kazakhstan. So any more additional drilling locations that remain in Kazakhstan? And you also mentioned that Brokerage you have started production. So the fracking activity is over, right?
No, yes. So effectively, in Kazakhstan, while we have environmental clearances for a lot more wells than we have currently drilled, in Kazakhstan we have already we're planning to go to the regulator with a plan to drill another 5 to 7 wells in the field. So hopefully, as soon as we get regulatory approvals, we will kickstart that development drilling, probably to somewhere towards the late part of next fiscal year or the year afterwards. By that time, the current well will keep on adding to our bottom line. In Brokerage, which is actually one of the largest fields from area perspective that we have producing as of now, we have just drilled 3 wells and fracked them. We still have 7 more wells to go, drill and frack. So these 3 wells, after 2 of them have been fracked, and they have started adding production. So we are hoping that all this put together is going us to take well beyond the 1,800 barrel or so. I think what we are guiding is that hopefully we will be to the north of 2,000 barrels or more somewhere in Q3 of next fiscal year.
When you look at your Assam fields, that is the Duarmara field specifically, why is the capital expenditure per well so high compared to other fields firstly? And given the high cost, is it economically viable even if crude settles at around $70 per barrel specifically for this field?
So specifically for Duarmara, the reason it is high in capital expense is because what happens in our business that reservoirs and reserves are found at different depths and have their own complexity with it. Cambay Basin and our fields in Cambay are blessed with the fact that we find oil and gas at relatively shallow depths, at around 1,800 meters, 1,600 meters or so. So therefore, the cost of drilling a well is lesser because we are able to drill a well in a reasonably fast time in a month or so. On the other hand, as soon as we go towards the Assam basin in India, what happens is that the wells and the discoveries that are there in Assam, particularly in Duarmara, is at around 4,000 meters. Now, it's not an exact linear science there but as we start getting deeper and deeper, therefore the amount of time that we take to drill these wells becomes more and more, and the kind of technology that is needed is also starts to become complex. So therefore the capital costs start becoming higher and higher. So Duarmara will always be the most expensive onshore well in our kitty till date because this is a more complex well to drill. The Gujarat wells will be cheaper, but so that's always going to play when we make a capital allocation. So if I'm doing capital allocation and I have an opportunity within the Gujarat fields, so the Gujarat fields will always take more capital than the Assam fields. If the opportunity exists. So the critical thing for us is to identify the opportunity and then keep on allocating capital. It is in that part that the oil price starts playing, and we have to determine what is the lowest oil price that we could live with and what's the available capital to us.
Lastly, sir, I believe the company plans around 180 to 200 crore of capital expenditure for, I believe, 14 to 16 odd wells. How much of this will be internally funded and how much of this will be externally?
So for the 180 to 200 crore of capital spend, we are looking at primarily most of it to be internally funded. We might take some working capital help from financial institutions, but for the coming year, and we are looking at primarily to fund it through our accruals. And if oil prices stay a little bit higher, so it might become a bit more easier going forward for us to ramp up to the north of 2,000 barrels or so in the next fiscal year.
Thank you, sir. Thank you for joining us and giving us the way forward for Antelopus Celan. Moving forward, let's also welcome in our fundamental guest, CA Tapan Doshi. Tapan, you heard the management. They are pretty much on track to achieve their guidance, plus higher crude prices does benefit them. So at current valuations, how are you looking at this counter?
Yeah, good afternoon, Sumit. Yes, I do agree. They are in a currently better position. If you see almost they may get a double-digit earning growth in next 2 years also. Again, the Rajasthan field is ramping up. Exploration they are actually doing, and regulatory approvals is the only risk which I can see in this company. And again, the crude oil volatility that we have to see. But overall, if you see, they are having a net cash and ROC is maintaining around 32%, which is quite good. If I see that EBITDA margin, if they are able to sustain around 40-45% of the company may do good in future. The oil output is almost 28.5 to 28% year on year. So that is also good. So overall, yes, company is in a good position. If someone is thinking, I think they can get into this stock now at every dip, or if they are already holding, please hold the stock for a little bit longer.
Okay, all right. So that's the view on Antelopus as well as Antelopus Celan Energy. But now it's time to take a look at the F&O space. And we have Sharad joining by, at least smiling today, on the back of some positive cues coming in. Sharad, over to you.
Well, thanks a lot for that, Mahima. But I guess the smile might not be there for a longer time because there is a volatility definitely at play, but it's still holding up. Interglobe Aviation, Ultratech, Cement, M&M, all of them doing well in trade. But what's not working is definitely Reliance. Last time it was at 0.5%, now it's down more. It's actually trying to drag a little bit of Sensex, but Infosys, Eternal and TCS, all of them are in the red. TCS, interestingly, has hit its 52-week low levels as well. Bankex also, the overall structure is slightly better than Sensex if you look at the total numbers. But whether this relief rally will continue or not, that's the question which we are actually asking. But let's see, which is a good long build-up happening in the counters, and now there is a reversal. Only MCX makes it to the list. So you can see the overall shift is happening in the breadth of the markets, and that's why this list is also not matching. Let's also figure out another important long unwinding that's happening in SAIL. That's around 1%. But PFC, that's a good move happening here in this segment as well. And lastly, I'd like to see the short build-up. And there seems to be a bit of error, but largely these are the stocks which are buzzing in the trade in the F&O segment.
Okay, all right. Thank you so much, Sharad, for bringing us those details. Now, the other counter that we're putting spotlight on is Hinduja Global Solutions. The company's broadband arm has recently signed an MOU with the UP government, and on the back of that, the counter is buzzing in trade today. And we've Jasmeet joining by to give us more perspective on this MOU. Jasmeet, over to you.
Well, Mahima, thank you for that. If you look at this particular counter, the company operates in the IT space where they provide business process management services for the voice and non-voice services as well. If you look at the recent buzz, it comes on the back of the new MOU the company has signed with the UP government. Well, if you look at the overall stock performance, the stock is nearly down 6% over last 1 month, and over 6 months the stock has tanked nearly 26%. And over 1 year the stock has suffered the same way, down about 24%. The recent news is something that's bringing the stock all over in focus, and the stock has touched the intraday high of 14%. Well, if you look at the recent news, company's broadband arm, that's One OTT, has signed an MOU with UP government. While the MOU is for the project Ganga for high-speed internet service across UP. While in terms of the project Ganga, it is an initiative by the government to increase digital connectivity across the state, and one of the beneficiaries of the particular project is the company, as the company gets the order from the government to increase that connectivity across the state. While under the MOU, company aims to connect 2 million homes in next 2 to 3 years, which will be in focus. Secondly, the company also aims to give local entrepreneurship, where they connect 8 to 10,000 local entrepreneurs to provide the digital services across the people of Uttar Pradesh. Further, the company also aims to provide 1 lakh jobs by the end of this 2 to 3 year tenure, and they also aim to increase women entrepreneurship by this particular initiative. Well, lastly, if we look at the overall MOU, this is a pivot for the company from the business process management towards the broadband service as well, and the company also makes a note in the Q3 con call that the broadband is the next big thing they're focusing into. If we look at the key financials, the revenue has been under pressure over the last few quarters, and on a YOY basis, the revenue is down nearly 5%. If you look at the FY25 figures, in terms of margin, even those have been under pressure, given those are in the range of 5 to 8 initially, but now they're in the range of 4%. Well, lastly, the company states that the muted macro environment is something that's impacting the company's growth. Further, the company's investments in AI is leading to overall margin decrease. That's something will be in focus, given that they expect the overall margins to expand. Eventually, they go ahead. While lastly, the pipeline quality remains good for the management. Further, the AI initiatives also remains the focus for the management to watch out for. All in all, we see fundamentals are a little weaker for the company, but this is a good news. That's why the stock is buzzing in trade to about 14%.
you so much for giving us those details. Tapan, I'll quickly come to you on this one. Hinduja Global, what's the view like?
See, Mahima, this stock has not done as such. If you see the revenue jump is almost 1 or 2% over the years. Again, their margin is in pressure, a lot of pressure. Of course, this new venture is creating a buzz, but we have to see how it is going to help the company. From here, if they are having maybe 8 to 10% growth also, but what about the margin? Again, if you see their US market dependencies, then attrition, cost pressure is already there. My problem is that even currency, if you see the volatility risk will be there. They have a very good net cash. But as such, we have to see how this new venture is going to progress. So we have to give time for at least 1 or 2 quarters more and see the progress. Rather than jumping, I think this news, whatever, it's already been discounted. So better to wait. Currently, my take is avoid for this stock.
Avoid Hinduja Global is the view coming in from Tapan. The other counter that is in focus is Borosil Limited today. It's seeing strong gains, up almost 8.9%. Of course, off from its day's high point. But overall, yesterday, it touched a 52-week low. But today, it's bounced back and how? Touched an intraday high of almost 16%. But has paired gains from there, now trading around 9% higher. In terms of key developments, this could be one of the stocks which could get impacted because of LNG shortages and could impact the margins as well. But in terms of where Q3 goes, overall, revenue saw hardly any growth. EBITDA saw a degrowth of around 2%. Margins came down to 15.6% versus that of 16% earlier. And net profit, however, saw a downtick around 32%. But this was also having one-offs with regards to provisions for labor code. But margin compression was largely because of the product mix that the company is right now having. Glassware is the growth driver for the company, and overall there is a shift in terms of behavior from plastic to glass is what the management has indicated in terms of where their products go. Around 4,000 crore lunchbox market is shifting towards safe, micro-friendly and sustainable products. The other opalware segment is also steady, but is not very inspiring. It needs the entire category needs re-energizing, and non-glassware growth is suppressed because of BIS related Hydra disruption, which is the capex that they're doing basically. And now major capex, like I said, the Hydra vacuum insulated steel manufacturing in Rajasthan plant is approved. Renewable energy and power cost structure reduction is also on its way, and compliance-led supply chain actions have also been in place, and this includes appliances which are of BIS quality or control order. Lastly, in terms of where capacity utilization stands, for opalware it's 95%, for glassware it is 90%. So we'll have to wait and watch out for as to how now management plans capex going forward. Tapan, I'll quickly come to you on this one. Overall, if you take a look at the performance in the last couple of quarters, it's not been very impressive. But what's the view like where valuations are concerned and overall the stock performance as well?
See, as you told, this stock will be affected due to the energy costs, again, the LNG requirement and all that. Again, no, this is a business where a lot of competition is there, and so the margin pressure will always be there. Of course, they are increasing their premium kitchenware expansion and distribution. Also, they are going to aspire to cities. But I think raw material prices, volatility is going to impact. We have to see how they are going to use that cash, because they have a sufficient enough of cash in their books, and ROC is also slowly and gradually improving. But if you see, the stock has already gone down by almost 50%. So at a valuation level, I think anything 5% down will be a good level to buy. So my take will be wait for 5-10% dip, and you can start acquiring for the long term. Hopefully, if LNG and energy costs will stabilize, this company may do well.
Let's get in, Puneet, to understand what's been buzzing when it comes to WeWork. Despite the positive announcement, why the stock is down nearly 30% in the last 1 month, Puneet?
Well, thank you for that. Well, the company is incurring almost 35 crores of investment right now, and this will add almost 2,600 desks essentially at this point of time. The existing capacity as of Q3 stood at roughly 1.2 lakh desks, and the company says desks essentially which is monetizable to other corporates which can actually use them as well. So that's one of the key metrics apart from the million square feet that we all generally track for such companies. This will, as of Q3, at the 1.2 lakh desks, roughly 83% was the capacity utilization. So this is welcome move for the street, and hence the stock's buzzing starting in trade today. But as you rightly said, 31% down since the company listed in October 2025 and has been under pressure despite strong Q3 results. So the valuation now have turned mouth-watering in that sense. And JM Financial also maintains that view where they've initiated coverage just on 6th of March, and they feel that the flex working space is something which is very positive given that you have multiple companies now. But WeWork, according to them, is the key one. They have a target price of 830 rupees per share, with the GCC trend being a key beneficiary in all of these flex working spaces.
Tapan, quickly your view on WeWork at the current valuations. Is it a good buy?
Yeah, valuation looks decent, no, and again that expansion is there, and again as the Puneet already told, the stock has came down a lot. I think this may give you an opportunity to slowly and gradually. This sector is going to grow over the time, and hopefully they are working on the margins. Looks like management is quite positive. Yes, at this level, I think one can see slowly and gradually start getting this stock.
Well, thank you, Tapan. Thank you for joining us and giving us your perspectives on the stock that we discussed on this show today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी,
Jingle, 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 jingle.
बस आज का
Jingle, 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 jingle.
चल करें थोड़े
Single, 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 single.
क्योंकि तू है
Single, 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 single. Baby, I'm your Santa.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
watching Ask Profit, the afternoon edition here at NDTV Profit. I am Mahima Vacharan, and with me, as always, is Puneet Javeri. And Puneet, I think, I was just talking to Shad before, and he was also smiling while giving the F&O cues, and I think you should too, because the markets are doing fairly well. The Nifty 50 right now is up around 0.8%, almost at its day's high point as we speak. 200 points of an uptick is what we're seeing on the benchmarks, largely led by, if we can try to, see the Nifty 50 heat map, largely led by Shriram Finance, which has seen an uptick of around 7%, followed by Interglobe Aviation, a much needed relief in this counter, to say the least, up 4%, followed by SBI Life, Tata Motors, Eicher Motors. So auto names also doing fairly well, M&M also up 2% as well. But on the flip side, you have some counters which are seeing a downtick, especially the IT pack. Infosys, TCS, Tech Mahindra seeing downtick anywhere between that 0.6 to 1%. Eternal is also down by about 1.4%, and Reliance is now turned into green, down by about 0.8% or 0.9%. Let's quickly pull up the sectors and see as to how sectors are looking like right now. You have Nifty Auto still leading the pack, up 2.2%, followed by PSU Banks, which did close around 4% or lower yesterday. A reversal there is what we're seeing. The Nifty IT the only counter in red today, down by about almost 1% now, followed by oil and gas. Slight downtick is what we're seeing. And this is because of the volatility that we're seeing in crude. But otherwise, Nifty Bank also doing fairly well, up 1.5%. Nifty Farm also doing fairly well, up 1.3%, followed by metals as well as consumption and realty. But with regards to where the broader markets go, let's try to pull up the advanced decline ratio. It's the reverse chart today for the advanced decline ratio, right? We've seen in the past couple of days as to how, the declines were weighing on the advances, but that's not the case today, Puneet. And we've talked about this in the morning show as well. Slight increase in that number of declines, but not much.
Not much, most certainly. And you also see that the outperformance that we're seeing actually on the mid-cap and the small-cap index compared to the benchmark also. Exactly. So that's a very big positive. Yes. As you're seeing the broader breadth of the market, being positive largely. But let me welcome in Mr. G. Chokalingam, the founder and MD of Economics Research. At this point of time, he is joining us on the fundamentals. We'll also be very shortly joined by with our technical analysts as well. But Mr. Chokalingam, let me throw across the first question to you from Ramesh, and welcome to the show, sir. It's on Hexaware Technologies. Now, it's a stock that's been down and out in that sense. Do you feel that right now, trading close to that 450, 440 mark, it's a good time to buy because it's seen a very deep correction in terms of value versus its IPO price also of almost 700 rupees. What would you recommend?
I would give a hold recommendation. At best, it can give 10%, 15% return in 1 or 2 years. But right now, that AI issue is still giving me a lot of fear. So I would just give a hold recommendation on Hexaware because it also trades a fair valuation of around 18 PE on a trailing basis. That's, I think, fairly priced for short to medium term.
Okay. The next question that we have is from Suresh, who's writing us from Hyderabad, asking between two stocks actually, NTPC as well as Suzlon. He's got 1 lakh to invest in. From a long-term perspective, he wants to know as to which one should he buy right now. Mr. Chokalingam, I'll stick with you for this one. Your view?
Yeah, between these two, if I am asked, I would prefer NTPC. Very stable and steady. There is no risk at all. Whereas Suzlon has little risk of underperformance as compared to solar power capacity expansion in the country.
Got that view, Mr. Chokalingam. Let me also welcome in Akshay Bhagwat as well of JM Financial, who's joining us on the technical side. Akshay, let me welcome to the show. It's a good day to ask you questions. So Jindal Drilling is the first one that I want to post through. Our viewer is holding 100 shares at 600 rupees per share. Given that there is positive fillip, of course, in the oil and gas space, do you think on the charts as well, it suggests a buy at this point?
Good afternoon to all. Well, see, technically there has been a good bounce back, but if you look at the charts, there has been good selling pressure from higher levels of 660 to levels of 550, and the volumes have accompanied significantly with the sell-off. So I think from a short-term perspective, there is more liquidation which is happening at higher levels, and the view is to exit if your trade is limited for a month or so.
Okay, all right. So that's the view on Jindal Drilling. The next one is on Bharti Airtel. Srishti is asking this question. She wants to know if this is the right time to make an entry into Bharti Airtel. Can I invest around 1 lakh rupees is the question that she has. Mr. Chokalingam, would you recommend that?
Certainly, yes. A large cap index stock. Not only that, perennially growth story telecom. And third, the government also would benefit, out of rising tariff on mobile bills. Because government will benefit in terms of non-tax revenue, which is very much needed to control that fiscal deficit. So therefore, short-term, medium-term, long-term, all perspective, it's a good stock to buy, in my view.
Got that view, Mr. Chokalingam. But, let me go across and take the first caller for today. And Gupta ji हमारे साथ जुड़ रहे हैं आज पुणे से, जिनका एक सवाल है. Gupta ji, नमस्ते. कैसे मदद कर सकता हूँ आपकी?
सर मैंने 400 शेयर तरीके परचेज किए थे ऑफ टाटा मोटर बिफोर डिवीजन एट द रेट ऑफ 129 रुपीज.
Okay.
Now these shares have got split into CV and DV. 400 each.
Okay.
Now I got 400 each of CV and 400 of PV.
ओके तो आपके पास दोनों पीवी सीवी दोनों के शेयर है, 400 शेयर है और 129 रुपए पे है दोनों कंपनियां, करेक्ट?
Yes, please.
Okay.
So what should I do now? What is the scope?
ओके, गॉट इट. चोकलिंगम जी, मैं आपके पास आता हूँ. टाटा मोटर्स सीवी और पीवी दोनों हैं गुप्ता जी के पास 129 रुपए पे. बहुत अच्छा प्राइस है दोनों कंपनियों के लिए. क्या राय देंगे आप?
टाटा सीवी उसमें डोमेस्टिक प्ले ऑटोमोबाइल देखते आप, पूरा डोमेस्टिक मार्केट से बिजनेस आ रहा. इवन सब्सिडरी देखते हो, दैट्स टाटा कैपिटल, दैट इज आल्सो डोमेस्टिक प्ले. सो Tata CV is preferred.
Okay, all right. The next question that we have is from Shankar, who's writing us from Bengaluru. He's asking if he can start adding TVS supply chain solutions now at the current price. Akshay, I'll come to you on this one. From a slightly medium-term perspective, what are the charts indicating?
See, technically the stock is still negative. There was a recovery attempt made, but again, I'm seeing strong volumes building up on the sell side at higher levels. So if it was a technical call, I would say at the moment at least avoid buying TVS supply chain based on technical parameters.
Got the view, Akshay. But the next question is coming in on KNR Construction. It's a counter that's not done well for investors at all at this point of time. Let's look at the one-year chart for KNR. And, our viewer actually, Abin from Kerala, is asking this question. He wants to know if his 130 shares bought at 178 is still a good buy. What would you recommend, Mr. Chokalingam? Because the broader infra space actually just seems to be very out of flavor at this point of time. Is it a good time to continue holding his shares which he has in KNR? Should he average down? What would you recommend?
If you see last 3-4 quarters, consistently profits are down, and but that is in the price. The stock price also corrected a lot. So I would give hold recommendation considering the price correction and a single digit PE for the stock.
Okay, all right. The next question that we have is from Madesh, who is writing us from Tamil Nadu. He's asking if this is the right time to buy EIH. Akshay, your view on the charts?
For EIH Limited, I think that's what you're asking for.
Yes.
I think technically on the longer term charts, it is still positive. It's just been in a range since last, I think, for almost a year. But somewhere 280 to 300 is a massive support zone for the stock. And you can continue to hold. Risk management stop loss should be below 280. If you expect a recovery from here, your longer term targets can see the stock moving back to 450 plus.
Got that view, Mr. Chokalingam. But another, caller dialing in from Andhra Pradesh now, and Bharat has a stock query for us. Bharat, good afternoon. Welcome to the show. What's your query?
Good afternoon, sir. I am buying 750 shares of SPML Infra at the price of 205. So, what is the target of this share?
Sorry, you said HG Infra, right, Bharat?
No, SPML Infra.
SPML Infra. Okay, let's pull up SPML Infra at this point of time. But it's not very well tracked, Bharat. So I'll try and take Akshay's view on it. Akshay, SPML Infra, do you have a view on the stock? Should Bharat continue to hold?
Yeah, you can continue to hold from a positional perspective. There are two supports which you need to note down: 140 and 160. I think there is a good probability the stock should recover from the support zones. For worst case scenario, 130 should be a stop loss, but the targets in case it recovers, target 1 should be 210, and after that, in case it sustains above that, you can work with targets of 240. This will be with a time horizon of 6 months to 1 year.
Okay, so that's with regards to where SPML Infra goes. The next question that we have is from Mahesh, who's writing us from Andhra Pradesh, asking about Eureka Forbes. Now, he's been holding 40 shares at the levels of 646 at an average price. He's asking this in three-part question. He's saying if is the long-term view on this particular counter still intact? Should I average on dips or just continue to hold? If add more, at what price level, and what should his level be like? Mr. Oaklingham, I'll come to you on this one. Any view?
Looks good after the correction, and if you also look at last 3-year annual performance, is quite steadily improving the sales also. So one can hold. Any further decline, one can accumulate also.
Got that view, Mr. Chokalingam. The next question that's coming in, it's on Hindustan Copper. Now, our viewer Sunil wants to buy for a short term. Akshay, do the current prices give you confidence to give us that view? Should Sunil do that?
You see, the metals pack has been strong, volatile lately a bit, but still the technical charts have suggestions that there may be another round of upside in the making. So somewhere 520, 530 is a short-term support zone for the stock, expecting a recovery very soon, in which case you can look forward for targets of 600 to 620 in Hindustan Copper. You can have a working stop loss below 500 on this trade.
Okay, all right. We've got our next caller. Manish is calling us from Delhi. A very good afternoon to you. How can we help you?
Hello.
Yeah, hi. I can hear you. Go ahead.
Yes, I have Grow Billion Brains Garage Ventures, 2,000 shares of them at the average of 155.57.
Okay.
So, and my time frame, I can hold them for like 6 months, but seeing the negativity in the stocks, I'm not sure whether I should hold or exit.
Okay. All right. Akshay, the stock today, of course, is seeing gains of about 5%. What are the technical indicators that you're seeing on the charts for this one?
So this is some limited set of data for me, but with the best points of data I have, 140 is a good support for the stock. You can continue to hold with stop losses below 140, and the trading target works till around 190 to 200 with a time horizon of 3 to 6 months.
Got the view. Before we take more questions, and you can also call us viewers for the same, let's just quickly look at the markets because it's now coming at the highest point of today. We started the show at 24,210, 70 points just in the last 10 minutes. So we are going back to the highs of today. Let's look at the heat map also, and there you will see a few stocks, SBI Life, Eicher Motors, are giving resilience to the move that we are seeing on the Nifty. So yet again, coming to the last hour of the trading session, Mahima highlighted Shriram Finance at the start of the trading session as well, but new movers like SBI Life, Tata Motors, PV, Indigo, all of them now contributing meaningfully to this up move that we are seeing on the Nifty 50. So continue to monitor that, especially in the last hour, because we spoke about in the morning the GIFT Nifty highlighted 300 points. If that sustains, would be a big one for the markets today as well. So continue to monitor that. But let me go back to the queries, unless you want to add something, but largely a very important day today.
Yeah, I think just the part that India VIX is still something that you need to keep your eye on, because that indicates the kind of volatility in the markets. And that's, if you can quickly pull up the chart for India VIX, it's still, kind of trading around that 19% mark, if I'm not wrong. And that indicates volatility. So basically keep that in mind. But let's go on to our next caller. Bindu is calling us from Vijayawada. Bindu, a very good afternoon to you. What's your query about?
Good afternoon. I hold 100 shares of Adani Green at 850.
Okay.
My view is like short term, 1 to 3 months. What target I can expect and what is the stop loss?
Okay, Bindu, got your question. Akshay, your view on the charts for Adani Green for the next 3 months?
So look, this chart has been trading in a neutral setup, or rather in a range since the last 1 year. The lower end of the range has been 760 and the upper end of the range roughly has been around 1100. I think from a 3-month perspective, you can keep a stop loss below 750 and look to book it out or exit it in case it recovers around 1000.
Right, well, viewers, also standard disclaimer, the channel that you're watching is part of the Rani Group, and so of course is the question on Rani Green, which is also part of the same group as well. But next query that's coming in, it's on Fed FINA. And there you go, the standard disclaimer now finally coming in. But on Fed FINA, Rajesh from Noida is asking a question and asking if it's the right time to buy in for the long term. Mr. Chokalingam, it's a very puzzling stock, right? This one, the last few quarters have actually been decent results led by the gold loan portfolio, but the returns or the share price doesn't show that. Is there any view that you have on the counter or why that might be?
I'm sorry, I haven't tracked it. I was searching for Fed Bank.
Yeah, Fed FINA, because of course with the second level of shareholding that Federal Bank has in it as well, but it doesn't seem to be reflecting, right, Mr. Chokalingam, in that sense?
Yeah, but it trades only around 1.6, 1.7 times, which is quite reasonable. I am sure, the Federal Bank, which is nearly or more than 100-year-old bank, can definitely continue to provide support to this financial arm. And since it is trading at around 1.7 times price to book, I believe medium to long-term prospects for the financial service company is good. So one can hold. If there is any decline, one can consider buying also.
Okay. All right. The next question that we have, we have got a live caller. Alok Kumar is calling us from Delhi. A very good afternoon to you, Alok. What's your question about?
Good afternoon, ma'am. My question is, I have bought 250 shares of Religare at 242. If I hold them or sell them?
Okay. And Alok, what is the time horizon that you're looking at for this one?
Long term, ma'am.
Okay. Mr. Chokalingam, any view on Religare?
I find it difficult to come to any view now on this stock.
I can understand. Akshay, any view on the charts?
Strongly from the support of 200. So any buying position, you need to maintain a strict stop loss below 190 and continue to hold. Potential working targets from a positional 3 to 6 month holding can be around 275 to 300.
Got the view, Akshay, but and also on Religare, the structural demerging of its insurance business, amongst others, the market's not been too happy with just the amount of news flow that's been following the counter. But time now for the rapid fire round in this edition of Ask Profit. Akshay and Mr. Chokalingam, you know the drill. Keep your answers on buy, sell or hold, so we can take as many in the next couple of minutes. The first question's coming in on ADF Foods. Our viewer has bought it at 100 rupees per share and he's holding 500 shares. Akshay, should he continue to do that?
Exit.
Cohen's Life Sciences is the next one. Abhijit from Kolkata is holding at the levels of 315. Can I hold it from a short-term perspective? Your view, Akshay?
Exit.
The next question that's coming in is from Lavanya on Next Microsystem, bought at 1023. Mr. Chokalingam, should she continue to hold?
Yeah, hold it for long term.
Vari Energies bought at the levels of 3124. Should I hold or sell from a short-term perspective, Akshay?
Hold.
Eternal bought at 337 by Mr. Kapoor. Is it a good time to average down now, Mr. Chokalingam?
I would suggest hold, just hold.
Som Distilleries is the next one. What's the view like from a long-term perspective, Mr. Chokalingam?
Hold it.
Paradeep Phosphates bought at 183, 500 shares, Akshay. What should our viewer do with this one?
Exit.
Krishna Defense bought at the levels of 1148. What would be the 1 year target? Any view on this one, Mr. Chokalingam?
Sorry, I haven't analyzed it.
No
the next one's, M&M. Mr. Chokalingam, our viewer actually wants to know an entry price. I know you're positive. Is this a good price to buy?
Certainly, it's a very attractive price at current price.
Okay.
Attractive buy at current price.
Okay, HAL bought at the levels of 4170. Long-term investor Vijay from Dubai is asking if he can continue to hold. Mr. Chokalingam, your view?
I believe it is one of the excellent stocks for long term.
Motherson Wiring bought at 39.83, 6,000 shares. Mr. Chokalingam, should our viewer continue to hold?
Yeah, hold it.
Mazagon Dock, is this the right time to invest or should I wait? Mr. Chokalingam, your view from a long-term perspective?
From long-term perspective, one can accumulate on declines.
BLS bought at 303. I don't know, Mr. Chokalingam, if you have a view for Mallikarjun.
Which stock?
BLS International.
I would avoid it.
Symphony is said to have good fundamentals, is what our viewer is saying. Can I buy now from a long-term perspective, Mr. Chokalingam?
Yeah, one can buy for long term.
Hyundai Motor India bought by Suresh Nair at the IPO price roughly around 90-100, Mr. Chokalingam. Should he buy more now?
I would not suggest. I would prefer M&M.
Okay, DLF is the next one. Is this the right time to hold or sell? Akshay, your view on the charts?
Hold for short term.
Akshay, I don't know if you track Vidya Wires by any chance, bought at 54 by Archana. She wants a view on the stock.
limited data but hold with stop loss of 49.
Triveni Engineering is the next one. Chitra from Bengaluru has bought at an average price of 400. Should I wait or book profits? Akshay, your view?
Wait.
Heidelberg Cement, Mr. Chokalingam, is as a good dividend yield is the question that's coming from Sanjay. Should he continue to hold?
Yeah, hold.
Well,
okay, BEL bought at the levels of 390. Hold or sell? Akshay?
Hold.
Okay, all right. So that brings us to the end of this rapid fire round. Mr. Chokalingam as well as Akshay, thank you so much for taking out the time and helping us answer all those queries. But onto a very important story. The government has tabled the second batch of supplementary demands for grants, seeking Parliament's approval for a major transfer to the Economic Stabilization Fund along with additional allocations for food subsidy, fertilizers and defense. Shrimi joins us with key numbers and what they signal. Shrimi, over to you. Okay, I think we have some, we do have some difficulty patching Shrimi in, but before we again toss back to her, let's take a quick look as to how the markets are doing right now. The Nifty 50 now above the 24,200 levels. Of course, we were seeing these levels at the start of the show as well, but it has well held the kind of gains that it's seen throughout the day. Slightly off from its day's high point as we speak. But with that, completely out of time on this afternoon edition of Ask Profit. But do stay tuned. India Market Close up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी
Jingle, 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 jingle.
बस आज का
Jingle, 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 jingle.
चल करें थोड़े
Single, 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 single.
क्योंकि तू है
Single, 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 single. Baby, I'm your Santa.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
Where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो तभी
आजकल चल क्या रहा है सिचुएशनशिप आपको पता क्या होता है
कभी मैं कह नहीं पाया
इट्स ओके यार
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं
2 powerful days, 14th, 15th March, Sundar Nursery, New Delhi.
First India tour in your city. Rock on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma, and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your...
Welcome. You're watching India Market Close, and this is not half bad. Off the day's highs, but well above 24,200. This is what's happening in the markets right now. Nifty opened higher, but has been range bound for the last 3 hours or so. You have to look at this 100-point tight range that we've been seeing in the street right now and on the Nifty. NBFCs have rebounded as analysts believe transition news not very negative. Technical bounce was largely expected but needs to be seen if this sustains. Resistance levels this afternoon at 24,315 to 24,400. Key support at 24,100 to 23,800. Among major sectoral indices, Nifty IT is the top loser while auto is the top gainer. Watch out for the last hour volatility due to Nifty weekly data. I think the AMFI data, and I'd like your view on this, was also supportive, even though the SIP number shows lower in Feb. Is that because, Alex, there are fewer days in February?
Okay, I don't think that is the case. In fact, I think it's more so because of the environment that you've seen in 2026. Yeah. January and February, you've actually seen bigger drawdowns in those 2 months compared with 2025 as a whole. And so amidst that uncertainty, you've had people take money off the table. Yeah. I feel that is the case. Of course, from the perspective of the industry, they will give you a reason that may not suggest that people are panicking into taking money off the table, but that tends to happen.
But if you see how much it's dropped,
it's not a lot. That's what I'm saying. So
and you do have 3 days lesser in Feb.
You do. But having said that, people still tend to have specific dates. They will either put it on the 5th of the month or the 10th of the month or the 15th of the month.
So it shouldn't make too much difference.
It's not necessarily something that makes too much of a difference. Not that it matters, and studies have shown that the date does not matter, if anybody was wondering about that. But having said that, 29,800 plus crore rupees, it's not a small number compared with the peak of over 31,000.
No, that's true. It's not a huge drawdown. Just one more thing I wanted to highlight before we get to the rest of the markets is the India VIX. And I think India VIX is important, plunged below 19.5. In fact, let's pull up where the India VIX is right now, because that's the important figure, right? 17% down. So this relief rally in that sense has sustained, Alex, and I think that's something to take heart from.
Oh, certainly. It's not a complete reversal of what you saw yesterday. And pull up the advanced decline ratio. Yeah. Just to, no, I'm talking about the chart, right? Because yesterday at this time when we were talking about it, it was a complete opposite picture. But the green line was far below the red line, what it is right now, and the red line was far above the green line. So that gap is good. Let's talk about the equity markets right now and pull up the Nifty 50 heat map just to confirm what we're speaking about, just to drive home that point. There is a significant amount of green on the screen, perhaps less than what you saw in the morning, and Reliance Industries, which was supportive on the upside yesterday, relatively speaking, and supporting the market, is proving to be one of the declines. Shriram Finance yesterday was one of the worst performers. It recovered in the last hour of trade, and that recovery continues on the upside.
What a beautiful 7% up on Shriram Finance. If you can just pull up the intraday on Shriram Finance and take a look at how that's happening, that's really and not such a huge weightage that will pull the entire Nifty up. But Shriram Finance really zooming in the last half an hour or so of trade and doing really well, and all NBFCs following suit.
And the other factor, and pull up the private banks if you can. In fact, why don't you pull up the constituents of the Nifty Bank, because this is a relief rally. And how this is an index that was beaten down yesterday, and you have ICICI Bank as a top gainer today. It lost a considerable amount of ground yesterday, but you have the likes of BOB, PNB, all stocks that took a battering in trade yesterday, making a bit of a comeback.
Happiest Minds is just one other stock that I want to talk about, and we'll be doing a deep dive on Happiest Minds as well. Dixon, Happiest Minds, some of them really zooming, and just look at the kind of bump up, nearly 19% up right now, near the high point of the day, because their outlook is so positive. So now the street beginning to respond to some positive stories coming in, and that's a good sign. But we'll have to wait and see if you have volatility now in the last 1 hour of trade or so. Amit Goyal, SEBI RA partner and co-founder at Blue Oak Wealth, joining in this afternoon. Amit, very good afternoon to you. What is the outlook looking like on the Nifty and the Bank Nifty? Because all said and done, sustenance above 24,200 has been a positive factor.
Hi, good afternoon, Ramana, and thanks for having me. The volatility notwithstanding with respect to the conflicts in the international geopolitical scenario, I do feel that last time also when we had met just before Holi, my view was that any sharp fall in the markets on account of geopolitical tensions is actually an opportunity for a long-term investor to keep on adding to their longs, and I continue to maintain that. However, if you look at the intraday volatility, it has been quite sharp. We've had days of gap downs and a green close candle. We have had days of gap ups with fading of those moves. So this is a consolidation market. There is no clarity and there is uncertainty. A broad range for the market, if you were to ask me, I would rather not trade the weekly expiries from an options trader's perspective, but the monthly expiry. And the broad range for me would be 25,000 and 23,000. With the elevated IV levels, this is a great opportunity to construct some non-directional trades and earn some theta here.
Okay, can you describe that, please? Because I do not understand what you mean by theta. Apart from it being a Greek letter, what does that mean?
All right. So what we are trying to do here is, because IVs are elevated and there is a lot of time value or gas or bubble in the option premium, which really does not, which essentially tends to fade out as IV cools. So what we look to do here as options trader is set up a non-directional set wherein we do a bear call spread at 25,000 levels, in which we sell the 25,000 call and do a bull put spread at 23,000 levels by selling the 23,000 put and buying hedges to make it into a limited risk strategy, in which whenever the IV cools, so whenever the volatility cools on account of a non-descript or a consolidation round of few sessions, this will give the trader IV compression and essentially leading to profits into the trade. The invalidation levels is of course 25,000 breach or 23,000 breakdown.
Okay, stay on with us, Amit. Just getting a sense of what's happening around the world and the recovery that we're seeing. Dr. Jim Walker, Chief Economist at Aletheia Capital, joining us now on the show exclusively. Thank you so much, Dr. Walker, for your time to us here at NDTV Profit. Just first trying to understand that the cool-off that we've seen in crude, do you think this is more reflective of the entire supply-demand picture, notwithstanding what's happening in the Strait of Hormuz right now, or could we now see a bounce back to the 100-plus levels once again?
Well, to be quite honest, it's anybody's guess, because we don't know what President Trump is going to say next, whether he's going to want to escalate the war or whether he's going to want to cool off or whether he's want to negotiate and finish the war. Because really at the moment, everything that's happening with oil is all down to noise around about the politicians. It's not really about the flow although that, of course, is decidedly disrupted at the moment. The question would be whether or not it's going to be continued to be disrupted for the next week, for the next 2 weeks, for the next month, for the next year. And if that's the case, then oil's not going to 100, it's going to $200 or $300 a barrel. But let's hope that that very negative scenario doesn't come to pass.
The other perspective that is coming to fore is the possible demand destruction we will see going beyond the borders of the nations that are right now at the front and center of the conflict. So not just oil-consuming nations, oil-producing nations, but even beyond that. What is that kind of impact that we could see?
Well, that's exactly right. And it's really all about disruption. Because we saw the start of this in 2025 with the tariffs, the various rounds of tariffs being applied to different countries and then rolled back and then reapplied. So what happened during the course of that process is that uncertainty increased, and uncertainty increased especially in the business world. And when uncertainty increases in the business world, then plans are cancelled, especially plans for capital expenditure. And as that begins to take place, then economic activity cools down, demand slows, supply might keep going, but the global economy begins to move into a much lower rate of growth. And we've actually already seen that through 2025, with exceptions around the world which have been very much focused on AI and the technology space. So countries like Taiwan have seen significant increases in economic activity, but nearly everybody else has seen a cooling down. And that includes America, by the way. The whole policy of Make America Great Again has actually produced 2.2% GDP growth in 2025, which is lower than most of the last 10 to 15 years. So disruption is the real key here, and it's the same again for the war and how much it disrupts economic activity going forward, but how much more it disrupts people's thinking and increases the uncertainty around applying capital expenditure. If that happens, then the global economy slows down. That's all there is to it.
That's all there is to it. But I want to focus on the US, Dr. Walker, because what you're saying makes a lot of sense. And I'm just wondering, for everybody that has been speaking about the possibility of a recession over the course of the last 3 years or so, it almost seems as if you've been crying wolf. But does that come to pass now because of everything that has happened over the past couple of months in particular?
Yeah, I mean, it sounds as if people have been crying wolf unless you look at the job market in the US, which has continued to slow down really rather severely over the course of the last couple of years. And indeed, if it weren't for all of the expenditure on hyperscalers, data centers, etc., business investment would have been down 8 or 9% year on year in the United States. So you are quite right that the recession hasn't happened yet, although all of the elements for recession outside the AI space and the high technology space are there. And that's recession, by the way, at a time when inflation remains relatively high. But yes, the outlook for the global economy at the moment, and in particular the United States economy, given that all that's happening just now, is, I think, undoubtedly for a slowdown and certainly a recession over the course of the next 6 to 9 months.
6 to 9 months, you're anticipating a recession. What then happens to risk assets, Dr. Walker, both in the US and outside, and these billions of dollars that are being spent currently setting up artificial intelligence infrastructure? What happens to that?
Well, that's going to slow down anyway, because the problem with all the billions being spent on the AI infrastructure and in particular data centers. Now remember, a lot of those data centers are located in the Middle East. And that requires that they keep supplying information to the global community, as it were, and that might not be happening for very much longer, given what's happening there. But the real problem is the United States and the ability to digest all of the spending plans that the data centers and the hyperscalers have. This is where it was always going to hit a brick wall, because the problem for the United States is that it has a lack of electricity. And even if there were the number of people that are required to build out the grid, and that's certainly not the case either, you can't connect can't connect the capacity to the grid, because there really isn't the amount of transmission lines in place, distribution centres in place to take the electricity from the installed capacity to these data centres. In Texas at the moment, there's a 7-year waiting list for some of the data centres to be connected to the grid. And that was always going to be the case, that there was going to be a massive disruption in terms of the plans to get data centres online. It was really just a question of when people were going to realise it. And I think it's beginning to be realised just now, although there's still plenty of fantasyland expenditure being announced by companies as we watch results and some of the big tech companies announcing their expenditure plans. It just can't be absorbed by the US economy.
From the Indian perspective, Dr. Walker, because, here our viewers also want to understand the extent of vulnerability. Geopolitically, it seems that India is in a positive zone, because we're speaking to Russia, we're speaking to America, we're speaking to Iran, we're at least speaking to everyone. And we'll get those supplies of oil. But we're also very, very dependent on imports coming in. Do you see that impacting the Indian economy?
Well, it's certainly a danger, and it's a real pity, because at the moment, India is in a very sweet spot in terms of economic policy, both monetary policy and fiscal policy, and what's happening with deregulation to produce a domestically led economic upturn, a business cycle upturn. And we're beginning to see the expenditure coming through from private businesses into the capital side at the moment, and that's been happening for the last few months in India. So this would be a real pity if the global situation derails that. But of course there is a vulnerability there, and the vulnerability is oil and all of the products that are produced by oil. Just having the certainty of supply is incredibly important to India. But when that supply comes into India, of course, it's a case of then producing not just things that make cars work, but petrol and diesel, but the pharmaceuticals, the chemical complex, the whole array of goods and services that are bound to the oil industry, and that requires a flow of oil. So potentially it is disruptive, and of course it's costly, and that would be a real pity given the position that India is in just now, which is actually looking rather good.
What should the Indian government do right now? Already there is some prioritization, especially of gas. LPG, LNG seems to be the bigger problem in an immediate way rather than petrol and diesel. What would you suggest, or what would be your advice, your recommendation on how India should handle this crisis, which is right now a global one?
Yeah, it's going to be a question of who can secure the supply. I think India will certainly be pulling as many levers as it possibly can. I think there's already been movement on the supply of Russian oil to India. That's already an established route, as it were. Russia and India have cooperated